Okay, before we start with how are we going to proceed with our revision? One is which one? Today, what is the thing? Final accounts of companies and which one? Internal reconstruction. That is the first part we are going to do. Tomorrow, what is the revision? Buyback. Sunday, what is the revision? Cash flow statements that we are going to continue on Monday like that. So it is not that every day whatever we target should get completed. Depending upon your speed, depending upon the classroom speed, the revision will go. Suppose if there is a backlog, there is a sufficient time available, we can complete kind of a thing. Okay, number one. Number two, the revisions are add on to your regular classes. Like in regular classes, you have learned so many things. Okay, the revisions are more like we are going to solve additional questions, practical questions like that. Because accountancy paper is more like a problem oriented paper. If you look at 70% is problem oriented, 30% is theoretical. Okay. Accounting standard is where you write the theory and explanation. Remaining chapters are going to be like problem oriented. Number one. Number two, if you look at your model test paper and practical the revision test papers, RTP, they have given questions only based on accounting standard. They have given question only based on which one? Accounting standard. Mainly they left out the chapters like amalgamation. Last two MTPs I had seen. Amalgamation they left out. Then final accounts of companies, there is no single question paper based on that. Then holding and subsidiary company accounts, there is no single question paper based on that. Cash flow statement, they have given some questions but not in detail. Then your RTP is not containing branch accounts. RTP is not containing which one? Branch accounts, and one or two questions on buyback of shares are there. But these 6 chapters, if you are thorough, you will be able to attempt the question for about 50 to 60 marks. I'm telling you without MCQ. MCQ is separate. Apart from MCQ, these 6 chapters are tested for about 50 to 60 marks in the exam. What is your total mark, Adil, that you have to write the exam? 100 marks. Yeah. Adil, what is the multiple choice question component? 30 marks. Then, including choice, how many descriptive questions you have to write? 70 marks you have to write. 70 marks you have to write. But including choice, you'll have around 2 questions, kind of a choice, like 2 questions will be there. Okay. In the 70 marks, if you are thorough in these chapters, you'll be able to write for about 50 to 60 marks. Then accounting standards for another 40 marks like that. So including choice, if this is for 100 marks, okay. From this, around 50 to 60 marks questions are tested. Remaining 40 marks comes from which one? Your accounting standards. So we'll try to revise all the chapters to the maximum possible extent, kind of a thing. Okay. Accounts is no more accounts where you just prepare a P&L account and balance sheet. You write notes to accounts. You are expected to write which one? Notes to accounts. For example, if a balance sheet based question is asked, it's not just preparing a balance sheet. When they give you additional data with respect to share capital, you have to give it in the form of which one? Notes to accounts. For example, share capital they have given, authorized capital, issued capital, bonus issue, right issue, shares issued for consideration other than cash. Like that, they give you so many data. Simple. All those things will be included in working note 1 in the form of which one? Notes to accounts. Resource and surplus, or any item for that matter. For example, they have given debentures. They have given debentures are having floating charge on all assets. Loan is a hypothecation of plant and machinery. Okay. The bonds are issued which are unsecured. Those data will be given in the form of which one? Notes to accounts. Okay. For example, sometimes they will give you details about bank OD. Bank OD is taken against hypothecation of stock. So you have to give a working note. Bank OD this much. It is taken against hypothecation of stock. So you're expected to write which one? Notes to accounts. For example, they give you some bank details, 2 or 3 banks wherein which we are keeping current account balances. You have to give the detailed note for that. For example, they have given debtors and bills receivable. In that, they have given you some notes. Okay, bills receivable maturing within 30 days, this much. You have to give the notes to accounts. Debtors outstanding for more than 6 months. You have to give which one? Notes to accounts. Wherever extra financial data available in the question paper, you have to give in the form of which one? Notes to accounts. Apart from this, they may give you some contingent liabilities. For example, claims pending against the company, or charges pending against the company yet to be decided by the court, or some patent right infringement is there, cases are pending against the company. So those things are like what? Contingent liabilities for which you have to give which one? Notes to accounts. So you're expected to present the balance sheet as well as do which one? Notes to accounts. Sir, in the exam, should I write all the headings? These 4 headings are mandatory. What are the 4 headings? Shareholders funds, application money pending allotment, non-current, and which one? Current liabilities. The subheadings should be written only when such items are present. For example, in the exam question, money received against share warrant is not given. Don't write it. They have not given about deferred tax liability or long-term provision. They've given only long-term borrowing, right? Only that much. Okay. So subheadings, you write only when such financial items are given in your question paper. Same way, non-current assets and current assets also. So hope you know the format of balance sheet, right? Asset side, we classify into which one? Non-current asset, that is coming under that PPE, that may be tangible or intangible. Fixed assets under construction, intangible assets under development, you have to give. All these things comes under which one? PPE. If they tell you investments, is it short term or long term? Long term investments. Investments are like financial instruments. You hold it in debentures, bonds, and the money. Long term loans and advances given by the company. Deferred tax assets, whatever it is. Then in this particular order, you write your current assets. Okay. Trade investments, trade receivables, inventory, cash and cash equivalents, short-term loans and advances, and which one? Other current assets. These notes to accounts, wherever it is required, wherever it is given in the exam question, you would write kind of a thing. Now, see, this was your model test paper, May 2025 from your ICAI. Okay, go through this question. We are given which one? Purchases. Once you look at the question like this, immediately what you have to do? Will it come in P&L account or balance sheet? Asset or liability, you have to make it. Okay. Maybe you can use any symbol, tick mark for all the P&L account, dot mark for your assets and liability like that. Or you just put P, A, L like that, you can mark it so that you will not make a mistake. Shall we? Purchases will come in which account? P&L accounts. Wages and salaries, employee benefit expenses. Sales, P&L account. Commission, P&L account. Commission, P&L account. It is given in the credit side. It is given in the credit side, which means commission is income. Commission is income. Then rent, rates and taxes will come in what? Other expenses. Selling and distribution expenses will come in other expenses. Directors' fees will come in other expenses. Directors' remuneration, full-time directors' remuneration only will come in what? Employee benefit expenses. Like a salary, if it is paid to the director, it will come in what? Employee benefit expenses. Generally, directors' fees will come in what? Other expenses. Bad debts. Then interest on term loan, finance charges, land, PPE, plant, property, equipment, factory, building, plant and machinery, furniture, everything will come under what? PPE. Trade receivables will come as current asset. Advance income tax paid, other current assets, loans and advances. Current asset, loans and advances, it will come as what? Advance tax paid. Loans and advances, advance tax paid. Opening stock, we will compare with closing stock to see the change in equity share capital, if any, or change in stock. Bank balance and cash balance will come as cash and cash equivalents. Then we are given share capital and general reserve, of course, liability. This will come in reserves and surplus. Securities premium also reserves and surplus. Term loan from public sector bank, it will come in what? Long-term borrowings. Trade payable will come under current liabilities. Provision for depreciation, this will be adjusted against asset in the balance sheet. It is not current year depreciation, accumulated depreciation you will adjust in the balance sheet. Provision for bad debts, this is nothing but opening balance. Then bills payable will come as which one? Current liability. Look at the adjustment given. Authorized share capital, issued share capital and all will come as which one? Notes to accounts as part of your share capital notes. Rent outstanding, wages outstanding, we will add it to the respective expenses and show it in what? Current liability, other current liability. Provide depreciation 10%, furniture, machine, on which value? Written down value means cost minus accumulated depreciation will give us written down value. What is the cost of factory building? 18,40,000. Any okay, so on factory building, okay, this cost of the asset minus accumulated depreciation will give us which one? WDV. On that we have to provide depreciation. On that we have to provide depreciation. Closing stock, 5,68,750. What was the opening stock given in the question? 4,62,500. Change in inventory we will report in P&L account. If the inventory value decreases, we consumed. It will be taken like an expense. If inventory value was 10 lakhs, reduced to 4 lakhs, now we consumed. We'll charge it as an expense. If the inventory value increases, that part of inventory is not consumed, so we'll minus it or reduce it from purchases on the month. Here inventory value increased. They ask you to make a provision for bad debts 5%, it will come in other expenses. Make a provision for income tax, transfer to general reserve. They give you this one. Term loan from public sector bank secured against hypothecation of plant and machinery. The loan falling in due within the year is how much? 8,50,000. All these things will be included in which one? Notes to accounts. Trade receivable outstanding for more than 6 months will come as notes to accounts. Declaring a dividend, proposed dividend, will it be a adjusting item or non-adjusting item? As per company law, as per accounting standard, it is what? Non-adjusting item. It will be included in the form of what? Notes to accounts. Notes to accounts. 8,50,000 is falling due within what? 1 year. This portion will be included in current liability. Then remaining will be included in long-term borrowings. Out of 51 lakhs, 8,50,000 falls due within what? 1 year. That will be included in current liability. Remaining can be included in which one? Long-term borrowings. Shall we? So in the examination, how to solve? Leave 2 pages gap. First page for which account? P&L account. Second page is for balance sheet. All your working notes or notes to account should be there in the third page. It is not P&L account, notes to accounts, balance sheet, notes to accounts. P&L account and balance sheet are the main answers. Then all the working notes should be annexed to it. And it must be written neatly. It is not like just writing a total and bringing the item here. Rent, salary, expense, just put the total, scribble it, bring it. No, you must write it in a proper way. Because all your working notes are like notes to accounts. That is part of your regular answer. That is part of your which one? Regular answer. So just leave 2 pages gap. Go to the third page. Start with which one? Working notes. Start with working notes. The sales will be called as what? Income side. Sales will be called as which one? Revenue from operations. Let us begin. I'll also do, let us do it together. Start. Working note 1. After leaving 2 pages gap, working note 1. Or notes to accounts 1. What is it? Income from operations. What is given? Sales. What is the sales? What is the sales given? 62,93,500. Then working note 2. Commission. We are not given, is it commission on trading business or something like that? We can include in operating income or which one? Other income. Anything is okay. But you have to write your assumption. It can be included in operating income itself if you want. So commission can be included in operating income itself. What is the commission amount? 36,250. Please do it along with me. That is your total of income from operations. Then there is no other income given. The question, do you find any other incomes? What do you mean by other incomes? Rent received, dividend received, profit on sale of assets. Do you find any item in this question? No. Credit side, otherwise there is no other income. Then purchases requires no working note. Directly we can take it in P&L account. Working note 2. Change in inventory. What is the opening stock given in the trial balance? Opening stock given in the trial balance 462,500. Then closing stock given in the adjustment. What is the closing stock given in the trial balance? 568,750. So it is decrease in stock or increase in stock. Increase in stock, it will be taken as a minus amount. Because this much of stock we have not consumed, the P&L account, the expenses side, we will take it as what? A minus amount. Change in inventory we worked out. So what is the order in P&L account? Purchase of stock is given directly. Change in inventory we worked out. What is working note 3? Employee benefit expenses. Employee benefit expenses. What and all will come? Wages and salaries. Start. Please do it along with me. Don't wait. What is the wages and salaries? 6,36,000. Add outstanding. 78,250. Total amount will. Employee benefit expenses working note over. Any other employee benefit expenses given? Like bonus, commission to employees, perquisites given to employees, retirement benefits given to employees. Any other thing that is there? No. So no other thing. Next. What is the next one? Working note 4. Depreciation and which one? Depreciation and amortization. In that, we have to provide on WDV. You have to provide which one? WDV. Let us take this as a working note for fixed assets also. Okay. So we'll take cost of the asset, accumulated depreciation, then we will get WDV. On that apply depreciation. Then you will get closing balance. This we will take it for balance sheet. It's like a twin working note. What are the assets? What are the assets for which we have to provide? Land, what is the cost? 12 lakhs. No depreciation for land. 12 lakhs. What is the next one? Building. What is the cost of the asset given? 18 lakh 40,000. Accumulated depreciation given on the credit side. 92,000 given. So if you do cost minus accumulated depreciation at the beginning of the year, this will give us opening WDV. This will give us which one? Opening balance of WDV. What is the rate of depreciation for this? Factory building. What is the depreciation for factory building? 5%. So depreciation will be on this 5%. So closing WDV will be 17 lakh 48 minus depreciation will give us closing WDV. What is the next asset? Furniture. What is the cost of the furniture given? 4,12,500 given. Accumulated depreciation given is 41 to 50. So WDV on that, what is the rate of depreciation? 10%. You will get closing WDV. What is the next asset? Plant and machinery. Plant and machinery. What is the original cost of the asset? Accumulated depreciation already given. 10. What is the rate of depreciation for this asset? 10%. You will get the closing balance. This will come in profit and loss account. This will come in balance sheet. This is a plant, property and equipment for balance sheet. Accumulated depreciation and amortization. And which one? Plant, property, equipment for balance sheet. It's a twin working note we can do. So the prepared working note for which one? Plant, property and which one? Equipment. Any doubt in it? It is given depreciation is on WDV. That's why cost minus accumulated depreciation, we get opening balance WDV. This is opening balance written down value. On the depreciation we provide, we get closing WDV for balance sheet. Of course, land is not depreciable. What is the next working note? What is the next working note? Finance cost. Finance cost, it is given interest on loan. Interest on loan is a direct item. Interest on loan how much? 4,02,500. Check any interest rate given. Any interest rate given in the question? No. So nothing is outstanding. Other expenses or sundry expenses, other expenses. What will come in other expenses? You can check in the order of trial balance itself. Rent. 1,10,000 plus outstanding rent. What is outstanding rent given? What is outstanding rent given? 1,20,000 for rent. What is the next one? Rates and taxes. No adjustment is given. No adjustment is given. So you can take it as it is. 25,000. Then selling and distribution expenses. 2 lakh 2,18,000. 2,18,000 selling and distribution expenses. Directors fees. What is the directors fees? 16,000. Next, bad debts. What is the bad debts value? 19,250 bad debts value. Provision for bad debts. Same like any other final accounts. What is required at the rate of 5% on debtors balance? 5% on the debtors balance. This 32,37,500 into 5%. Tell me the amount. 32,37,500 into 5%. This much is required. Less, what is the old provision in trial balance? 12,500. Balance will come as expense. Okay, provision required is 161875. Already there is an old provision. Balance will come in the balance sheet. Balance will come in the balance sheet. Sorry, expenses. Current year additional provision will come in the expenses. Then this advance tax will come as loans and advances. It will come as which one? Loans and advances. Any other expenses to be provided. Check for information also. This income tax will come, course, in P&L account. That's it. This will give us total of other expenses. Total of other expenses 5,47,625. Any doubt in this live online, friends? Now you do P&L account. Go to the first page, complete the P&L account. Live online, friends, have you taken up? Start with P&L account. What is the name of the company? Profit and loss account of which company? March 31st, 2024. Income from operation. What is income from operation working? This one. No other income. Total. Purchase of raw material directly given in the question. 41,47,500. Change in inventory. Inventory has increased, which means it's like a surplus. Surplus. So minus. If it is a decrease in inventory, we would have taken like an expense. Increase in inventory is like surplus in stock. It will be a minus amount from your expenses. Employee benefit expenses, we have written the working note. Depreciation and amortization 3,90,150. Finance charges direct item only. Then other expenses we have written. This will give us total of expenses. So total of income minus expenses will give us profit before tax. Tax expenses, how much percentage tax they ask you to provide? Tax, how much they ask you to provide? 25% for corporate income tax. This is for balance sheet. Working note 6, share capital. The exam you can write all those things, but as of now, the authorized capital, issued capital and all you can write in the exam. Okay, what matters is paid up capital. What is the paid up capital given in the trial balance? Share capital. What is the paid up capital given in the trial balance? Equity share capital, 5 lakhs. Now, what you have to do is complete P&L account. Second page is for balance sheet. Third page you have done or started with working note. Continue with working note number. Already 5 working notes are over. Start with which one? Sixth one. Working note number 6, share capital. Reserves and surplus. Profit and loss account. What is the opening balance given in the trial balance? Add current year net profit. This. From this, they ask you to transfer to reserve. Transfer to general reserve. How much is transfer to general reserve is given? Look at the adjustment. Transfer 50,000 to general reserve. This is P&L account order balance. Clear? So this is about reserves and surplus. General reserve, what is the opening balance given in the trial balance? Opening balance. Five lakhs given in the trial balance. Add current year transfer. 50,000. So 5,50,000. What else will come? Securities premium. How much is given? 12 lakh. 12 lakh 25,000. 1 lakh 25. Yeah. Then any other reserves and surplus. It may be capital redemption reserve, capital reserve, revaluation reserve, any other reserve given in the question? No. Here itself we can give the notes to accounts. Proposed dividend. At the rate of how much percentage? What is the proposed dividend? 10% on paid up capital. 7,50,000 into 10%. It's just a notes to accounts. It will not affect your balance sheet or P&L account. So balance sheet, what is the next working note required? Long-term borrowings. What is the total long-term loan? 51 lakhs. Long-term loan is 51 lakhs. Loans 51 lakhs. That includes current maturity. What is payable within 1 year? So 8 lakh 50. Balance will come as long-term borrowing. That 8 lakh 50 will be shown under short-term borrowings, current liability loan. Loan due to be repaid within the 12 months time. No need to prepare working note for trade payables. Why? Already directly given, no adjustment for trade payable also. Then working note 10. Which working note next required? Think in the order of liabilities. For what else the working note is required? Share capital we have done, reserves and surplus over. Application money pending allotment will not be there in any balance sheet. Okay, next. In the non-current liability, long-term borrowing, we have done the working note. No other thing under non-current liability. Current liability, we have done short-term borrowing, that current maturities, we have worked out. Trade payable directly given to us, we can take it. Short-term provisions for tax. Short-term provisions for tax. Provision for doubtful debts and we'll adjust from debtors. We'll adjust from debtors. Then what else will come in liability side? What working note will come in liability side? Other current liabilities. Other current liabilities. That outstanding rent 10,000. Outstanding wages how much? 78 to 50. Then outstanding rent and outstanding wages. Then what else will come? That's it. So liability side workings are over. I hope plant property equipment be integrated with which one? Depreciation itself. Directly we can take that. Any other fixed asset requiring a working note? So for current asset, you would write one more working note that you can do in the exam. Share capital, how much? 7 lakh 50. Equity share capital, the proposed dividend will be on 5 lakhs. 5 lakhs share capital. Reserves and surplus. What is the reserves and surplus? 12 lakh 38,231. Long-term borrowing, that loans, 42 lakh 50,000 will come. That current maturities. Provision for trade payable, how much is given? Trade payable, how much is given? 28. Plant property and investment we worked out. What is a plant property equipment? 55 lakh 85,530 we worked out. 350 we worked out. The problem, any investment is given? No. Trade receivables, debtors plus bills receivable minus provision. The exam you should not write like this. You should prepare a working note. Really. Okay, we'll prepare the working note. Working note 12. What is the debtors given? Or trade receivables given in the question? What is the trade receivables given in the question? 32 lakh 37,500. Less provision. What is the provision required? 5%. Balance will come in the outer column. Then bills receivable also will be part of your trade receivables only. What is the bills receivable given separate? No. No, any bills receivable given? No, but bills payable தான் கொடுத்திருக்கோம். Then in the liability side, trade payable, creditors plus bills payable you need to add. Okay, added both. Okay, good. Then debtors, there is no bills receivable minus provision. We have done the working note. Directly we can take. The stock is nothing but closing stock. What is the closing stock given? Advance tax. What is advance tax? 80,000? 18,750. Good evening. Cash and cash equivalents. Advance tax, loans and current assets, short-term loans and advances. Current assets line. Cash plus bank balance. Cash plus bank balance, how much? Cash balance plus bank balance, these two. 487,500 plus 65,937. 553. Tallies. No other current asset in this list. Here, one more notes to accounts you have to give. Trade receivable includes due for more than 6 months. How much? That working note you have to provide. 42,800. So wherever you find 2 or more items, line items, you prepare a working note for the same. And always remember the rule of 2 minutes per mark. Okay, if it is a 14 marks question, if it is a 14 marks question, maximum we can spend what? 28 minutes to 30 minutes. So that time also we have to count in the exam. Maybe in the classroom I explain, you take up, so we take around 40 minutes of time. But in the exam, if the question is for like 14 marks, max 28 minutes we can take to solve on average basis. Sometimes if the questions are tough, we may take more time also. Sometimes some questions may be easy where you will be able to save the time. One of the big complaint with respect to advanced accounts in the past is not one or two. Major complaint, even the All India rank holder one, is that I'm not able to complete the paper on time. The paper was very lengthy. Everything I know, but I'm not able to complete the paper. I was able to write only for 90 marks, 95 marks. Why? Because you take more time sometimes. Okay, so you have to, I mean, literally be fast in writing. Any doubt in this particular question, any of the place? Provision for tax we worked on, This provision is created for paying taxes. That obligation will come within 1 year. So that will come under what? Short-term provision for tax. Just a provision is created. Then whatever is paid as advance tax will come under what? Loans and advances. Proposed dividend already we included in the form of which one? Notes to accounts. Live online friends complete printing level. So those who have completed, declaration of dividend out of reserves, I'll come back to it later. This declaration of dividend, I'll come back to it later. Go to this RTP May 2024 and you are going to try. RTP, that second page. Okay. Our next question. On the declaration out of reserves, dividend out of reserves, I'll recollect fully, then we'll do it separate. I'll go to the next question. Which question? RTP May 2024 question paper based on final accounts. So for that also, what you're going to do is leave 2 pages gap. What are the 2 pages? P&L account one page and what? Balance sheet another page. Prepare working note which are applicable to which one? P&L account. Income from operation, other incomes in the money. Prepare the working notes. We'll check the working notes. What I will do is, I'll give you around 5-10 minutes of time. Read the question, then do working notes for P&L account. We'll check the working notes, do the P&L account. Then you do the working notes for balance sheet. We'll check the working notes and do the balance sheet in the month. So hereafter, you solve first. Then let me see, or let me give my working notes. Correct the working notes, then let us prepare P&L account. Aprama, you do the working for balance sheet, then we'll prepare the balance sheet in the month. So if you have completed this, please go to which question? RTP May 2024 question paper. Live online friends, have you completed all these things? முடிச்சிட்டீங்களா? Try this Aqua limited question. Okay, so try to prepare working notes which are related to which one? P&L account. Then we'll do P&L account. Then we can continue with the balance sheet next. Sometimes if you miss the class, if you're accessing recordings, ensure that you're passing the video here and try to work out the working notes. Okay, so I do not want you to, just keep playing the video, those who are accessing recordings. So please do the working note, we'll see. அங்க inventory increase இருக்கா decrease இருக்கா? Next questionல பாருங்க. Inventory was 6,65,000. Closing balance given as 7,05,000. Here also increase in inventory only. Try to do the working notes. Sales is the operating income. So I start with line items having the working note. What will come in other income? Rent and which one? Transfer fees will come in what? Other income. Apram? Rent and transfer fees will come in other income. Purchases are given directly, you can take it. Purchases are given directly, you can take it. Then decrease in inventory also, we can take it directly in the P&L account. Wages plus outstanding wages. Wages plus outstanding wages. The change in inventory we can directly incorporate in P&L account. 6,65,000 minus 7,05,000. Decrease in inventory. Increase in inventory we can take it there. Then provide depreciation. All other expenses. Discount, rent, business expenses, including outstanding expenses, advertisement, commission, bad debts, repairs, provision for doubtful debts, everything will come under other expenses. Discount allowed, rent, business expenses plus outstanding expenses, advertisement, commission, bad debts, repairs, and provision required for bad debts. Total 3,67,000 will come. Depreciation on plant and machinery, tools, and which one? Furnitures. I'm doing a shortened version. Don't do this in the exam. For reducing the time in the revision, I write in short form, but in the exam, you must write a proper note with proper words and titles kind of a thing. Here, change in inventory is increase in inventory. Increase in inventory here. With all the above data, try to prepare which account? P&L account and close. Any doubt in this? Any doubt in this? Any answer for profit or loss? Check your working also. 3 lakh, 36 lakh 17,000. In the other income, 36,500. Total of income, you'll get this much. Purchase of raw material and goods. What is given? Purchase of raw material and goods, including carriage inwards. Because carriage inwards are part of which one? Purchase cost, you can include it there. 12 lakh 32,500 plus 57,500. Example, you must prepare a working note. Classroom purpose, it is okay. This change in inventory also, you have to do the working note in the exam. Classroom purpose, we just save the time. It's okay. There is no finance charge in this question. So PBT, tax expenses 30%, you get profit after tax. Any doubt in any of the particular line item? Live online friends. Any doubt in any other items that is given over here? Yes, please. No, this discount is given. This discount is given for prompt payment. This discount, other expenses, discount allowed is given for prompt payment, so you cannot adjust that. But some authors are in the view that okay, discount is allowed on sales, so we reduce it on the margin. So discount should be taken as other expense only. After taking up this, try which one? Working notes with respect to balance sheet. Same, share capital, reserves and surplus. Any other thing that requires a working note, you prepare. If one or two line items are there for classroom purpose, okay, we can just add in the balance sheet. But example, you must prepare a proper working note. Have you taken P&L account? ஓவருங்களா அது? Live online friends? Is it over? If you have completed, please proceed to good. If you have completed, please proceed to the working note for which one? Balance sheet. Share capital for classroom purpose we can omit. Directly start with working note for which one? Reserves and surplus. Example proper working note பண்ணிக்கங்க. Okay, so for classroom purpose, reserves and surplus require a working note. I'm not sharing the screen. I'll do my work. I request you to do your work also. That is working note for which one? Reserves and surplus. The examination, don't do selective working notes. Classroom purpose, it is okay. Share capital, if you have done the working note, or directly also, it will be what? Paid up capital minus calls in arrears. Paid up capital minus calls in arrears. 20 lakh minus 10,000, not 1000, 10,000. 19 lakh 90,000 will come. Resource and surplus, any of your answer? Let us see. 3 lakh 82,000. P&L account add net profit minus transfer to reserve, general reserve will come. No other resource and surplus in this question. Then that trade payable will come, provision for tax will come, other current liability, both the outstanding expenses will come. Outstanding expenses will come. In the examination, you should give a working note separately for which one? The other current liabilities. You're not allowed to write and the for tax, outstanding expense and all in the balance sheet. You should write as a separate working note only. Plant property equipment, you must give a proper working note. Cost minus depreciation. Classroom purpose, I directly take it. Freehold premises, no depreciation. Plant furniture tools after depreciation. Tools, sometimes I do not know. They show it in the textbook as part of closing stock money. I assume that it is loose tools, machinery, spares, etc. Part of plant property and equipment. Then debtors minus provision for bad debts. Inventory is nothing but closing stock. Cash and cash equivalents, cash and bank balances. So if you look at compared to the first question, second question would have consumed 20-30% lesser time. So the classroom, we'll revise the concept. We'll do the first question or the question to understand the concept better or deeper. Or another 2-3 questions to improve our speed and accuracy. So This is question number. Okay, I'll come back to the screen. Those who completed, go to the next question. That will be there in pink color. Hero Limited. Which company? Which question next? That Hero Limited. Try to prepare the working notes applicable for P&L account. As usual, I'll verify. Then we can prepare P&L account and we can do what? Balance sheet. Like this, when we practice for our 5 questions, then next you just revise your regular class notes with this notes and go for exam. All that's it. Those who are accessing recording, pause and copy this. Okay, then try the next questions, working notes applicable for P&L account, applicable for P&L account. Then you can continue playing so that you can cross check your the working notes and P&L account also. Any doubt in this Aqua Limited balance sheet workings? Trade receivable due for more than 6 months or cash and bank balance, then that other current liabilities in the exam, you must prepare a separate working note, disclosures. Try which question? Hero Limited question. Only the working notes with respect to P&L account. All of this, have you completed? Do the working for P&L account. Then we'll do. Point number 2, furniture fittings tools are related to administration. Okay, depreciation is at the rate of what? 20% on cost. Full year depreciation in the year of acquisition, which means even use asset for 1 month or 2 months or 1 day, we charge what? Full depreciation, but no depreciation when there is a disposal during the year. This is accounting policy followed by that. You buy a machinery, you charge full depreciation. Don't consider about date of purchase. You sold a machine, no depreciation for the sold machine. So consider that while doing depreciation work. So try to prepare the P&L account related workings for the same. I'm not sharing the screen for 2-3 minutes. Try to do the working note. Try the working note. Here, mainly the working note is required for depreciation and which one? Other expenses. Depreciation and which one? Other expenses we require working. Can you tell me what is the depreciation? What is the cost of the asset opening balance? Cost of the asset opening balance? 680. Okay. What is the cost of the asset purchased? 120. Minus cost of the asset sold. Everything cost because depreciation is on the cost of the asset. Cost of the asset is 680. We will charge full depreciation on the new asset purchased. We will not charge depreciation on the asset sold. So what is the cost of the asset? The base for depreciation, 740 on the 20%. Cost of the asset given in the trial balance. And additional cost of asset purchased qualifies for full depreciation. No depreciation on the cost of the asset sold. Base for depreciation is 740 on the 20%. Why it is so, sir? That is instructed to us in the question. Then, in other expenses, listen to it. Administration expenses will come. Distribution expenses will come. Factory closure cost will come. Wait. The assets are sold at a loss. What is the cost of the asset? 60,000. Accumulated depreciation? 30,000 means what is the book value? 60 minus 30, 30,000 is the book value. They sold it for 10,000 means is it a profit or loss? Loss on sale of asset. Cost minus depreciation, book value 30, sold for 10,000 na 20,000 loss on sale of asset will come. That will be included in what? Other expenses. As usual, we have to fill up. Income from operation is nothing but sales. No other income given in the question. Purchase of raw material given in the question. Change in inventory. Opening stock to closing stock increase there. Closing stock is 200,000. What is opening stock? 140,000. It has increased by 60,000 minus. No employee benefit expense given in the question. Depreciation just now we worked out 148. No finance charge given in the question. Other expenses are 662. PBT on the tax 50%. You get which one? PAT. Any doubt in it? Take up this. Then balance sheet related working. Two main working you have to do in this question. Reserves and surplus and PPE. Reserves and surplus and which one? PPE. Uh, for classroom point of view, examination point of view, of course, you have to do full. So take up this. After completing this, go to balance sheet related schedules, working notes. And two important disclosures we have to make here. What are the two important disclosures? Factory closure cost. Closing a factory is an ordinary item or extraordinary item? Not extraordinary item, it is exceptional item. This you will learn in accounting standard, we will revise in accounting standard. What is exceptional item? Related to business, but it will not happen in the normal course of business. Okay. Proposed dividend on equity, we require a disclosure. We can show it elsewhere after the balance sheet also. Third point. Amma. No, it is not income. Sale of asset is it income? No, sale of asset is a capital receipt. Sale of asset is a capital receipt. Only the profit or loss will be recorded as income or expense. See, we sold the asset, not the product. So cost of the asset sold is 60, accumulated depreciation 30. What is the book value of the asset sold? 30,000. It is sold for a loss. The loss is only recognized in income statement. Same like any other financial accounts. Okay, you prepare P&L account. In that, will you record sale of machinery in P&L account? Profit or loss only. So here it is a loss on sale of asset. It will come in what? Other expenses. If you would have sold for more than book value, like 40, 45,000 sale padinda, it would have come as which one? Other income. So balance sheet two important working notes for classroom point of view, reserves and surplus, plant property equipment. Do that, then we'll check or we'll do balance sheet next. Do the working, two workings. What are the two workings? Reserves and surplus, and which one? Plant, property and equipment for balance sheet. Any answer for reserves and surplus? 3. Please don't do this in the exam. 80 plus 270 minus 30. Opening balance 80. Current year net profit 270 minus transfer to general reserve 30. So general reserve the created will come. There is no old balance. 380 will come. Total of 350 add. Listen. Working for plant property equipment. See, cost minus accumulated depreciation will give us which value? Book value. Listen to it. Listen to it. What is the opening balance? What is the opening balance? 680. What is accumulated depreciation given in the trial balance? 260. Sixty minus 260. What is the net book value? 420. Then sold during the year, 60 cost, accumulated depreciation, book value will eliminate. Why are you eliminating? It is sold out. Profit or loss is already recognized in which account? P&L account. Cost is 60, accumulated depreciation 30, sold, of course, book value sold is 30. Additions during the year, adukku no accumulated depreciation 120. Current year depreciation is 148. Current year depreciation is 148. Net balance will be 362. Net balance will be 362. Opening balance, net value, book value sold 30, additions 120, and current year depreciation is how much? 148. Closing balance will be 362. Other things do not require a working note. Share capital 1000, reserves and surplus, borrowings are 70, trade payables are 80, provision for tax 270, PPE we have done the working, investment in financial instruments will come, all shares, debentures, bonds, etc. will come, trade receivable, then closing stock, cash and bank balance will come. Total of the balance sheet is how much? 1770. Any doubt in it? What is a liability? What is a liability? Anything payable is a liability. Can you show provision for depreciation in the liability side? No. Liability side, what will come? What is payable only will come. Provision for bad debt. Is it a liability or provision against asset? Provision against asset. It must be reduced from debtor. Same way, provision for depreciation is it a liability or provision against asset? It must be reduced from asset. So liability means something payable, obligation that result in what? Outflow of resources. Provision for tax, why do we show in liability side? Obligation payable. So I repeat, PPE, opening balance net book value 420. We sold assets having a book value of 30. We purchased assets for 120 minus current year depreciation. Net book value for balance sheet is 362. Investments 200 will come. And this disclosures with respect to P&L account or disclosures with respect to P&L account you can include after this also. This is for which question? Hero Limited. 1 minute. I'll come back to the screen. If you have done or completed that, which one? Hero Limited. Go to which company? PQR Limited. After this, try to work out for PQR limited. Same style. Do the working note with respect to which one? P&L account. We'll verify the working note and P&L account. Then we'll go to which one? Balance sheet. Any doubt live online, friends? Live online friends, have we completed this? Hero Limited balance sheet is over. Okay. Try which question next? Your Limited. Try to prepare working notes which are applicable to P&L account. I hope everything is direct. Only which requires working note. Depreciation is also given directly. I hope only other expenses requires a working note. What will come in other expenses? Directors' fees, rent, bad debts, provision for bad debts. So directors' fees, rent, bad debts, and sundry expenses will come. Provision for bad debts required is 20,000 minus opening balance 12,000, 8,000 will come. 2,48,000. When you fill, sales will be income from operation. Interest will be shown in what? Other incomes. Purchase of raw material is given. Then employee benefit expenses, nothing but salary. Depreciation is given. Interest and finance charges, of course, given in the question. Other expenses, working note we have done. PBT minus tax will give us which one? PAT. Take up this. Any doubt in any of the part? Hmm. Debtors minus bad debts. அது எப்போ பண்ணுவீங்க? When the bad debts are given in the adjustment. Here bad debts are given within the trial balance or in the adjustment. When bad debts are shown within the trial balance, what is the meaning? Already they passed journal entry. What is the journal entry they would have passed? Bad debts accounted out to debtors account. That is why the bad debt is appearing in which one? Trial balance. Already it has been adjusted. Only when they tell you an adjustment, further bad debts to be provided 5 lakhs, then that is not recorded. That is not recorded. So when an item is already appearing in the trial balance, what is the meaning? Already journal has been complete, ledger posting has been complete, which means the debtors balance given in the trial balance is already after adjusting that bad debt. Same like your normal final accounts. Bad debts are already appearing in the trial balance. Debtors, as it is, you will take it to balance sheet. Bad debts are given in the adjustment, it to be adjusted. We'll adjust that bad debts. So again, no adjustment is required. The bad debts are whatever is given appearing in the trial balance. Already they passed which one? Journal entry for this. 5 lakh into the percentage. What is the percentage? 4%. Suppose the bad debts they would have given as an adjustment. Bad debts to be provided or bad debts, additional bad debts discovered. Then you would have done 5 lakh minus that. So provision for bad debts 5 lakhs into 4% minus old provision 8,000 we need to create. Any doubt in this P&L account? For balance sheet, I hope only reserves and surplus working note is required. Now what I request is you prepare the working note as well as complete what? Complete full balance sheet. Full balance sheet I request you to work on. This question, change in inventory. Are we given opening stock, closing stock separately? In the balance sheet, we are given which one? Closing stock. It is given purchase adjusted, which means already adjusted for change in inventory. So they have incorporated already adjustment for what? Change in inventory. Try preparing balance sheet. Have you completed this P&L account, profit and loss account, complete punting over? Live online friends. This P&L account is over. All others, have you completed? I'm doing the balance sheet workings. I request you to try. See, depreciation is directly given in the trial balance. So no need to adjust depreciation with asset in the balance sheet. When depreciation is given, not provision for depreciation. When current year depreciation is given in the trial balance itself, already they passed journal entry for depreciation, depreciation account data or to asset account. Share capital 8 lakhs will come. Any working for reserves and surplus? Opening balance, add net profit. On that net profit, 10% transfer to reserve. Reserves, opening balance 1,60,000 plus addition 42,560, 2,02,560 will come. So these two will come as reserves and surplus. Then what else will come? Long-term borrowing, the debenture will come. Trade payable will come. Provision for tax will come. All the outstanding expenses. Please remember, here outstanding expenses are given in the balance sheet itself. Okay, this unclaimed dividend will come. What else will come? This outstanding expenses also will come. Outstanding expenses. Interest also will come. Then dividend also will come. Interest, any doubt in it? 8 lakh into 14%. In that, there is an outstanding interest given. 56,000 given in the trial balance itself. Outstanding expenses, interest, outstanding interest, and dividend proposed or dividend payable. That trial balance item, is it dividend proposed or dividend payable? Payable means declared but not claimed. He declared the dividend, but maybe it's because of some dispute or non-availability of shareholders list or due to some issues that account would not have been credited or not paid. Then PPE, whatever is given in the trial balance. Building machinery tools. Don't adjust depreciation because it is given in the trial balance itself. Investment will continue. Debtors minus provision for bad debts. The closing stock will come. Advance tax will come. Cash and bank balance will come. Then other current assets will have what? Accrued interest. This question is little different because depreciation is already given in the trial balance. All your outstanding expenses are already given in the trial balance, so we take it directly to the balance sheet. So how many questions we solved in final accounts area? 4 questions. Huh? Good. In a span of 2 hours, recollecting and solving 4 questions, it is a good amount of speed. Are you comfortable with the speed? Live online friends, are you comfortable with the speed? Regular classes, we don't go this much speed, but revision classes, first we understand the concept. Then while working out questions, we have to be a little bit faster. Otherwise, revision class is more like a combined study with the faculty. Because at home, 1 month before exam, when you try 4 new questions, okay, then you will have a struck like this item out adjust, that item out adjust. Instead of that, we just do a combined study. Okay, this will be there in the display. Before I proceed to the next one, 2 or 3 questions. Number 1, are you getting a better confidence or losing the confidence? Because by attending revision class, you should not lose the confidence. Are you getting some better confidence? Good. Number 1. Number 2, is the speed okay? Maybe a bit reduction I can do. Okay, speed is okay. Live online friends, your view. If there is any discomfort or if there is any problem in learning, please unmute and talk. That is always required. Because next 5 days, 6 days, we are going to work together. So the speed, then your understanding, your confidence level definitely matters. Then we completed final accounts revision. Then one part that is pending is declaration of dividend out of what? Past reserves. Declaring dividend out of which one? Past reserves. Okay, sometimes they ask it as part of multiple choice question. Okay, they give you data, then they ask you to check whether dividend can be declared or not. How much dividend is payable? 2 or 3 multiple choice question they ask for. Okay, or sometimes they ask in lengthy answer question itself for about 4 marks, 5 marks types. We'll do that. So first complete taking up this, then we'll go for declaration of dividend out of past reserves. First we'll learn or revise the provision, then we'll do the question. Any doubt in this balance sheet? Any doubt in this balance sheet? Live online friends, complete பண்ணிட்டீங்களா? Shall we go ahead? Or above? Yeah, 2 minutes. Okay, we'll continue with declaration of dividend out of which one? Past reserves. It's a small topic. It will just take 5 or 10 minutes of time for us to recollect and go ahead. Wait. See, this is stated by your section 123 of Companies Act 2013. If profits are not sufficient or if there is a loss in the current year, you can pay out of which one? Accumulated profits means free reserves. You can use all the free reserves. What do you mean by free reserve? Anything that is not restricted for some legal purposes, like statutory reserve, okay, infrastructure reserve, or government grant account, or some reserves to be maintained as per some law. It can be payment of gratuity act, payment of wages act, bonus act, income tax requirements, anything. And you cannot take any revaluation reserves. You cannot take any revaluation reserves. Other free reserves, you can use it for paying it. Please remember, this will be done if profits are not what? Sufficient. For example, the company earned 10 crores net profit. How much? 10 crore. The company wants to pay a dividend of 5 crore. Can they do? 10 crore they earned in the current year. They want to pay 5 crores dividend. Can they do? Yes. If they want to pay entire 10 crores as dividend, can they do? Yes. So if you pay dividend out of current year net profit, no restriction. How much you can pay? As much as you want, you can pay. If you want to pay dividend out of which one? Past profits only, this one should be done. So what are the rules? Number one, the dividend rate cannot exceed last 3 years average. Suppose if you are declaring dividend for 2024-25, ignore this year. Previous 3 years, you take the dividend rate. That average, okay, whatever you pay in the current year should not exceed what? Last 3 years average. Then the amount utilized should not exceed 1/10 of paid up capital and reserves. The amount payable as dividend should not exceed what? 1/10 of paid up capital and reserves. Then the balance in free reserves after the payment of dividend should not fall below what? 15% of paid up capital. I repeat, the dividend rate cannot exceed what? 3 years average. That is simple. What is the next one? The amount that you pay cannot exceed 1/10 of, that is 10% of capital and which one? Reserves. For example, amount paid is like 50 lakhs. You work out capital plus reserves into 10% and check that. Then the balance in free reserves should not fall below 15% of paid up capital. Should not fall below 15% of paid up capital. There are other conditions also, like free reserves should be taken after adjusting losses, if any. All current year and arrears of depreciation should be adjusted before paying dividend. Dividend cannot be paid if there is a financial defaults. The company did not repay loan. Loan is payable in the current year. They did not repay the loan. Interest on debentures they have not paid. Creditors they have not settled the money after due date. They are called as what? Company which is in financial default. They cannot pay these dividends. Okay. Dividend cannot be paid out of capital. Dividend can be only out of which one? Reserves. So these are the conditions. These are the additional points to be considered for paying which one? Dividends. Okay. If required, I request you to note this. Then we'll proceed to which one? The question based on declaration of dividend. I repeat, you can copy this. Section 123 of Companies Act. Okay. Dividend rate should not exceed 3 years average. The amount should not exceed what? 10% of paid up capital and reserves. Reserves after the payment of dividend should not fall below what? 15% of capital. These are the additional points to be considered while declaring the dividend. We'll see how to apply these. Through a question, we'll see how to apply this. Take up this first. So first, see the 3 years average. Then if the dividend rate is within that 3 years average, no problem. So the dividend paid out of past profit should not exceed what? 10%. That is 1/10 of paid up capital and reserves. Then balance after the payment of dividend There is reserves balance after payment of dividend should not fall below what? 15% of paid up capital. Free reserves should be taken after adjusting past losses, if any. Past losses, set it off, then take it. Not current year loss. Okay, past losses should be adjusted before paying such dividend. All current year and arrears of depreciation should have been provided with free reserves. And if the company has some financial default, like after due date they have not paid debenture or loan or interest, or they have not paid credit, or some cases are pending in the court for default in payment of loans or interest or EMI or whatever, then they cannot pay what? The dividend out of this house. Dividend cannot be paid out of capital, only free reserves can be used for paying dividend. Shall we? Now, those who completed, try that question. Which question? After the first question, second page, you can find declaration out of reserves. Declaration of dividend out of reserves. Try this question. Those who have not copied, please copy this. Those who have copied this, try that question. Shall we? MNP Limited has a paid up capital of how much? 10 crore. Free reserves of 50 crores. The company made up loss of how much? 40 lakhs after providing depreciation. Okay. The company is not in a position to declare the dividend is given. Board of directors of the company announced a declaration of 20% dividend out of free reserves. The average dividend declared by the company in the last 3 years is how much? 25%. So we are going to pay only 20%. Is it within the limit? Yes. So first condition is satisfied. Listen, dividend rate not to exceed 3 years average during immediate 3 preceding years. Okay, declared is only 20%, but past average is 25%. Therefore, allowed. Wait. Listen to it. The amount utilized should not exceed 1/10 of paid up capital and reserves. 10 crore plus 50 crore. How much? 60 crore into 1 by 10. 60 crore into 1 by 10. That is what we can take maximum, which means 6 crores we can take. But we are planning to declare 10 crore into how much percentage? 20%. Dividend will be paid on paid up capital. 10 crore into 20%, we want to pay how much? 2 crore. Is it within the limit? Yes. So listen, 1/10 of paid up capital and reserve, 6 crores can be used. But dividend declared is paid up capital into 20%, only 2 crores is declared. Therefore, it is within the limit allowed. Listen, we can pay up to how much? 6 crores. But we are declaring only 2 crores. It is within the limit, so it is allowed. Wait. The balance in free reserves after the payment of dividend should not fall below what? 15% of paid up capital and reserves. Listen, pay attention. What is the free reserves balance given? What is the free reserves balance given? 50 crores is given. Minus dividend, how much we are going to pay as per the thing? 2 crore we are going to pay. So what will be the balance? 48 crores. Minimum balance required is 10 crore into 15% only. How much required? 1.5 crore minimum balance required. But what is the actual balance? 48 crores. So that is also not a problem. Free reserves, dividend paid 2 crore. Now actual balance after dividend is how much? 48 crore is there. Required minimum is paid up capital into 15%, 1.5 crore. Should not fall below 1.5 crore. Therefore, it is also within the limit. So all the three conditions are satisfied. The company can declare a dividend of how much percentage? 20%. There is a current year loss only. That's why we are declaring out of past year profit. Okay, just take up this. I'm going to add a question on the side that you are going to try. It's a positive question or negative question? Positive question. How? All conditions are satisfied, you pay the dividend. Next question, when we learn with a positive question and go, they will ask you a negative question. What is negative question? First condition will not be fulfilled. Second also not fulfilled. Third also not fulfilled. How much dividend we can pay? Shall we? No, first take up this solution for this question, then we'll go for the negative question. Okay, it is that question. Equity share capital 50 lakhs, 10% preference share capital 6 lakhs, net profit of the current year is 3 lakhs, reserves and surplus 20 lakhs, average dividend declared by the company is 15%, board of directors want to pay 20% dividend, examine. Okay, So the three conditions or the handout question you have taken. Now I request you to copy this data. Try to apply the three conditions. You tell me how much dividend can be declared by the company. So the question will be how much dividend can be paid and what is the rate of dividend to equity shareholders? What is the rate of dividend to equity shareholders? We'll begin with internal reconstruction. See, from this, every attempt they ensure that they ask for minimum 7 marks, maximum up to 14 marks in the money. They test you questions. Okay. So, what is internal reconstruction? Simple. If your company is running in a loss, you just do a process where you write off your past losses. It's a process of capital reduction through which you are able to write your past losses. When a company is running in a loss, who will suffer to the maximum? Shareholders. So convene a general body meeting, go for passing a resolution to reduce the capital. For them also, there is no other go. They have to reduce the capital. So what is the entry you will pass when a liability reduces? Liability account, data to which account? Capital reduction account. It's like share capital of 10 crore will become share capital of 2 crore, 3 crore. Whatever is reducing, you transfer to which account? Same way, try to negotiate with the preference shareholders, debenture holders, lenders, whichever the liability reduces, liability account data to which account? Capital reduction account. Sometimes we will convert the liabilities. What even they convert the liabilities? For debentures, we may exchange shares. So cancel the old liability and create which one? The new liability. It's like debentures account data to equity share capital. Creditors account data to equity share capital, like that. Profit, if any, will be transferred to what? Capital reduction. Suppose if there is a loss also, it will be adjusted in which account? Capital reduction. So when a liability reduces, transfer to capital reduction. When a liability is getting converted, the difference will transfer to which account? Capital reduction account. Then, though it is a loss-making company, you not have filed returns with ROC. You not have filed income tax return. If it is a company, whether there is a profit or loss, you must file what? Return. If you don't file return, you have to pay some penalty charges, some minimum bonus, etc. You have to pay. So if we want to record any liability or unrecorded liability, capital reduction account data to liability. Why, sir? It's a loss, charge it to capital reduction account. To which account? Liability account. It can be any liability. Bringing new creditors, workman compensation, bonus, income tax disputed claim, all those things. Very simple logic. Liability will have which balance? Credit balance, debit to reduce it to capital reduction. If you exchange, cancel old liability, bring the new liability, balance you transfer to capital reduction. So capital reduction account where all profits and losses will be recorded. Then if the liability increases, capital reduction account data to which account? Liability account. Then using these profits, we will write off the assets. Capital reduction account data to various assets. Assets will have which balance? To write off, credit them. It can be accumulated losses, preliminary expenses, discount on issue, underwriting commission, all those things. Any other asset given in the question. You write off. Then, even though it is a loss-making company, some assets value would have appreciated, like land, building, and the money. Asset account data to which account? Capital reduction account. Because increase in asset is a gain. So debit the asset further, it's a gain, credit to capital reduction account. Then if there is any reconstruction expenses, because you'll employ some financial experts, consultants, all those people, legal charges, etc. will be there. What is the entry? Capital reduction account data to cash. Any balance in capital reduction, it will be transferred to which account? Capital reserve account. I repeat, when a liability reduces, or when the liability is offering some discount, or we can get some discounts through a negotiation process, debit the liability. Why debit the liability? Liability will have which balance? Credit balance, debit to close. The profit will be transferred to which account? Capital reduction account. To convert liabilities like debentures, etc., to equity shares, cancel old liability, debenture or loans or creditors, to which one? Share capital. Balance will go to capital reduction. For increase in liability, capital reduction account data to liability account. Capital reduction account data to which account? Liability account. KCM class number be component. If there is a loss like P&L account or miscellaneous expenses, other assets, you write off. If there is any increase in asset account data to which account? Capital reduction account. Expenses, you charge it. Any balance, it will be transferred to which account? Capital reserve account. So how an examination question will be? They will give a balance sheet. They will give you all the adjustments. Simple. In your mind, more than the entry, is it a gain or loss? If it is a gain, you will credit which account? capital reduction account, debit the liability, or asset goes up, asset account data to capital reduction. If there is a loss, for example, old liability debentures 5 lakhs, but we exchange 6 lakhs of new shares. Is it a gain or loss? For 5 lakhs, we exchange 6 lakhs. Now, is it a gain or loss? Loss, that extra 1 lakh, we will charge it to which account? Capital reduction. Any expense, it will be charged to capital reduction. Any expense, it will be charged to capital reduction. Any asset written off, it will be charged to which account? Capital reduction account. Any balancing for in reserve, it is not a ordinary profit, capital profit transferred to which one? Capital reserve. For doing this internal reconstruction, you have to prepare the scheme, get the approval by passing a special resolution with the shareholders through the shareholders meeting. Only then you can proceed. So accounting aspects only this much. Shall we? Okay. This entry or these entries, no need to remember actually. Okay. You will yourself will tell when I go to a question. Look at this. This okay. First we'll go to this. As part of reconstruction scheme getting better limited, the following is agreed upon. Shareholder will receive 10,000 shares of 50 each. For that, what they are going to get? 15,000 shares of 10 each. Preference shares 2/5 of the total equity shares. So they pay them 50,000 and transfer the remaining to which account? Reconstruction account is nothing but capital reduction account. Nothing but which account? Capital reduction account. What is the entry you will pass for this? Old share capital, equity share capital account data to whatever is given. To equity shares, to preference shares, to cash. Balance will go to which account? Capital reduction. Here they call it as which one? Reconstruction account. 8% preference share capital, 3 lakhs is there. We are going to reduce the shares to what? 50. Original face value was 100. So what is the entry you will pass? There are two methods. One is direct capital to capital reduction, or old preference share capital account data to new preference share capital to what? Capital reduction, like that. Debentures plus interest 56,000. Okay, 3/4 of the amount is paid off. Remaining is paid in what? Cash. They just ask you to pass which one? Journal entries. Try to pass entries, then recollect. If there is a doubt, leave the space and go to the next one. 3 journal entries you need to pass. Try to pass the entries, friends. I'm not sharing the screen for next 2-3 minutes. Try to pass the entries. First one, what is the entry we need to pass? Old equity share capital account data to new equity share capital. How many shares are given? 15,000 shares of 10 each. 15,000 shares of 10 each, 1,50,000. 12% preference share capital will be for the 2/5 of the amount. That will be how much? 2 lakhs. How much is paid in cash? 50,000. 5 lakh, this is the old capital debited. This is the new thing exchanged. Balance will go to which account? They use the word reconstruction account, so we let us also use reconstruction. Please remember, wherever they ask you journal entry, let it be amalgamation or internal reconstruction, you have to give what? Narration. Narration is mandatory. Sometimes the exam question they will specify without narration you pass journal entry like that. But if they ask you normally journal entry, you do it with the narration only. For preference shareholders, what is the old value? 3 lakh, which is 100 each. 50 each, it will be half the amount. So old preference share capital account data, 8% preference share capital account data. To new preference share capital will be half the amount. Balance will go to which account? Reconstruction account. So 1 lakh plus 1 lakh 50 is there. Next end upon row. Debentures 2 lakhs plus accrued interest how much? 56,000. So totally we have to pay 2,56,000. Debit the liability, debit the receiver. Debenture accrued interest. Wait, listen to it. How much is waived? 3/4 is waived. So how much we have to pay? 1/4 we have to pay. So 1/4 of the total amount, 64,000 pay pannu. Balance will go to which account? Reconstruction account. Since no other adjustments are given, all these amounts will be transferred to capital reserve. All these amounts add up and transfer to which account? Capital reserve account. Take up this. Any doubt in any of these entries? Any doubt in this? Shall we? This is May 2024 question paper, of course. Equity shares of 100 each is given, 8% preference shares are given, 10% debentures are given, trade payables are given. We are given goodwill, PP, trade receivable, inventory, cash, own debentures. Nominal value 6 lakhs. Own debenture means our company's own debentures. P&L account balance is given to us. Equity shareholders will be subdivided into what? 10 shares of 10 each. Then after the subdivision, equity share capital will be reduced by 40%. Preference shares dividends are in arrears for 4 years. They agree to 75% of their dividend claim to accept the preference share for the balance. Own debentures 2,40,000 nominal value sold at 98% come interest. Remaining debentures were cancelled like that it is given. Debenture holders agreed to accept on machinery book value 9 lakh in full settlement is given. Remaining plant and machinery is valued is given. Then they have given you revised value of assets. Goodwill P&L account to be written off. The company paid 60,000 as penalty to avoid capital commitment of how much? 12 lakhs. Interest 10% paid every year on 31st March is given. They ask you to prepare past journal entry, prepare capital reduction account, and prepare which account? Bank account. They don't ask balance sheet. Only journal entries, capital reduction account, and which one? Bank account. I request you to read through the question once again. Full question at least once or twice, then we will continue. I'm not sharing screen, friends. While going through, just don't go through. I request you to consider what kind of adjustment to be done, what kind of journal entry to be passed. I request you to go through. Have we gone through? Shall we? Let us work out adjustment by adjustment. It's a very good question. What is the first one? Equity shares are subdivided into 10 shares of 10 each. Now look at the equity share capital now. It is how much? 100 each. 10 shares of 10 each, it will become again what? Each share 100 rupees. Now it's going to be 10 shares of 100 each. So how many shares are there? 60 lakhs divided by 100. How many shares are there? 60,000 shares. In future, it is going to be 10 each. The same value now. Why same value? One share 100. Now 10 shares of 10 each. Then thereafter, how much is reduced? 40% reduced. Equity share capital account to capital reduction account. Any doubt in it? 100 each, 60 lakhs, 10 each also, 10 shares of 10 each, it will make to the same amount. Then 40% reduced, transfer to which account? Capital reduction account. Take it up. We'll go one by one. Next பாருங்க என்ன சொல்லிருக்காங்க. What is given next? Preference shares dividend arrears for how many years? 4 years. Arrears for 4 years. They waived 75% of the dividend. The question is, in the liability side, is it recorded as liability? Arrears of dividend is not recorded as a liability. And unrecorded liability, if it is waived, no entry, no entry. But it's not 100% waived. How much percentage waived? 75% waived. How much we have to pay? 25% we have to pay. Wait. Unrecorded liability waived, no entry required. But if unrecorded liability is paid, now, is it a gain or loss? Loss. Record panna the liability pay panna, it's a loss. For that we have to pass entry. 21 lakh into 8% into 4 years into 25% we have to pay. Any loss, it will be adjusted with which account? Cap reduction account or to bank account. We are paying. We are not giving shares. We are paying. Accept payment for the balance. Why capital reduction account data? Unrecorded liability being paid or becoming payable. Capital reduction account data to which account? Bank account. Next. Owned debentures 2,40,000 nominal value was sold at what? 98 come interest சொல்றாங்க. Wait. What is the total face value of debentures? For 6 lakhs, how much we invested? For 6 lakhs, we purchased our own debentures. The face value is 6 lakhs. How much we invested? 5,76,000 we invested. How much of it own debentures are sold? 2,40,000 own debentures are sold. Proportionately, what will be the cost? For 6 lakhs, invested amount is 5 lakhs 76 means for the 2 lakh 40,000, how much would have been invested? Proportionately, what is the cost? 2 lakh 30,400. That is a proportionate cost of debentures sold. But what is the sale value given? It is sold for 2 lakh 48,000. Sold at how much is given? 98 come interest into 98 by 100. 2 lakh 35 200. This is the price at which we sold. I repeat. Any doubt in this working? We sold it for 98 அப்படின்னா 98 for every 100 rupees of debenture 235 200 நம்ம சேல் பண்ணிருக்கோம். Is it a profit or loss? Cost of investment is 2 lakh 30 400. We sold it for 2 lakh 35 200. Profit. We sold for a profit. Company selling it for a profit. So profit on sale is how much? 4,800. Wait பண்ணுங்க. What is the journal entry we'll pass? We'll get money. What is the entry? Bank account debtor to own debenture investment 230 400. Profit will be transferred to capital reduction account. Profit will be transferred to which account? Capital reduction account. I repeat, we sold own debentures of 2 lakh 40. For 6 lakhs, if the amount invested is 5 lakh 76, for 2 lakh 40, how much? Proportionately, 2 lakh 30,400. We sold it for 98, come interest சொல்றாங்க. Profit on sale is how much? 4,800. Bank account debtor, own debentures account debtor to which account? Capital reduction account. Out of 6 lakhs, 2 lakh 40,000 face value of own debentures are sold. Sold means the company has sold and got the money. Take it up. Please take it up. Next. So out of 6 lakhs, we sold how much? 2 lakh 40,000. What about the remaining? Next adjustment. Remaining owned debentures are cancelled. Remaining owned debentures were cancelled. What is the entry we pass? Debentures accounted out to owned debentures. How much remaining amount? 6 lakhs minus 2 lakh 40 balance 3 lakh 60,000. To own debentures proportionate output பண்ணுங்க. Same way. For 6 lakhs, if it is 5 lakh 76, for 6 lakhs, if it is 5 lakh 76, for 3 lakh 60, how much? Okay, 6 lakhs like we sold 2 lakh 49 balance 3 lakh 60,000 face value. Okay, same way, 5 lakh 76,000 if it is for 6 lakhs, what is for 3 lakh 60? 3 lakh 45 600. The profit will go to capital reduction account. This 14,400 is a balancing. Any doubt in debentures account data? 6 lakhs in the 2 lakh 40 sold, balance 3 lakh 60. To own debentures proportionately, 5 lakh 76 is for 6 lakhs now. What is for 2 lakh 40? Proportionately, sorry, what is for 3 lakh 60? Proportionately 345 600. Balance profit goes to capital reduction. What is given next? Debenture holders 6 lakhs agree to accept one plant and machinery of 9 lakhs book value in full settlement. Debentures, okay, 10 lakhs we need to cancel. What is the machinery value? 9 lakh. They are taking over 9 lakhs of machinery for how much? 6 lakhs. Is it a loss or gain? Loss adjusted in capital reduction. Debit the receiver, of course, credit what goes out. Balancing for is a loss for us. 9 lakhs asset, they are taking over for settling a liability of 6 lakhs now. Balance will go to which account? Capital reduction account. Fine. This is 10,000 cash flow. Shall we? What is given next? Remaining plant, property, and equipment is valued at 60 lakhs. What is the value in balance sheet? Adale, how much of book value taken over by debenture holders? So remaining PP is 63 lakhs. That is revalued at, so loss. Total minus taken over by debenture holders. Balance PP is there. That is revalued at 60 lakhs. Means it's a loss or gain. Loss, you will adjust in which account? Capital reduction account debit and a loss. To PPE 3 lakhs. Take up. What is the next one? Were valued at 15 lakh, 13 lakh, 9 lakh 44,000. This is a revalued amount. What was the old balance sheet value? Trade payable paranga. What is the old balance sheet value? 16 lakh 80 liability value. Now it is how much? 15 lakhs. When a liability reduces, it's a profit or loss. Profit. What is the entry you will pass? Trade payable account. Data to which account? Capital reduction account. Balance sheet value 16 lakh 80. Revalued amount 15 lakhs. So debit the liability, credit the gain to which account? Capital reduction account. Next part. What is given next? What about other assets? The values reducing or increasing? Compare trade receivable inventory book value with this one. Reduced earlier. Then you write off P&L account, you write off goodwill, எல்லாமே சொல்லிருக்காங்க. What is the entry you will pass? You can pass a combined entry. Capital reduction account data to the trade receivable, inventory, goodwill they ask you to eliminate, P&L account they ask you to eliminate, you can pass a combined entry. Over. Capital reduction account data total எடுத்துக்கலாம். Trade receivable book value to revised value பாருங்க. Book value 13,75,000, revised value 13 lakhs. Inventory 9 lakh 80, revised value is 9 lakh 44,000. Difference to trade receivable to inventory. Goodwill they ask you to write off fully. To P&L account they ask you to eliminate. Total amount you debit to which account? Capital reduction account. Capital reduction account it out to various assets. Is it over? What is given next? The company paid 60,000 as penalty to avoid capital commitment of 12 lakhs. Are you paying 12 lakhs or just 60,000? 60,000. Capital reduction account it out to bank. Whatever is paid under recorded liability payment is a loss for us. Of course, interest is paid on 30th March, 31st March. On 1st April, the court approved the scheme. So just next day we are buying. All the transaction happens on what? Subsequent day. No need to pay interest. 31st till 31st March they paid interest. We are doing all the entries on what date? 1st April. Na? Then there is no need to pay any entry for pass any entry for debenture interest. And they ask you to prepare capital reduction account. Capital reduction account. Tell me the amounts to and buy. By equity share capital how much? Second entry. Then two how much? 1 lakh. Then that profit on sale of own debentures. Own debentures. Again, buy debentures and the cancelled. Own debentures cancelled. 14,400. Then to PPE loss on sale. And the debenture holders have taken over at a loss of how much? 3 lakhs. The remaining plant property equipment written off. Difference. This remaining plant property equipment loss. Another loss of how much? 3 lakhs. The first one was taken over by debenture holders. Next one is loss, direct loss. Approve. 1 lakh 80,000. Then trade receivable, how much? 75,000 to inventory. Then to goodwill, 81,000 goodwill. To profit and loss account written off. Then that commitment paid to bank, that expenses paid 60,000. Tally this. The balancing for will go to which account? Capital reserve account. They ask you to prepare which account? Bank account also. To balance brought down. What is the opening balance in the opening balance sheet? 2 lakh. Then record all the receipts and payments. One lakh. We pay, we pay the money on the 1,68,000. Then இல்ல, இல்ல. So on the own debentures then own debentures எவ்வளோ? Then then அவ்வளவுதானா? வராது. Because cash collection and payment only will. This will not come. This one. Bank account debtor to own debentures. Okay, to capital reduction. We get a layer. Then that commitments, capital commitments expenses paid. That's it. They ask you to prepare balance sheet. This is Jan 2025 question paper. Request you to go through the full question paper, then we will solve. They ask you to pass journal entry. They ask you to write a note only about which share capital. Read the full question. Read the full question number, the January 2025 question paper, then I will come back. Shall we? Look at the note for capital. 50,000 equity shares are fully paid. 25,000 equity shares are how much paid? 8 paid up. Preference shares are there, okay. P&L account, it's a debit balance, loss balance, negative balance. Debentures are given, freehold property is given, intangible assets, goodwill, non-current asset கொடுத்திருக்காங்க. Look at this. Uncalled capital to be called up. Then thereafter, it is reduced to what? 5 rupees each. So let us go one by one. Not a problem. Let us go one by one. Start. Okay. What is the entry for calling the uncalled capital? Start. Bank account data are to equity share capital account. Do it along with me. How many shares we have to collect the money? What is uncalled capital to be collected? 25,000 into 2. Do it along with me. Don't wait. 25,000 into 2. How much? Of course, 50,000. Then, what is the next one we are going to do? So, what is the entry we have to pass? How many shares are there balance sheet? Now, all are fully paid up. All are fully paid up. 75,000 shares are there. So, start. Equity share capital 10 each. Account debit. 7,50,000 into 10. Sir, 75,000 into 10. 7,50,000 to equity share capital. Of the amount or 3,75,000 to capital reduction. Take it up along with me. Don't need to wait. Next. Preference shareholders accepted a reduction of how much? 2.5, but dividend rate is increased to what? 9%. What is old preference share capital? 8% preference share capital account. Data, what is the value given? How much? 3 lakhs to 9% preference share capital. 2,25,000. That 2.75,000. 2.5 into 30. Please take it up along with me. No need to wait. Any doubt in it? Next. Preference shareholders will forego the claim of arrears of dividend for what? 1 year. 1 year they forego. Is it recorded as a liability in the balance sheet? No. So, what is the entry you will pass? Capital reduction account. Data are to which account? Equity share capital account. What is the preference shares? Arrears? Old arrears. 3 lakh into 8% into 2 by 12. Sorry, 3 lakhs into 8%. For how many years we have to give? 1 year wait, we have to pay for 2 years. We are allotting equity shares of 5 each for that same. That 1 year foregone, no entry because it's not a recorded liability. It's not a recorded liability. Take it up. What is the next one? Mr. X holds 10% debentures for 2,50,000. He is also creditors for how much? 50,000. He agrees to cancel 50% of the total debt, including interest, and pay 22,000 to the company and get what? 12% debentures for the balance amount. Read further. What and all X is holding? What and all X is holding? Debentures is a creditor. So first let us transfer. First let us transfer. What is the entry you will pass? Pass the entry. 10% debentures account debtor. Hello amount 2 lakh. Then creditors account debit. Creditors account debit 50,000. Then what will be the outstanding interest? How? How? It is given interest payable on debentures. Liability sale உள்ள கொடுத்திருக்காங்க. 45,000 is for 4,50,000 face value, means 45. Look at the liability side. Interest payable 45,000 is for 4,50,000, means this person is holding 25,000 now. Outstanding interest account data proportionately 25,000 to whose account? X account. What is the total? Listen to it, then you can take it up. Pay attention. 3,25,000. Look at the adjustment. Who is paying money? Whether the company is paying money to X or X is paying money to the company. Pay rupees 20,000 to the company. Who will pay? X will pay 20,000 to the company. So we are collecting money. Bank account data. Bank account data to which account? X account. How much he pays? 20,000. Then what is given? He'll receive 12%. Okay. He agrees to cancel how much? 50% of total debt. He agrees to cancel 50% of total debt and receives 12% debentures for which one? The balance amount கொடுத்திருக்கான். Wait. Let us prepare Exode account. Exode account le buy debentures how much? 2,50,000. by creditors 50,000, by outstanding interest how much? 25,000. By bank we paid how much? 20,000. Now, how much of debentures we need to issue? How much of debentures we have to issue? Balance will go to which account? Capital reduction account. Balance will go to capital reduction. New 12% debentures. We have to give what? 12% debentures. Any doubt in it? Debentures, creditors, outstanding interest. He gives 20,000. Total of 3,45,000. How much of 12% debentures to be given and how much of capital reduction to be done? That entry will be X account data to which one? 12% debentures account and which one? Capital reduction account. Till the amount started. Wonderful. How much will be 12% debentures? How much will be capital reduction? 3,45,000 into 50%. 1 lakh? Uh, correct. Sorry. This old amount due 50% waived. 2 lakh 50 plus 50 plus 25,000. So capital reduction will be 3 lakh 25,000 lakh 3 lakh 25,000 into எவ்வளவு percentage? 50% waived. Correct. 162,500. 12% debentures will be allotted for the balance. 182,500. Correct. So we are to give 3,45,000. This 182,500 we are giving. And how much is foregone? 162,500 is foregone. 50% of the due. The 3,25,000 left 50%. Correct. Then what is the next one given? Remaining claim of debenture holders, including outstanding interest, to be reduced to what? 60%. They are given what? New preference shares at the new face value. What is the total debentures? 2 lakh. அதில் held by X. Balance 2 lakhs. For them, debentures account data are 2 lakhs. Outstanding interest. For this, it will be how much? For 2 lakh 50, if it is 25,000, for this 2 lakhs, it would have been how much? 20,000. To debenture holders, how much is waived, how much is payable? 60% waived, 40% payable. Reduced to 60%. Reduction is 40%. Reduction is 40%. For debenture holders, we have to pay how much? 60%. Take it. What is the next one? That is given. So 9% preference share, debenture holders, it will be given. Debenture holders account data. Debenture holders account data. To what? 9% preference share capital, 1,32,000. Then, what next? Taxation liability settled at 1,20,000. Balance sheet 1 lakh. What is the entry you will pass? Provision for tax account data. How much is there in the balance sheet? 1 lakh. But we have to pay 1,20,000 we need to pay. Balancing for will be adjusted in which account? Cap reduction account data. The balance. What is the balance? 20,000. Excess paid gets adjusted with cap reduction account. What is the next one? Market value of non-current investment is how much? 2,50,000. What is the book value given in the balance sheet? 2,80,000 கொடுத்திருக்காங்க. So what is the entry you will pass? Capital reduction account data to investment account. How much? 30,000. Reduction is 30,000. Reduction is how much? 30,000. What is the next one? Inventory 1 lakh taken over by creditors in full settlement of their claims. Look at the liability side. What is the creditors account amount? Creditors amount 1 lakh 30,000 இருக்கு. But inventory in the balance sheet is, what is inventory in the balance sheet? Ah, so trade payable in the balance sheet 1,30,000. Yeah. Adala due to X adjusted already. How much? 50,000. Net creditors எவ்வளவு இருக்கு? 80,000. For this, the stock is taken over. So debit the receiver. Creditors account data are 80,000. Which one they are taking over? Inventory value பாருங்க. What is the balance sheet value of inventory? 1 lakh. So the balancing for is capital reduction. What is the next one? Provision for bad debts, the machinery to be written down. Okay, that we can combine, and we would write off which one? Compulsorily, we would write off which one? The P&L account debit balance you must eliminate. We can combine this in one entry. What is the entry will pass? Capital reduction account data compulsorily, we would write off which account? Profit and loss account compulsory, then data we would write off, then what else is given? Goodwill we would write off. How much it will come? P&L account balance, how much to be eliminated? 2,50,000. Debtors, they ask you to create a provision of how much percentage? 2% on debtors balance. What is the total debtors balance? 2% of that. How much it will be? Goodwill you would write off. What is the goodwill you would write off? Inventory rate up பண்ணுமா? We'll see. Prepare the capital reduction account and find out the balancing. The balancing for you would write off from which one? No சொல்லிருக்கோம். What is given? That also you can combine. Plant and machinery account, how much you would write off? 20% you would write off. How much? How much? There is what? Two debtors, 2%. Next, prepare the capital reduction account. Record credits and debits. Balancing for nothing is mentioned. We can transfer to capital reserve. Balancing for we can transfer to capital reserve. அது அப்புறம் பார்த்துக்கலாம். First capital reduction போட்டு then we'll check the bank balance accordingly. We'll issue the debentures. We'll see. Oh. Balance of inventory we have to write off. அதில் ஆட் பண்ணிக்கணும் to inventory account. To inventory account, and the how much balance is it? 1,30,000 lakh. 1 lakh has been already adjusted. Balance you have to write off. How much you have to write off? 30,000. Huh? How to 20,000? 20,000. Adjust the last entry itself. Then prepare the cap reduction account. Any answer for cap reduction? Hello, சொல்லுங்க. சொல்லுங்க சார். சரிங்க சரிங்க. ஓகே, இன்னும் ஒரு கிளாஸ் முடிச்சுட்டு ஒரு 10-15 மினிட்ஸ்ல நான் உங்களுக்கு கால் பண்ணுறேன் சார். ஷூர் ஷூர். Cap reduction account, tell me the entries. நிறைய entry இருக்கு. By equity share capital how much? 3,75,000. அப்புறம் 8% preference share capital 75,000. Then X எவ்வளவு forgo பண்ணிருக்காங்க? 162,500. Then credit all the gains, amount foregone. Then 10% debentures எவ்வளவு இருக்கு? 88,000. Then to equity share capital arrears of dividend கொடுத்தது. Then 20,000. Investments reduced எவ்வளவு? 40,000. Then inventory written off on the 20,000. Data on the bad debts. Then goodwill written off last entry like 60,000 to profit and loss account 2,50,000 written off to So plant and machinery written off. Plant and machinery written off how much? Then tally this. To inventory written off. Inventory written off to the extent of how much? அது மிஸ் அவுட் பண்ணிருக்கோமா அந்த மாதிரி பார்ப்போம். Debtors provision 4,600, correct. 97 900. Something they tell you about bank OD அந்த மாதிரி. பேங்க் ஓடி ஏதோ சொல்லியிருக்கான் பாருங்க. We want to maintain a bank balance of how much? 85,000. அதுக்கு ரொம்ப சிம்பிள். We can prepare bank account. We can prepare which account? Bank account. Opening balance is OD or normal balance? Buy balance brought down. We have 65,000. Then closing balance we want to maintain. Buy balance carry down. We want to maintain. Normal balance இருந்தா two balance brought down, buy balance carry down இருக்கும். How much we have to maintain? 85,000 required. This balance is required. This is OD balance. Opening balance is OD balance. Then see the collections and payments. என்னென்னலாம் collect ஆயிருக்கு? Equity, share capital எவ்வளவு இருக்கு? The calls and arrears collected 50,000. Then X ஏதோ pay பண்ணிருக்காங்க. 20,000 pay பண்ணிருக்காங்க. Then any other collection or payment? By tax paid எவ்வளவு tax pay பண்ணிருக்கோம்? 2 lakh 1 lakh 20. Tax payment போட்டுக்கலாம். Tax paid 1 lakh 20,000. That's all. We have to maintain this 85,000 as a balancing for the issued debentures. For the balance, we'll issue debentures. See, we need this OD காக பைசா வேணும், tax pay பண்ணதுக்கு பைசா வேணும். Closing balance we have to maintain minus 2 lakhs we have to issue debentures. To maintain the balance of 85,000, we need to issue debentures for 2 lakhs. For that, one more entry you can pass. What is entry you'll pass? Bank account debt out to debentures account. How much? Any doubt in it? Opening balance of OD is given. Equity shares, calls and arrear collected. From X, we collected 20,000. Closing balance is required. Tax we need to pay. Closing normal balance we have to maintain. OD balance. The normal balance we have to maintain means for the balance we need to issue which one? Debentures. Something else is asked. Note for revised which one? Capital structure of the company கேட்டிருக்காங்க. Tell me how many equity shares will be there? How many preference shares capital will be? What happened to old equity share capital? 10 each, it is reduced to what? 5 each. 10 each reduced to 5 each. So, old equity shares. How many shares are there? 75,000 shares are there. For the arrears of dividend, 48,000 rupees divided by 5 எவ்வளவு shares தந்திருக்கும்? 48,000 divided by 5 means how many shares? 9,600 shares தந்திருக்கும். Any other place equity shares are used? Old equity shares will continue and the 75,000 shares will continue. For arrears of dividend, why divided by 5 rupees? New values 5 rupees. New values 5 rupees. 9,600 shares. Total எவ்வளவு இருக்கும்? 84,600 shares of rupees 10 each. Or sorry, rupees 5 each. Take it up. How much? 84,600 into 5 rupees each. Preference share capital. Old எவ்வளவு preference shares இருக்காங்க? Old preference shares. So 30,000 shares is reduced to 7.5 each. And anywhere we issued preference shares. எங்கேயாவது preference shares தந்திருக்கோமா பாருங்க. Anywhere we have given preference shares. For debenture holders. Which debenture holder? 9% debentures of the new face value is issued. 9% debentures 1,32,000 கொடுத்திருக்கோம் இல்லையா? How many preference shares would have been given? How many preference shares would have been given? 1,32,000 divided by 7.5. This is given for whom? This is given for whom? Debentures ka. அப்போ எவ்வளவு தந்திருக்கும்? This is only 17,600. Old preference share எவ்வளவு இருக்காங்க? 30,000. So total 47,600 preference shares of how much? Rupees 7.5 each. So this will be 47,600 into 7.5. This will give us total value for the balance sheet. It's a very good question, lengthy question also. They don't ask balance sheet, ಮತ್ತೆ ಎಲ್ಲಾத்தையும் ಕೇಳ್ತಾನೆ. Done? We'll begin revising which one? Buyback of equity shares. It can be tested in theory question. What are the conditions for buyback? They can ask a theory question, or they can ask you a question, a practical question based on that. But 90% chance is that they will ask you only which one? Practical question based on that. What are the conditions for buyback? Only fully paid shares can be bought back. If partly paid up shares are to be bought back, first collect the uncalled amount, make it fully paid up, only then you can buy back. Should be authorized by articles. Defunctional companies or dormant companies are not allowed to buy back. Point number 4, 5, 6 are most relevant for solving the problem. Maximum buyback, how much is allowed? By passing a board resolution, you can buy 10% of shares. By passing a resolution in a general body meeting, you can buy up to 25% of shares. Amount paid on buyback cannot exceed what? 25% of capital and reserves. After buyback, your debt to equity ratio cannot exceed what? 2:1. After the buyback is complete, your debt to equity ratio cannot exceed what? 2:1. Buyback should be completed within what? 1 year of passing the resolution. The shares bought back must be cancelled within what? 7 working days. You must open a separate bank account called as escrow bank account for the purpose of buyback. The buyback shall be in the open market or on a proportionate basis, but you cannot send a member out. Then fresh shares cannot be issued for a period of what? 1 year from the completion of buyback. File the returns with SEBI stock exchanges after completion of buyback. Face value of shares bought back should be transferred to which one? CRR, called as capital redemption reserve. I request you to run through or go through all the points. And for solving examination practical numerical questions, question number 4, 5, 6 are most relevant, or point number 4, 5, 6 are most relevant. I request you to go through. In the last 3 attempts of the new syllabus, every attempt they ensured that they ask a buyback question. Okay, it can be either a descriptive model question or MCQ with 3 options, 4 options, and with 4, 5 questions they ask for. Weightage is minimum 5 marks, maximum 8 marks. Go through this, then we'll continue. In any doubt in any of the conditions, shall we? So you cannot buy a partly paid up share. It should be authorized by AOA. Dormant companies cannot buy back equity shares. What is the maximum buyback allowed? With the board resolution, how much? 10%. With the special resolution in equity shareholders meeting, 25%. Amount paid cannot exceed 25% of capital and reserves. Debt to equity ratio cannot exceed what? 2:1. Buyback, ensure that you are completing within what? 1 year of passing the resolution or within 6 months of public announcement. Cancel the shares bought back within 7 working days. Open a separate bank account, escrow account for buyback. You can do buyback in the open market or on a proportionate basis, 20%, 25% like that, but it should not result in sending out a member. Fresh shares cannot be issued for 1 year from the completion of buyback. 1 year. Necessary return should be filed with SEBI stock exchanges for the same. Face value of shares bought back should be transferred to which one? CRR. So in the fresh shares, for a period of 6 months. 6 months. For a period of how many months? 6 months from the completion of buyback. Shall we? Journal entries, I'll come to that separate after solving a question based on buyback. Come to your handout. Okay, May 2025 question paper or model test paper, just go through. In May 2025 model test paper, this is included as a multiple choice question. Based on this, 4 questions are asked. Each question like 2 marks, like that, 8 marks weightage. We are given equity, share capital, reserves and surplus. What are the reserves given? General reserve, securities premium, P&L account, infrastructure development reserve, then which reserve? Devaluation reserves are given. Shareholders approved the proposal to buy back maximum possible number of shares. In order to induce existing shareholders, it was decided to buy at rupees how much? 25 per share கொடுத்திருக்கோம். Which reserve cannot be used for buyback? Infrastructure development reserve and which one? Devaluation reserves. They are not free reserves. You cannot use them for buyback. Other things can be used for buyback. Pay attention. First, this is May 2000. First, what is the shareholders' funds before buyback? Equity, share capital. How much? 24 lakhs. Do it along with me. Reserves and surplus. General reserve, how much is given? 20 lakh 50,000 general reserve. Then securities premium. Securities premium. What is the balance in securities premium? 7 lakh 50,000 securities premium. Then P&L account we can use. 2 lakhs we can use. So this is the total amount of reserves and surplus. Otherwise we can call it as free reserves. So total equity shareholders funds. This we call it as equity. This is before buyback. How many shares are there?
240. 2 lakh.
So 240,000 shares are there. Let us apply the conditions. What is the first condition? Maximum number of shares can be 240,000 into 25%. Max. 25%. How many shares will come? 60,000 shares will come. So how much will be the amount paid? Amount to be paid will be 60,000 shares. We are going to buy at 25 rupees.
Total 54 lakh. 30 lakh percent.
Amount to be paid will be 60,000 shares into 25. So as per the first condition, when you buy number of shares, how much amount you will be spending? 15 lakhs you will be spending. But amount spent cannot exceed. This we call it as resources test. Amount spent cannot exceed 25% of paid up capital plus reserves and surplus. So 54 lakhs left, we can pay 25%. We can pay 54 lakhs into 25%. How much you can pay? 13 lakh 50,000 only you can pay. Therefore, with rupees 13 lakh 50 divided by 25 rupees we are going to offer now. How many shares we can buy?
We cannot buy 60,000 shares. We have to revise the working. How much?
54,000 shares.
We can buy 54,000 shares. So is it possible to buy 60,000 shares? No, we can buy only 54,000 shares. Then third one is after buyback. After buyback, we have to maintain debt to equity ratio of, what is the debt to equity ratio we have to maintain after the buyback? 2:1. If debt is 2, equity should be 1. Debt funds are given, loan funds are given. What is the loan funds given?
52 lakhs.
This is given, loan funds 52 lakhs. Equity should be
26 lakhs.
26 lakhs. This is after buyback we have to maintain. What is the shareholders funds before buyback?
54 lakhs.
$54 lakhs. After buyback, so surplus, how much is available?
28 lakhs.
So with surplus funds 28 lakhs, per share 20, no problem, that is allowed. Surplus 28 lakhs is there.
No.
We are spending only what? 13 lakh 50. 13 lakh 50 only we are spending. Therefore, buyback of how many shares are allowed? 54,000 shares are allowed. We cannot buy 60,000 shares. If you buy 60,000 shares, you will be spending 15 lakhs. But second condition, restriction in error. You cannot buy more than 54,000 shares. So we can buy only 54,000 shares. Third condition, using the debt equity ratio, do we have sufficient surplus money? Yes, surplus money is available. So finally we are buying back how many shares? 54,000 shares. They are asking you a journal entry, listen to it, logical. Capital will have a credit balance. Avoid short forms in the exam. Equity share capital account. Data. What is the face value of shares bought back? 54,000 into 10.
5 lakh 40.
54,000 into 10. 5,40,000. To equity shareholders account or equity shares buyback account, how much we are going to pay? 13,50,000. 13,50,000 we are going to pay. Excess money can be adjusted with securities premium. Premium on buyback, we'll adjust with which one? Generally, securities premium to the extent available. Securities premium account, debit to the balance available. Balance money, we can take it from which one? General reserve balance amount. 13,50,000 minus 5,40,000 minus 7,50,000. The balance we'll adjust from which one? General reserve. Then pay the money. Equity shareholders account. Data to which account? bank account. How much you have to pay? 13 lakh 50 we have to pay. Then face value of shares bought back will be transferred to CRR. General reserve account, data to which account? CRR account. We'll transfer this 13 lakh 50,000. I repeat, there are 2,40,000 shares into 25% when you buy. You have to pay an amount of 60,000 shares. You have to pay 1,50,000. Sorry, 15 lakhs you have to pay. But second condition restricts the amount paid cannot exceed what? 25% of paid up capital and reserves. So we can pay only 13 lakh 50. With 13 lakh 50, we can buy only 54,000 shares. After buyback, debt equity ratio cannot exceed 2:1. Using this, we need 26 lakhs. We have got 54 lakhs, surplus available 28 lakhs, but we are spending only what? 13 lakh 50, so no problem. If you work out number of shares also, 28 lakhs divided by per share, how much you are paying? 25 plus CRR, how much we need to create? 10. So this many shares we can buy divided by not 25, divided by 35. 80,000 shares we can buy tomorrow. But anyhow, we are not going to buy 80,000 shares. We are going to buy only what? 54,000 shares. $28 lakhs divided by how much of price you are paying? 25. For every one share bought back, we need to create a CRR of what? 10. So 80,000 shares we can buy. So first condition 60,000 shares. Second condition 54,000. Third condition allows up to 80,000 shares. Therefore, buyback, how many shares allowed? 54,000 shares allowed.
So, doubt. Face value of shares bought back should be transferred to CR. That will be
Face value of shares bought back should be transferred to CR. 5 lakh. Correct. Shall we? Come to the next question. This is January 2025 question paper. Go through this. The company decides to buy 20% of equity share capital at 15 per share கொடுத்திருக்காங்க. The buyback is as per provisions of Companies Act, and they ask you to pass necessary resolution, etc. as given. It sold investment 40 lakhs for 32 lakhs. You are asked to apply the tests or just pass journal entry. Pass journal entry. What are the entries you have to pass?
Sale of investment.
They are selling an asset, then buying back the shares. Try பண்ணுங்க. Shall we? What is the entry you will pass? We are selling the investment earlier. What is the entry for sale of investment? Bank account debtor. The loss will be adjusted in which account? Profit and loss account debtor to investment account. We are selling the investment for how much? 40 lakhs of investment. We are selling for 32 lakhs. So P&L account debtor is how much? 8 lakhs. Then we have to buy. How many equity shares we want to buy back?
20%.
So 40 lakhs divided by 10, there will be 4 lakh equity shares. So 4 lakh equity shares into 20% means we are going to buy how many shares? 80,000 shares we want to buy. So what is the entry you will pass? Equity share capital account debtor.
8 lakhs.
80,000 into 10, 8 lakhs. Then to equity shares, holders account, or you can put our equity shares buyback account, like that you can put. We are going to pay 80,000 into how much we are going to pay? 15 rupees we are going to pay. That will be 12 lakhs. So excess money will be adjusted with securities premium. Securities premium account debtor how much? 4 lakhs. Then pay the money to them. What is the entry you will pass? Equity share buyback account debtor to bank account. How much you have to pay?
12 lakhs.
12 lakhs. Then what is the next entry we need to pass? CRR.
Fear, but investments are sell பண்ணிட்டாங்க. Profits இல்லை.
Investment தான் sell பண்ணிருக்காங்க. They have not made a fresh issue. Of course, profits are there in the form of what? Investments, cash balance, bank balance அந்த மாதிரி. Investment தான் sell பண்ணிருக்காங்க. Face value of shares bought back will be transferred to CRR. From where we can transfer? Revenue reserves are there. P&L account இருக்கிறதா எடுத்துக்கலாம். The face value of shares bought back. How much? We can use P&L account also. Done. So sell the investment, transfer the money to equity shareholders, pay the money to them, create CRR to satisfy the legal requirement. Go to the next one, the May 2024 question paper.
சார் இவங்க இவங்கிட்ட நான்
Shall we? First is just a story. Equity share capital, the company has 30 lakhs. Shares of how much? 10 each. What are the reserves and surplus? General reserve, securities premium, P&L account, and which account? Revaluation reserve, which cannot be used. Revaluation reserve cannot be used. Then loan funds are 42 lakhs. The company wants to purchase the shares at what? 30 rupees per share. Try பண்ணலாம். So what is relevant for solving? Equity share capital, reserves and surplus, loan funds, and we want to buy at what? 30. Apply all the three conditions and check. Debt to equity ratio, test, etc. and all they would have given. So try to find out how many shares that can be bought back and pass which one? Journal entry. Live online friends, try to work out all the three. I'm not sharing the screen. Try to work out. Before buyback, what is equity shareholders funds?
82
What is equity share capital? Tell me.
30 lakh,
General reserve,
32 lakh 50,000,
securities premium,
6 lakh,
6 lakhs,
P&L account 4 lakh 30.
total shareholders funds.
72 lakh 80,000.
So how many shares are there? 30 lakhs divided by 10.
Okay, sir.
Total shares, 3 lakh shares are there. That into 25%. Into 25%, na எவ்வளவு shares purchase பண்ணலாம்? 75,000 shares we can buy. If we buy 75,000 shares at market rate, what is the market rate? 30.
30.
How much will be spending?
22 lakh 50,000.
32 lakh.
22 lakh 50,000.
You have to see whether this is allowed as per the second condition. We cannot spend more than 72 lakhs 80,000 into 25%. How much we can spend? 18 lakh 20. With rupees 18 lakh 20,000 per share, if you are paying 30 means how many shares you can buy? 18 lakh 20 is the amount available. Per share 30 rupees now. We can buy 60,666.67 shares. 60,666 shares purchase பண்ணலாம். After buyback, if debt is how much? Debt is how much?
42 lakh.
42 lakhs. Equity 1 should be how much?
21 lakh.
So 21 lakhs we have to maintain. Before buyback, how much of surplus funds are there? 72 lakh 80. After buyback, we have to maintain 21 lakhs. We have to maintain how much? 21 lakhs. So surplus funds
51 lakh 80.
51 lakh 80,000. Fifty-one lakh 80,000 divided by
40.
price is how much? 30 plus CRR for 10. 40.
1 lakh 29,900 shares.
So we are not going to buy this much. We are going to buy only this much. So equity share capital will be like 60,666 into 10. Whichever is less. Therefore, the company can buy how many shares?
60,667.
This will be into 30 rupees. 60,666. Securities premium is available to the extent of 6 lakhs. Balance we can use it from general reserve. Pay the money. 667 போட்டீங்கன்னா you will be paying more than 18 lakh 20 ஆயிடும். Any doubt in it? Wait 1 minute of time. Next, try RTP May 2024. The next question. For taking up this, try the next question. Already the decision has been given to buy 15,000 shares at the rate of what? 15. They are selling all the investments. They achieve the target of buyback. They make a bonus issue. It will be more like this question. Try பண்ணுங்க. I'm not sharing the screen live online, friends. Try to work out the journal entry. So how many shares we are going to buy? How many shares we are going to buy?
15,000.
So journal entry pass பண்ணும்போது 15,000 at 10, equity share capital will be 1,50,000, but we are going to pay 15. Excess money you will adjust with which account? Securities premium account. We are selling investment for this purpose. Investments are having a book value of 2 lakhs. Check your balance sheet. Investments have a book value of how much? 2 lakhs. We sold for 2 lakh 50. Now what is the profit on sale? 50,000. Pay the money to them. Equity shares buyback account it out to bank. What is the face value of shares bought back? 1,50,000. That will create CRR. Face value of shares bought back is transferred to which one? CRR. Now listen for a minute, then you can continue. Everybody paying attention. It is given, we are making a bonus issue. Look at this. 1 share of rupees 10 each. 1 share of 10 each for every 8 equity shares. How many shares were there before buyback? 1 lakh shares were there. In that, how many shares we bought back?
18,000.
Balance all
85,000.
into 1 by 8. This many shares we have to give it as bonus shares. Out of 1 lakh, 15,000 we bought back. How much?
10,625.
This many shares we have to give it as which one? Bonus issue. Wait. Why CRR is created? For making what? Bonus issue. So, bonus issue 85,000 shares into 1 by 8 quota. You will get how much? 10,625 shares into 10. We need 1,06,250. How much is available in CRR? We have more than required amount available for CRR. What is the entry you will pass? CRR accounted out to bonus for equity shareholders. Then bonus for equity shareholders to what? Equity share capital. Suppose if the requirement is 2 lakhs, what you would have done? Bonus issue requirement 2 lakhs. CRR 1,50,000, use it fully, then you can take it from what? General reserve. Securities premium you can take up this. So complete this and try RTP 2024, that question. Question? This question, September 2024 question, RTP, you try. Any doubt in the last one? Any doubt in the last one? You are going to try the full question. I will not talk for next 10 minutes. You try to work out the next question, then I'll do. Or I'll check. Four lakh of its fully paid up equity shares of 10 each are 22 per share. Okay. This buyback is in compliance with provisions of Companies Act and does not exceed what? 25% of paid up capital. For this purpose, it issued 1,11% preference shares. Entire amount is being applicable with an application is given. The company uses 16 lakhs of its balance in securities premium, adequate balance in general reserve to fulfill the requirement of buyback. Past journal entries to record the above transaction. Only journal entries they test.
Sir, the 4 lakh shares then.
4 lakhs more than 4 lakh.
Rupees 4 lakhs of 4 lakh shares.
What a 4 lakhs of it's fully paid up equity shares.
What is that?
But 4 lakh by 10, 40,000 equity shares.
Rupees 4 lakhs in Kurklanga. 4 lakhs of its fully paid up equity shares. Number of shares.
Fully paid up 10 lakh. Now, 4 lakh what do we are buying?
4 lakhs share fully paid up share purchase பண்ண போறோம்னு அர்த்தம். 4 lakh fully paid up shares அர்த்தம். The company may have 40 lakh fully paid up shares. அதுல 4 lakh shares நம்ம purchase பண்ண போறோம். rupees னு கொடுத்திருக்கானே என்ன?
ஆனா நம்பர் தான் கொடுக்கலையே.
அது
நம்பர்னு கொடுக்கல நம்பர் தான். rupees னு கொடுத்தா தான் rupees. Good morning. Sorry. Okay. So what is the entry you will pass for that? Bank account data for the issue of preference shares. Bank account data to application account அந்த மாதிரி வேணலாம் போடலாம், டைரக்டாவும் கொடுக்கலாம். Preference share capital account. How much? 11% preference share capital account. How much?
10 lakhs. 1 lakh into 10.
1 lakh into the number தான். 1
The
lakh
number
into 10.
is the number because 1 lakh 11% preference shares of 10 each and part. அதுல என்ன 4 lakhs of its fully paid up equity shares.
Of rupees 10 each கொடுத்திருக்காங்க அங்கேயும். 4 lakhs of its fully paid up shares of rupees 10 each. அப்போ 4 lakh shares of rupees 10 each. 10 lakhs. அதிகமா படிக்கக்கூடாது. Then 4 lakh into 10. 4 lakh into 10 it will be 40 lakhs. How much we are going to pay?
80.
4 lakhs into 22.
88 lakhs.
88 lakhs we are going to pay. Excess will be adjusted with which account? Securities premium to the available extent. Securities premium how much? 16 lakhs available. Balance we will take it from which account? General reserve account data. Balance how much?
32 lakhs.
32 lakhs. Pay the money to them. Okay, how much of CRR you have to create?
13.
This is where you have to be careful. Capital bought back is 40 lakhs. It is not everything is out of profit. For buying back rupees 40 lakhs of capital, we made a fresh issue of how much? 10 lakhs. Now we have to create 30 lakhs of CRR. Law is very, very clear. Face value of shares bought back. Buyback condition, last condition paranga. Buyback condition. Face value of shares bought back out of profit should be transferred to CRR. What do you mean by out of profit? To the extent profit is used, you have to create CRR. You have to create which one? CRR. We redeemed 40 lakhs. For redemption of 40 lakhs, we made a fresh issue of 10 lakhs, which means 30 lakhs of profits are used. For that, you create which one? CR. Only 30 lakhs of profit is used. For that, you create CRR. Next part. Or shall we? Next part. Any doubt in creating CRR? 40 lakhs we redeemed or bought back. Out of that, 10 lakh is out of fresh issue. Balance 30 lakhs, you create CRR. Next. September 2024 question paper, go through. Please go through. This is RTP, next question paper. Do they ask you to just pass journal entry or check the condition?
Check the condition.
Check the condition. Then you have to check the condition and pass journal entry. Tell me equity shareholders funds before buyback. Equity share capital how much?
600.
600,000 அப்படியே வச்சுக்கலாம். General reserve in thousands வச்சுக்கலாம். General reserve 540,000. Securities premium
200,
200,000. P&L account
100.
100,000. We cannot use which one? We cannot use which one? Revaluation reserve, statutory reserve, infrastructure development reserves we cannot use. So total so 600,000 divided by 10 எவ்வளவு இருக்கு 60,000 shares are there. 60,000 shares are there into 25% quota. 15,000 shares will come. But the company wants to buy only 14,000. Let us see other conditions also. It will come to 15,000 shares. So 15,000 shares into 30 rupees. How much you will pay?
450,000.
4 rupees 450,000. But amount spent cannot exceed 1440 into எவ்வளவு percentage?
25.
Into 25%. 1440 into 25%. You can spend only this much. So with rupees 360,000 per share we are buying at 30 means how many shares possible? So we cannot buy 15,000 shares, we can buy only what? 12,000 shares. Debt, how much is there?
2,000.
Equity should be
1,000.
so if we go before buyback, we've got 1,440. After buyback, we should maintain 1,000 means surplus 440 is there. 440 divided by price plus CRR. We can buy only what? 11,000 shares. For this, we have to pass journal entry. So we cannot buy 14,000 shares. 11,000 shares into 10. But we are paying 11,000 into 40. So what is the excess amount paid? Securities premium, how much balance is available? 200 only available. Balance you adjust from general reserve. Balance how much?
$130.
Pay the money 440. Face value of shares bought back, transfer to which one? CRR. So in the exam, they'll ask you that apply the conditions and how many shares can be what? Bought back. And the Mari model is most repeated. Yes, ma'am. Huh?
11,000 30 rupees
Yeah, correct. 330 the already. Correct. 11. That is 11,000 into 30. Correct. 330 only. Balance
20.
the question. What they ask you? They have not asked any journal entry. Okay, your working can stop here. Journal entry is not asked. Only this much is tested. What is the next one?
Cash flow.
Cash flow.
Cash flow statement. I'll do tomorrow because the other faculty has not turned up for 11:30 class. That I will do tomorrow. Tomorrow we'll start little early. We'll start little early so that one shot or one go we can do which one? The cash flow statement. Okay. We'll start a little early.
We'll begin revising which one? Amalgamation chapter. Before we start, there are two types of amalgamation. One is which one? The nature of merger, another one is in the nature of purchase. The nature of purchase, we also call it as which one? Absorption or acquisitions like that. Okay. So, for example, A Limited taking over the business of B Limited can be in the nature of merger or can be in the nature of what? Purchase or absorption. If it is to be a merger, there are certain conditions to be fulfilled. What are the conditions to be fulfilled? All assets and liability should be taken over at what value? Book value. All assets and liability can be recorded at book value, and all assets of selling company, liabilities of selling company must be taken over by which company? Purchasing company. Even if one liability is paid, that is not merger. Then purchase consideration pay should be paid only in the form of which one? Shares. Minimum 90% of shareholders in selling company should agree to become what? Shareholders in purchasing company. Then business of subsidiary company, the selling company should be continued. Only when all these five conditions are fulfilled, we call it as which one? Merger. Okay. What is the purchase consideration? As per AS 14, amount payable by the purchasing company to the selling company, okay, to the shareholders, equity shareholders plus preference shareholders plus arrears of dividend if any, only this much should be taken as purchase consideration. When you are discharging debenture holders, when you are discharging creditors, when you are discharging other liabilities, that should not be taken as what? Purchase consideration. What is purchase consideration? Amount payable by the purchaser to whom? The seller. Okay. Anything that is paid to the owners of the selling company. Who are the owners? Shareholders. It includes preference shareholders also. For example, purchase consideration is paid in the form of cash. Then it will be called as the nature of which one? Purchase. Which one you will take? Whatever is paid to equity shareholders, preference shareholders, plus what? The arrears of dividend, if any, you can take it. Then, how to calculate purchase consideration? It can be based on market price. Okay, market price of the seller divided by market price of the buyer into number of shares. For example, your market price is 400, my market price is 200, means I will give you 2 shares for every 1 share. If there are 1 lakh shares, I will give you 2 lakh shares. Okay. Suppose if the market value of the seller is 100, market price of the buyer is 200. For every 1 share in your company, I'll allot what? 0.5 shares, like that. Lump sum method, the purchase consideration will be given in the question itself. Okay. Sometimes they will give you how much is paid. How much is paid is the total of amount payable to whom? Equity and preference shareholders. Do not include consideration payable for which one? External liabilities like debentures, creditors, loans, expenses, and other things. If these things are not clear, then we'll go for which method? Net assets method, where suppose if they tell you the amount due is paid or amount payable to equity shareholders is paid, like that, if it is given, then we'll go for which method? Net assets method. If payments are not clear, if the amount is not clear, then go by which method? Assets minus liabilities will give us net assets. Net assets will be the purchase consideration. Okay. So intrinsic value, simple. It's an extension of net assets method. Net assets divided by number of equity shares will give us what? Intrinsic value. Then the shares can be allotted based on intrinsic value. Okay, these are the methods in which we work out what? Purchase consideration. If they tell that shares are exchanged based on market price, go for the first method. If they tell that the shares are allotted with the lump sum amount like 5 crore, 10 crore, go for the second method. If they give you how much is paid for equity shareholders, preference shareholders, like that separately given, go for which method? Net payment method. If the payments are not clear, then go with which one? Net assets method. Extension of net assets method will give us what is the value of the shares of the company. Based on that, the shares can be allotted. Done. So how to identify in a question, is it merger or purchase? How to identify in a question, is it a merger or purchase? Depends on whether the conditions are satisfied or not. You look at the journal entry between merger and purchase will be different. First entry will be same. What is the first entry? Business purchase to liquidator of selling company. That is common for both merger and what? Purchase. For the assets and liabilities taken over, merger, everything will be taken over at what? Book value. Please remember, land, building, plant, machinery, or data, stock, everything. Even miscellaneous expenses like preliminary expenses will be taken over at what value? Book value. All external liabilities, reserves and surplus, even reserves and surplus will be taken over at book value to business purchase. The balancing for will become which one? General reserve in case of merger. In case of purchase, we will take over only assets at what value? Revised value, market value, all your fixed assets and current assets. Miscellaneous expenditures, in merger only it will be taken over. In purchase, it will not be taken over because they will not have a value. We will take over only which value? Which one? External liabilities at what value? Revised value. Resource and surplus of selling company will not be taken over because we are just absorbing assets and which one? Liabilities only. Miscellaneous expenses and resource of selling company are not to be taken over. The balancing for will be either goodwill or which one? Capital reserve. So major difference comes in the second entry. Please go through this. If it is merger, all assets, all assets. For example, let us assume it is not a merger problem. Okay, all assets at what value? Book value, fixed assets, current assets, trade receivables, cash and bank, everything will be taken over at what value? Book value. Okay, and the liabilities. What do you mean by liabilities? Even trade receivables, credit, even P&L account will be taken over at what value? Book value. That is the balancing for will be what? A general reserve. But in case of purchase, we will take over assets at what value? Absorption, revised value. Then external liabilities only will be taken over. Don't take over which one? Miscellaneous expenses. Reserves and surplus of selling company will not be taken over. Capital reserve will become a balancing for, or goodwill will become a balancing. Then settlement of purchase consideration, same entry will come. Liquidator of selling company account data to whatever is given. Even in merger, for fractional shareholders, if it is coming to 2.75 shares, we cannot give 0.75 shares. That time what we can do? We can give it in cash. Then any doubt in it? Any doubt in it? Because second entry is what you have to observe a lot. Merger na everything at book value. Okay. Assets which are having some value, that is revised value, which will be taken over. Okay. External liabilities as well as reserves are taken here. Only external liabilities will be taken over at what value? Revised value. In purchase, we will not take over reserves and miscellaneous expense of which company? Selling company, because when you purchase a business, you are purchasing only what? Assets and liabilities. The balancing for, if you pay more goodwill, if you pay less, it is capital reserve. That's it. No, general reserve will be taken as a balancing. We will take over all P&L account, securities premium, all capital reserve, all the other reserves. General reserve alone will be taken like a shock absorber, balancing. Here, no such issue. The balancing for either becomes goodwill or which one? Capital reserve. Settlement of purchase consideration, same. Sometimes you have to maintain selling companies' reserves. Why? Certain reserves are statutory in nature or compulsory in nature. To maintain such reserves, no entry is required because it is automatically maintained. Second entry partner, we take over which one? Infrastructure development reserve or statutory reserve, we will take over. It is automatically maintained, so no need to pass any journal entry. But in purchase, reserves and surplus are not taken over. So we create a separate entry called as what? Amalgamation adjustment account data to which account? Statutory reserve account. Suppose if liquidation expense of selling company is borne by the purchasing company, liquidation expense of which company? Selling company, borne by which company? Purchasing company. Now what will you do? Simple. It will be adjusted with which account? General reserve account, data to cash or bank. Here, which one is becoming a balancing figure or shock absorber? Goodwill or capital reserve? We'll adjust with goodwill account data to which account? Cash or bank. Suppose in the first entry, if the gap is capital reserve, we'll adjust with which one? Capital reserve. Goodwill or capital reserve account data to which account? Cash or bank account. Like that, we will pass. Then come to this question. P Limited and Q Limited were carrying on the business of manufacturing auto parts. I request you to read the question. The- Hello. Hello. Collect பண்ணிட்டாங்களா? தெரியலையே, அவன் கிளம்புனான்னு தெரியல. வெளில வச்சிருந்தாங்க. சும்மா சரி, சும்மா ஒரு கவர்ல போட்டு. Read the question in full, then we will solve. New company called, which company will be formed? EQ Limited will be formed. I request you to go to the adjustments especially. Read the adjustments especially. We are given the book value of assets. Assets are taken over at book value. No, except the items detailed below. Goodwill is revalued, furniture is revalued. Okay, debtors is revalued, debentures are changed. Is it merger or purchase? Is it purchase or merger? Purchase. It's going to be what? Purchase. Amalgamation nature of purchase. How to pay the purchase consideration? It is given. Issued at part to the shareholders of existing companies. We are not given clearly how the purchase consideration is discharged. So we will pay by which method? Net assets method. Assets minus liabilities. Start. Amalgamation in the nature of purchase. Purchase consideration by which method? So let us work out for P limited and which one? Q limited. For examination point of view, do not do this. Balance sheet you have to prepare properly. Total will become balance sheet for which company? They don't ask journal entry. They don't ask journal entry ego. Check is the journal entry tested? Only in the books of selling company they ask journal entry. Journal entry is asked in the books of which company? P limited to close. Okay. PQ limited balance sheet only they ask for. They don't ask any journal entry, so we can directly do that. Start. Assets taken over. Balance sheet it will come as of course assets. What are the assets? Goodwill, revised value. Take the revised value of goodwill. What is the goodwill value? 50,000 Q limited. So total will come for balance sheet. Then furniture and fixtures. Any revised value given? Furniture and fixtures. P limited 0. Q limited. Wherever revised value is given, take the revised value. Then what is the next one? Plant and machinery. Q limited. Then building. No revised value. Then which asset next? Inventories. I hope same book value. 1,35,000. Then 44,000. 1,42,000. Then cash at bank. Look at this. Debtors of P limited are realized fully. Bank balance of P limited are to be retained by liquidator ன்னு கொடுத்திருக்கோம். And sundry creditors are paid out of the proceeds thereof ன்னு கொடுத்திருக்கோம். So what to do? Trade debtors of P limited are realized fully and bank balance of P limited are to be retained by liquidator and sundry creditors are paid out of proceeds thereof ன்னு கொடுத்திருக்கோம். So trade receivables are not taken over by the purchasing company. It is left with the liquidator of selling company. It is simple. Debtors you collect, bank balance you retain. With that you pay the creditors, which means purchasing company is not taking over what? Purchasing company is not taking over debtors, bank balance, and which one? Creditors. Who's taking care of paying? Look at the sentence once again. Liquidator is taking care of paying. Look at this. Debtors of P limited realized fully. That means liquidator realizes it. Bank balance of P limited is retained by liquidator and sundry creditors are paid with the proceeds thereof means, okay, the liquidator are taking care. So cash and bank is not taken over. For the other company it is 58,000. Total 58,000 will come. This is total of assets for your balance sheet also. Then what are the liabilities taken over? Debentures of P limited are to be discharged by the issue of 8% debentures in PQ limited at a premium of what? 10%. Look at the debentures of P limited. Debentures of P limited, how much is there? We are going to pay at a premium of 10%. So 8% debentures. at a premium of 10%. How much it will be? 1,21,000. There's no debenture with other company. 1,21,000. Then trade payables, P Limited will not be taken over because they collected trade receivables, cash and bank they retain. With that, they have to take care of paying which one? Trade payables. So that is not taken over by the purchasing company. The other one, 1,40,000. So this is the total of liabilities taken over. So net assets become which one? Purchase consideration, that becomes share capital. So when you prepare balance sheet, this furniture, building, plant and machinery will come as which one? Tangible assets. Non-current asset la PPE. Tangible assets vandrum. Goodwill will come under which one? Intangible assets. Inventory, trade receivable, cash and bank balance will come as which one? Current assets. Then debentures will come under which one? Long-term borrowings. Trade payable will come under current liabilities. Of course, this will become which one? Share capital. The examination, they expect you to prepare the balance sheet. So please do that fully. Any doubt in this? Any doubt in this? Assets minus liabilities becomes which one? Net assets, that becomes purchase consideration, that becomes share capital. So share capital 7,54,000, long-term borrowing 1,21,000, trade payable 1,40,000. Inventory, trade receivable, cash and cash equivalents, current asset lo vandirum. Furniture, plant and machinery and building will come under which one? Plant, property, equipment, tangible assets. Goodwill will come as which one? Intangible assets, and you can close. In the books of which company they ask for? P Limited, that is selling company, they ask you. Okay, I'll come to that later. We'll prepare ledger accounts. Okay, I'll come to the selling companies part later. So leave a page gap. Leave a page gap. I'll come back to it later after doing some problems in which company? Purchasing company. Any doubt in this? Any doubt in this? For selling company, we'll prepare which account? Realization account. Then we'll prepare purchasing company account, PQ Limited account. And we'll prepare which account? Equity shareholders account. No preference shareholders in this question. We'll prepare equity shareholders account. This part, I'll come to that later. Okay. For that, I request you to leave one page gap. Leave one page gap for preparing realization account, PQ Limited account, and which one? Equity shareholders account. Let me revise selling companies books and come to it. Journal கேட்டிருக்காங்க. Without doing ledger, we cannot do journal because we want profit or loss and realization. Yeah, without knowing profit or loss and realization, how to close which account? Equity shareholders account. So we need to prepare ledgers. Then based on that, I'll tell you how to pass journal entry. It is simple to pass journal entry, but leave a page gap. Let me to come to selling companies division separate. Any doubt in question number one? If you look at in the exam, it appears like a big question. Page number 1, page number 2, then adjustments, pata. It's a big question. It may be tested for 10 marks. Okay, but answer is very, very simple. Assets minus liabilities gives us which one? Net assets. Apart from this, you have to do one more answer. What is the answer? That balance sheet you have to prepare. Proper balance sheet you have to prepare. Shall we? So for selling company, please leave a age gap. Live online, friends. Have you copied it? Shall we proceed? Read the second question. Balance sheet of Srishti Limited is given. Then Anu Limited agrees to absorb the business of which company? Srishti Limited with effect from 1st April 2014 is given. Purchase consideration is settled by Anu Limited as agreed கொடுத்திருக்காங்க. Then 4,50,000 equity shares of 10 each is given. Cash payment 2.5 is given for every share. Whether the payment is very clear? Yes. Payments to equity shareholders are very, very clearly given. How many shares are allotted? How much cash is paid? Both are given to us. Suppose which method? Net payment method. Purchase net payment method. Since cash consideration is involved, it is amalgamation in the nature of what? Purchase. So debenture holders are paid at 96%, but we are going to pay the premium at what? 20%. We are going to pay them at 20%, but we are allotting our debentures at 96%. You have to see this. Tangible assets 100% more than the book value. Stock at 7,10,000. Debtors at face value. Subject to a provision of doubtful debts is given. Cost of liquidation has to be reimbursed by what? Anu Limited to the extent of what? 50,000. Purchasing company bears what? Selling company's liquidation expenses. Statutory reserve has to be maintained for 1 more year. I told you the selling company will come to that later. In the books of purchasing company, they ask you to pass journal entry. For in the books of which company? Purchasing company. Selling company, yes, we'll come to this. The books of selling company, these ledger accounts, we'll do that. Okay. The books of who's the selling company? Unlimited account. We'll come to that later. For that, leave one page gap. Start. In the books of which company? Anu Limited. Amalgamation. The nature of purchase. Amalgamation in the nature of purchase. Purchase consideration. Which method? Net payment method. Equity shares. How many equity shares are given? 4,50,000 equity shares into 15. It's issued at 15 rupees. Then cash payment. How much cash payment? Uh, 30 lakhs divided by 10. 3 lakh shares are there. We have to pay 2.5. 7,50,000 we need to pay. This is the total consideration. What is the journal entry you will pass? Business purchase account data to liquidator of Srishti Limited. Pass the entry along with me, don't wait. 7 lakh, 75 lakhs. In the exam, you have to give narration. Unless otherwise they say no narration required, you must pass which one? With narration only. Next, for the assets and liabilities taken over. What is the entry you will pass? Tangible fixed assets account data. It is revalued at how much? 100% more than the book value. Book value 30 lakhs, so it is taken over at what? 60 lakhs. Then stock account data, which value? Same book value. Oh, revised value 7,10,000 given. Then debtors account debit minus எவ்வளவு percent provision? Debtors account debit after adjusting minus 5%. Or you can show provision for bad debts separately also. Debtors account debit to provision for bad debts also you can do. Debtors account minus 5%. 1,80,000 minus 5% will be 1,71,000. Then debtors account debit over. Then cash or bank account debit. How much? 2,80,000. It is purchase. Will you take over preliminary expenses? If it would have been a merger, we would have taken a preliminary expense also. Leave a line gap that may be goodwill or capital reserve. 2. What is the thing? Debentures. As of now, let us record 9 lakhs. As of now, let us record 9 lakhs. How we are settling, we will see that later. As of now, let us record 9 lakhs. Then sorry. Check the total. Check the total of the balance sheet. So, I mean, it was a past exam question paper. Is it? Oh. Yeah, we are paying at a premium of 20%. It will be 5 lakhs plus 20%. 6 lakhs. 5 lakhs plus 20%. It is 6 lakhs. Then what else will come? Creditors. Creditors how much? 1 lakh. Creditors 1 lakh. Then business purchase. Business purchase 75 lakhs. Balancing for check, is it goodwill or capital reserve? I hope goodwill will come. Ten lakh 39,000 goodwill. Then We are settling the purchase consideration. What is entry will pass? Liquidator of selling company account data. Liquidator of selling company account data. How much? 75 lakhs you have to pay. To equity share capital, hand out it. To equity share capital, face value only will be recorded. 4 lakhs into 10. 4 lakhs into 10, how much? 40 lakhs will come. To securities premium. To securities premium, 4 lakhs into 5. 4 lakhs into 5, 20 lakhs. To cash, how much we are paying? To cash, how much we are paying? 7 lakh 50,000 we are paying. Then, these are the base 3 entries. What are the additional entries that will come? Statutory reserves have to be maintained for 1 more year. For that, what we will do? Amalgamation adjustment account data. To export profit reserve account. Amalgamation adjustment account data to export profit reserve account. How much? 8 lakh 50,000. Then it's not over. Liquidation expenses. How much is there for the selling company? 75,000. But we are not paying in full. But we are agreeing to pay only 50,000. If liquidation expense of selling company are borne by the purchasing company, na, in case of purchase, we'll adjust with goodwill or capital reserve. In case of merger, na, we'll adjust with which one? General reserve. So goodwill account data to cash or bank. How much we agree to pay? Only 50,000 will come in our books. In the exam, please, if nothing is asked, you must write which one? Narration. Now, this debenture holders, debenture holders, are they settled at par value? No. Amount due for debenture holders. Amount due for debenture holders, how much? 6 lakhs. Are we giving at 100 rupees? No, we are giving at what? We are giving at 96. We are giving at what? 96. How much you have to pay? Debentures account data for the old debentures. What is your obligation? How much? 6 lakhs. You are giving our debenture. What is a debenture? 9% debentures. Okay, sorry, 8% debentures. How much value? What is the discount on issue? We are allotting debentures at what? 96. So what would have been the face value? Face value would have been 6 lakhs into 100 by 96. How 100 by 96? If 6 lakhs is discharged at 96, what is the face value? 6 lakhs 25,000 is the face value. So to debentures 6 lakhs 25,000 face value we give. Discount on debentures will be 25,000. Otherwise, you can work out like this also. 6 lakhs divided by 96. How many debentures to be given? 6 lakhs by 96. 6250 debentures to be given. So which is 6250 into 100. This is a discount of 4. 6250 into what? 4. Like this also you can work out. First work out number of debentures to be allotted, then based on that you allot the debentures. So I repeat the whole process. Purchase consideration in the form of equity shares and cash payment. Then business purchase to liquidator of selling company. We take over all assets and liabilities at revised value. So it is purchase. So debit, goodwill, balancing figure. Liquidator of selling company to whatever is given. Capital with premium, cash. Since we have to maintain the selling company reserves, amalgamation adjustment account data to which one? Export profit reserve. We bear a part of liquidation expense of selling company, goodwill account data to bank. Then we are issuing debentures. We have to pay 6 lakhs, but he allotted at 96 means we have to give what? 6,250 debentures at 100. The balance is what? Discount on issue of debentures. As I told you, I will come to the selling company later. The books of selling company, we will come to that after solving one more question or two more questions like that. Any doubt in it? Shall we? Please leave one page gap for selling company. The books of selling company, I'll come to the realization account separate. Requesting you to go through the third question. After copying this, please read the full question, especially the adjustment. Two companies are given. They want to merge in the form of which one? Abhilasha Limited கொடுத்திருக்காங்க on 1/4/2015. Goodwill we have to value based on what? 2 years purchase of super profit. Normal rate of return, combined capital of reserve is given. All other reserves are ignored for the purpose of goodwill. Average profit is given to us. Land and building, plant and machinery, both the companies are valued at 10% above the book value. Provision 10% for debtors is given to us. Then debentures to be redeemed by the issue of what? Preference shares. Debentures to be issued by the issue of preference shares. Creditors are taken over at book value. There is an unrecorded liability of Asha Limited, 15,000. How much is given? 15,500 is given. Bank balance of both the companies are to be taken over to be by Abhilasha Limited after taking liquidation expenses to be borne by Abhay and Asha in the ratio of what? 2:1, which means 60,000 left. First company should bear 40,000, second company should bear what? 20,000 on the mark. Okay. Compute the basis on which shares will be given. Draw the balance sheet after amalgamation like that they've asked for. Read the adjustments especially carefully, then we'll work out. How to value the goodwill? So the valuation problem and all we have not seen, but in the CA exams they can ask you. How to value goodwill? 2 years purchase of super profit. What do you mean by super profit? Whatever is earned more than the normal profit, more than the normal profit. What is how to calculate normal rate of return? 10% of combined capital and which one? Reserves. Okay. This is question number 3. Amalgamation. First, let us value the goodwill and proceed. Start. What is the average profit given? What is the average profit given in the question? 2,75,000. And please do it along with me. We not wait. 1,75,000. Then, how to work out normal profit? 10% of share capital plus general reserve. 10% of share capital plus general reserve. Share capital plus general reserve. 15 lakhs plus 2,75,000 into 10%. How much? For the other company, 10 lakh plus 1,25,000. 10 lakh plus 1,25,000 into 10%. So difference will give a super profit. So based on that, we have to value the goodwill. Goodwill out value super profit into how many years? 2 years. Super profit into 2 years purchase of super profit. 97,500 into 2 years. 97,500 into 2 years. Then we can add other assets. It will come in the balance sheet also. So add up all the other assets minus liabilities will give us net assets. That is purchase consideration. Try pannu. We are going to work out the complete purchase consideration. Correct. So complete all the other assets and liabilities. Add up all the other assets minus liabilities, it will give you what? Net assets. That is purchase consideration. Try பண்ணுங்க. Debtors are taken at book value. எவ்வளவு percentage? Then bank balance after deducting on the 40,000 and 20,000. It's given 60,000 to be borne in 2:1 ratio. Deduct 40,000 and 20,000 and take it. What about land and building, plant and machinery? Are they taken at book value or more than the book? You work out, then tell me the values. One lakh plus 1,25,000. Oh, 10 lakh capital. Okay, correct. What is the land and building value? Debtors after eliminating 10%. Minus 10%. Bank balance after deducting 40,000 and 20,000. After deducting that 40,000. Huh? This will give us total of assets. Less creditors. Creditors எவ்வளவு இருக்காங்க பாருங்க. First company 55,000. Second company 55. Then unrecorded liability. Liability. How much? Then any debentures, etc. Debentures also. Like 75,000. If you prepare the balance sheet, this land and building, plant and machinery will come as which one? Tangible fixed assets. Goodwill will come as intangible asset. Inventory, debtors, bank balance will come under current assets. The creditors, of course, trade payable on the liability also. Debentures will come under which one? Long-term borrowing. The purchase consideration will become which one? Share capital. Number of shares. You want number of shares? This divided by, we are issuing at 100 rupees. Right? This debentures also will become preference share capital. This debentures, the new balance sheet, will be recorded as which one? Preference share capital. Debentures are given with preference shares. So in the new balance sheet, it will be coming as which one? Preference share capital. Share capital, what will come? This purchase consideration and which one? Both will come. Then director, current liability. Current liability, the trade payable will come. This creditors and liability. Asset side, non-current assets. Land, property, equipment, tangible assets. Tangible assets, this land and building plus plant and machinery will come. Intangible asset like goodwill will come. Current assets, current asset like inventory will come. Then trade receivables, cash and cash equivalents. So please do it in a proper form in the exam. One minute. See, they don't ask you in the books of selling company. They ask you in the books of which one? Purchasing company only. We'll do question number 4. Then we'll come to which company? Selling company. Read, try to work out purchase consideration. First 3 questions I was working along with you. Fourth question, you are going to try which one? purchase consideration, then I'll check the answer, then we'll go for journal entry, then we'll be preparing balance sheet. We'll be preparing the balance sheet. Try பண்ணுங்க. Because it is amalgamation in the nature of purchase. So we will not take over what? Reserves and surplus. Purchasing company records only these assets and liabilities. Live online friends. Have we copied this question number 3? Okay. Try that question number 4, purchase consideration first. Question number 4, என்ன method use பண்ணுவீங்க? Which method for purchase consideration? We are given revalued assets and liabilities. The compute basis on which shares will be given, like that they asked for, which means which method? Net assets method. Net assets method. Try பண்ணுங்க பார்க்கலாம். Assets minus liabilities will give us purchase consideration. What is the name of the company? A Limited and which one? 1,40,000 and B Limited 40,000. Freehold property. Then debentures. How much you get? This will become share cap club new company. Of course, these three assets will come as tangible fixed assets. Goodwill, of course, intangible asset. All these things will come. Do they ask you to pass journal entry? Yes. Please pass separate entry. Don't combine and pass. For A Limited separate entry, B Limited separate entry. Try பண்ணுங்க. Business purchase upon data to liquidator of A Limited. How much? 8,70,000. இதுதானே? The books are AB Limited, no? Purchasing company. 8 lakh. Then assets. Example, don't do short forms. The separate entry தான் pass பண்ணணும். Don't combine. A limited 3 entries, B limited 3 entries தான் pass பண்ணணும். Don't combine. Because இந்த ப்ராப்ளத்துல ரெண்டுமே goodwill தான். Sometimes ஒரு கம்பெனில goodwill இருக்கலாம், another company there may be captive loss. அதனால don't combine. Same set of entries, 3 more entries you pass for which company? Acquiring B limited. This is for acquiring A limited. 3 entries you pass for acquiring B limited. You don't ask selling company, leave it. After this, read and understand question number 5, we will solve. That requires a deeper understanding before we solve. After that, then we'll move to which company? Selling company. After question number 5, we'll move to which company? Selling company. Okay, selling company standard 4 ledger accounts. So we'll start that question number 5 as a base for which company? Selling company, because a lot of entries are there in the books of selling company. So try to pass 3 more entries or 3 set of entries for acquiring which company? B limited. Same business purchase to liquidator of B limited. B limited, how much will come? 3,84,000. Then same assets and liabilities taken over, entry pass. Will not come. But both are separate acquisitions. You have to do it separately. One. That is what is recommended in your suggested answer. As well as both are acquired separately. We follow them. Two separate transactions. Done? Shall we? Fifth question, one of the lengthy question that was tested in the past examination. Read. Balance sheet of which company is given? A limited, then balance sheet of B limited is given. Look at that. AB limited with an authorized capital 36 lakhs. That is 60,000 preference shares and 3 lakh equity shares of 10 each is given. A Limited will purchase, AB Limited will purchase whole of assets of which company? A Limited, except what? Cash and bank balance for rupees 28,25,000 to be settled in 5,75,000 in cash, balance in 1,80,000 equity shares of 12.5 each. Wait, are they taking over all assets? No. Assets except which one? We are going to pay 5,75,000 in cash, balance in equity shares. B Limited also, we are going to take over only assets except cash and bank balances for 4,91,000. 16,000 in cash, balance 38,000 equity shares of 12.5 each is given. Both will be wound up. Liquidator will distribute shares of AB Limited amongst equity shareholders. Will pay preference shareholders 12 rupees in cash for what? Every shares held கொடுத்திருக்காங்க. This is in the books of which company? Point number 4, point number 5 are in the books of which company? Selling company. How selling company is settling the obligations? Like that it is given. Then we made a public issue of 60,000 cumulative preference shares. 30,000 shares at the rate of 12.5 is given. Cost of liquidation will be 10,000 in case of A and 5,000 in case of B. Preliminary expenses of AB Limited will be how much? 24,000. Underwriting commission 38,900. Pass, prepare initial balance sheet, and all assets other than goodwill is taken over at what value? Book value is given to us. Goodwill, the balancing for we have to take it. Goodwill we have to take the balancing figure. Whether cash and bank balance is taken over? No, it is not taken over by the purchasing company. Cash and bank balance is not taken over by the purchasing company. Wait, most important, who has to bear the liquidation expenses? If nothing is given, liquidation cost has to be borne by which company? Selling company. What about preliminary expenses and underwriting commission? Preliminary expenses and underwriting commission should be in the form of which company? Purchasing company. In the form of in the books of which company? Purchasing company. Otherwise, liquidation cost means to close which company? Selling company. That cost has to be borne by selling company. And what about the underwriting commission and preliminary expenses? That is to form AB Limited or in the books of AB Limited. That entry will come in the books of what? Purchasing company. First, let us work out purchase consideration. Start. It is lump sum given. Okay, which company? Which company? A Limited, B Limited. Then consideration given. We are taking over all assets except cash. For A Limited and B Limited, all assets what? Except cash and bank balances. How much first company? 28 lakh 25,000. Second company? 4 lakh 91,000. Consideration given. How this is given? In cash, how much is given? 5,75,000 given. For B Limited, how much is given? 16,000 given in cash. In shares, how many shares are given? 1,80,000 shares at the rate of what? 12.5. So total, if you add up, it will come to 28,25,000. Yes, please. Blur out there. 1 minute. So 28,25,000 is paid like this. For the other company, how many shares are allotted? For the other company, how many shares are allotted? 38,000 shares of 12.5 each. 38,000 shares of 12.5 each. How much? So add both, you will get 4,91,000. So purchase consideration we are not working out. That is given in the question. And please remember, we are purchasing only what? Assets. So it is amalgamation. Start. Let us pass journal entry. Examination in the model follow பண்ணாதீங்க. Classroom purpose it is okay. I'm just doing columnar format. For A Limited, for taking over which one? Start. Business purchase account data to liquidator of A Limited. How much? Take it up along with me, don't wait. 28,25,000. Then in A Limited, what are the assets? A Limited, what are the assets? Patent, building, plant and machinery, furniture, investment, stock and debtors. Patent, building, investment, sorry, plant and machinery, furniture also there. Investment then. Are we taking over cash and bank balance? No. Debit all the assets. Everything taken over at book value only. What is the book value? Patent. Then, then leave a line gap. That is maybe for goodwill. 2. No liability taken over. Only assets are taken over. Clear word use பண்றோம். Business purchase. Balancing for will be goodwill. Take it up. Don't wait. Please take it up. 15,000 goodwill in the first company. Then we settle the purchase consideration. Liquidator of A Limited account data to equity share capital. Equity share capital 1,80,000 into 10. 18 lakhs only will come. Premium will go to the separate account. To securities premium. Securities premium the 2.5. 1,80,000 into 2.5. Then to cash or bank 5,75,000. For taking over B Limited, another set of entries we have to pass. What are the assets in another set of in this one? Motor car இருக்கு. Motor car account data how much? 1,26,000. Furniture account data how much? 58,000. Then stock 2,40,000. Investment. Stock 2,40,000. Data எவ்வளவு இருக்காங்க? 70,000. So business purchase 4,75,000 na. Goodwill or capital reserve. 4 lakh. Goodwill or capital reserve. check பண்ணு 1,26,58 to 2,40,70 capital reserve. இதனாலதான் சொன்னேன் don't combine this, because one acquisition there may be goodwill, another acquisition there may be what? Capital reserve. Assetsல போடும்போது வராது, பட் என்ட்ரி செப்பரேட்டா தான் பாஸ் பண்ணும். Because acquisitions are different, both are separate transactions. Equity share capital 38,000 into 10, 3,80,000. This is 38,000 into 2.5. Bank 16,000. Take it up. It's not over. இன்னும் நிறைய இருக்கு. There is a public issue. There is a public issue given in the books of the purchasing company. There is a public issue. Look at this. A Limited made a public issue of 6,000 preference shares at a premium of 10%, 30,000 equity shares at a price of what? 12.5 கொடுத்திருக்காங்க. To 5% preference share capital to securities premium to equity share capital to securities premium. Take up this, then we'll proceed. It's issued at a premium of how much percentage? 10% or 60,000, or we can combine or pass separately also. Equity shares 30,000 into 10 will come to capital value, and the 2.5 will go to premium. This is public issue. Not over. One more thing is there. What is it? You have to pay the preliminary expense and underwriting commission. How much preliminary expenses? How much preliminary expenses? 24,000. Underwriting commission 38,900. Now we have to prepare the balance sheet, closing the problem or material. Based on the 7-8 entries that we passed, you have to prepare which one? Balance sheet. Try பண்ணுங்க பார்க்கலாம் next. Never look at the problem, because that will have old values. We will take wrongly that credit as reserves and all. Whatever is recorded in our books, these will come as assets. No liability. No liability. Why? No liability is taken over. Cash balance also not taken over. Try பண்ணுங்க. Try the balance sheet. Any doubt in it? கேளுங்க. Goodwill balance sheet 15,000 இருக்கு. Old balance irrelevant. The capital reserve 3,000 will come in the balance sheet. Try பண்ணுங்க பார்க்கலாம். Take up this and try to prepare the balance sheet. That liquidation expenses should be borne by which company? Selling company. This goodwill and patent will come as which one? Intangible assets. Have we taken up this? Or live online friends, have we taken up the journal entries? Start with the balance sheet. Shall we? Balance sheet போடலாமா? What will be the share capital amount? Purchase consideration for the first company. Capital part alone. Purchase consideration for the first company. Then purchase consideration for the second company. Then public issue. Okay, we have got equity share, preference share capital. Then public issue, equity share capital is also there. Total 30,80,000. All only the capital part will come. Then reserves and surplus. All securities premium. Okay, purchase consideration. A pay பண்ணும்போது what is the securities premium? 4,50,000. Purchase consideration of B. While paying that, what is the securities premium? 95,000. Public issue. Public issue, we have got two securities premium. This 60,000 plus less preliminary expenses and underwriting commission. Totally how much? 62,900. Net amount will come. Ah, yes, correct. Capital reserve also will come. In acquisition of B Limited, how much is it? 3,000. No other liability. No other liability. Fixed assets. There is plant, property, equipment, tangible, intangible. Tangible assets என்னென்ன வரும்? This building, plant, furniture, motor car of both the company as per the journal entry I request you to add. That is, what is it? What and all will come? Building, plant, furniture, motor vehicles. Investment separate our. Then the patent and goodwill will come. How much tangible assets total? Other than investment, okay. Building, plant, furniture, motor vehicle of both the company. Journal entry body add பண்ணுங்க. Example, you must do a proper working note. Here it is okay. What is the total? Simple. Building, plant and machinery, furniture, motor car, and the other one furniture. Again, this is patent and goodwill. First company we have got patent as well as what? Goodwill. Then intangible assets over. Then investments. Investments are there in which company? A Limited, how much? 1,55,000. Inventory of A Limited plus B Limited. The stock plus this stock. Trade receivables of A Limited plus B Limited. Trade receivable of A plus B. Cash and cash equivalents. Let us do the working note. Cash and cash equivalent. We are not taking over old cash balances. So, but we collected money in public issue. Public issue, total money collected. Journal entry irukku paru. It's 10,35,000 we collected. Less purchase consideration in cash for A. How much we paid for A? 5,75,000. Less purchase consideration in cash for B. 16,000. Less preliminary expenses, underwriting commission. All these things are paid in cash. So closing cash and cash equivalents will come. Last எல்லாமே tally ஆகும். Example தான். Okay, it's a very good question. It's a very good question because they are taking over only what? Assets, except which one? Cash and bank balance. Purchase consideration is paid by which method? A lump sum method they have given. So this we have done in the books of which company? Purchasing company. 3 problems you had to do in the books of which company? Selling company. This question and 2 questions we left on 1 page gap. We'll have over 10 minutes of break. Or 10 minutes of break. Then we will continue with which one? Recollecting journal entries in the books of selling company. Then applying this in question number 5. This is lengthy. Compared to the other question, this is what? Lengthy. We have equity shareholders. We have preference shareholders. Cash and bank not taken over. Liquidation expenses we have to pay. Selling company, liquidation expenses we have to pay. So in this question, too many transactions will be there. And creditors also we have to pay. The liability is not taken over by the purchasing company. Selling company, we have to pay what? The creditors, liquidation expenses. So preference share capital is also there. So it's better to use this question to learn which one? Selling company. Okay. So have a break or 10 minutes of break. Then we'll continue with which one? Selling companies books. Start. In the books of which company we are going to do? Selling company. See, in the books of selling company, we'll open a realization account. Which account? A realization account to record all the transactions. Let me recollect the journal entry. Then let us go for, ledgers and the books of selling company. See, in the books of selling company, all are recorded through an account called as which account? Realization account, where we will transfer the assets to realization. Please transfer assets at book value, only then it will close. While preparing realization account, ensure that you are transferring assets at what value? Book value. Transfer cash and bank balances only when it is taken over by the purchasing company. The last question, okay, what are the assets you will transfer? What are the assets you will transfer? Patent, building, plant, machinery, furniture, investment, stock, debtors, you will transfer. Will you transfer cash and bank balance? No. Why? It is not taken over by the purchasing company. Then, don't transfer any P&L account debit balance or miscellaneous expenditure. So what is entry we'll pass? The realization account data to which account? Sundry assets account, like that we'll pass an entry. Then, we will transfer the losses, miscellaneous expenditure and all to whom? Equity shareholders. Now let me apply this in this question. So for this question, we'll prepare which account? Realization account. In the books of A Limited, let me do. You can copy it later, pay attention, just pay attention. The books of which company? The books of A Limited. The books of A Limited. We'll prepare which account? Realization account. We'll transfer assets. Examination, don't use sundry assets. In classroom purpose, it is okay. All assets other than the cash and bank balance. Patent, we can transfer. Plant, machinery, furniture, investment, stock, debtors, everything we can transfer. At what value? Book value. If there is a P&L account debit balance or miscellaneous expenditure, don't transfer. So 29 lakh 50 minus 1 lakh 40, how much we can transfer? 28 lakh 10,000 we can transfer. This is first one. Shall we? What is the second entry we pass? Then we'll transfer miscellaneous expenses and debit balance of P&L account. In this question, it is not there. Then transfer external liabilities to realization. In this question, what is the external liability? Only one external liability is which one? Creditors given. We'll transfer this to which account? Realization account. External liabilities account data to which one? Realization account. This also will be at book value. This also will be at which value? Book value. By creditors. Book value. 91,000. We transfer external liability. Next. Next. For purchase consideration due, purchasing company account data to which account? Realization account. Purchasing company has to pay towards realization. Then whatever we receive, we'll record in purchasing company. So in the question, We'll prepare purchasing company account. We'll prepare which account? Purchasing company account. Purchasing company account data are which account? Realization account. What is the first company? Purchase consideration. This one. Lump sum money. 28 lakh 25,000. Then this the realization it will come as by A limited account. AB limited account. Okay. AB limited account for the purchase consideration due 28 lakh 25,000. So purchasing company account is nothing but A limited account. Then how are we getting this? By AB limited account. How are we getting this consideration? By cash. How much cash? 5,75,000 in cash. Balance in shares. By shares in AB Limited. How much? How much? The balance. Yes, premium. Only in the books of the issuer, we will record premium and the face value separate. In the books of the receiver, we will record it total. Because for the receiver, it is like an investment, total amount. Okay. So once again, I repeat, we transferred assets, we transferred liabilities, purchase consideration due, purchasing company account data to realization. We get this in cash and shares form. Next. We transferred assets and liability, purchase consideration due, everything is over. Next. Okay. We transferred external liability, purchase consideration due, we got the consideration. Next. Sale of assets not taken over. The question is the sale of assets not taken over. The question is cash is cannot be sold or will not be sold, need not be, because it is in the liquid form. Any other asset not taken over, we have to sell. No such thing. Then settlement of liabilities not taken over and liquidation expenses. What is the entry we have to pass? Realization to cash or bank. Any liability not taken over, we have to pay. Or realization expenses, we have to pay. A realization accounted out to cash or bank. In this question, only assets they have taken over. Liability they have not taken over. Which one? Creditors they have not taken over, we have to pay. As well as liquidation cost we have to pay. What is the liquidation cost of the first company? 10,000 has to be paid. We have to pay. So how this will come? How this will come? Realization account data to cash or bank for paying creditors. How much we are paying to creditors? First company or creditors பாருங்க. About 91,000 சொன்னீங்க. Second year பண்ணிட்டீங்களா? So first company or creditors 60,000. Pay the 60,000. Realization to cash or bank for expenses. For expenses 10,000. 10,000 you have to pay. Okay. So we paid realization expenses. Okay. What is the next one? We transferred assets, we transferred liabilities, purchase consideration due potential, purchase consideration is also over. Sale of assets not taken over, cash accounted out to which account? Realization account. Settlement of liabilities or realization expenses, realization to cash. For settling preference shareholders, first transfer preference share capital to preference shareholders, then pay them. Then pay them. The question, we have preference shares of 10 each, how much? 5 lakh we have to transfer. Look at how they are paid. Point number 4. Preference shareholders are paid. Okay. How much? 12 rupees in cash for every share sold in கொடுத்திருக்கான். A limited la பாருங்க. How many preference shares are there? 50,000 preference shares are there, we have to pay. Next. Let us prepare preference shareholders account. Which account? By preference share capital, how much? 5 lakhs. But how much we are paying to cash? 50,000 into 12 rupees we are paying. For each preference shareholder, how much we are paying? Look at this. Liquidator Away Limited will pay the preference shareholders 12 rupees in cash. So pay 12 rupees. 6 lakhs we are paying. See, capital is 5 lakhs, but we paid how much? 6 lakhs means excess will be adjusted in realization. What is excess paid? 1 lakh. The balance excess paid will be adjusted in which account? Realization account. In the realization, it will come as to preference shareholders account, that excess money paid. What is excess money paid? 1 lakh we paid excess. Now we settled everybody. We transferred assets, we transferred liability, purchase consideration due was there, and the purchase consideration received was there. We paid creditors because it is not taken over by the purchasing company. We paid for expenses. Then we paid preference shareholders. That excess payment is getting adjusted in realization account. Who are left out? Equity shareholders are left out. Let us prepare equity shareholders account. Equity share capital first company. Equity share capital, how much is there? 15 lakhs. By general reserve. General reserve, first company, how much is there? 7,65,000. Then by P&L account, 1,25,000 P&L account. Any other reserve? No. Then at this point, we can close which account? Realization account. Realization account tally pannunga. You may get profit or loss because we have settled everyone. Even preference shareholders are settled. Close realization account. I hope there is a loss. Loss irukku. That loss will be borne by whom? Equity shareholders. Loss of profit. Profit நினைக்கிறேன். How much loss? $95,000. This loss has to be borne by equity shareholders. To realization loss. To realization loss, how much? 95,000 borne by equity shareholders. If you tally equity shareholders account, you will know how much to be settled. Balance all over. How much balance we have to pay? 23 lakh 90 minus loss 95,000. How much we have to pay? 22 lakh 95,000 we have to pay. How to pay? We got shares in AB Limited. How much shares we got AB Limited? Shares in AB. How much we got? 22 lakh 50,000 we got. But how much we have to pay? 22 lakh 95,000 we have to pay. How to pay 22 lakh 90? Balance will be paid in cash. Balance will be paid in cash. How much it will be there? 45,000 should be there. Let us cross check. Cash balance. Opening balance is taken over or left with us? We are in the books of selling company. Opening balance is left with us. What is opening balance? This 1,40,000 is left with us. Add purchase consideration received in cash. How much of cash we got in purchase consideration? 5,75,000 less creditors are paid in cash. Creditors we paid in cash. How much we paid? 60,000 less liquidation expenses borne by A Limited in cash. How much we paid in cash? 10,000 we paid in cash less preference shareholders paid. How much is paid to preference shareholders? 6 lakhs is paid. Balance given to whom? Equity shareholders. If you want, you can prepare in the form of a cash account also, or you can do a working note also. 45,000. That is what is this 45. I repeat the whole process. Pay attention. First, we transferred assets to sundry assets. 28 lakh 10,000. Why 28 lakh 10,000? We will not transfer cash in this question. Why? That is not taken over by the purchasing company because the cash balance is kept as it is. Then we transfer creditors by creditors. Then purchase consideration due. Purchasing company account data to which account? realization account. Purchasing company account it out to realization account. Purchase consideration due. How we get the purchase consideration? Cash and which one? Shares. Then sale of assets not taken over. In the question, no such thing. Payment of liabilities, yes. Creditors are not taken over by the purchasing company, we have to pay. Liquidation expenses, we have to pay. Then preference shareholders transfer the capital 5 lakh. It is given in the question. Liquidators will pay 12 rupees per share. 6 lakhs we have to pay. Excess amount paid adjusted in which account? Realization account. After settling preference shareholders, close which account? Equity. There is a realization account. The loss is transferred to equity shareholders. In the equity shareholders account, here capital reserves and P&L account minus realization loss. Okay, we have to pay 22,95,000. How to pay? The shares will be allotted to them. How much will be allotted to them? 22,50,000. Cash you see, opening balance plus purchase consideration in cash minus creditors minus liquidation expenses minus preference share capital paid. Balance is given to whom? Equity shareholders. Always balance left with us will be the balance in which account? Equity shareholders. Take up this. This is in the books of which company we have done? Selling company. Which company? A Limited we have done. In the books of B Limited also we will do. It's a practice only, In the examination, they will not ask this much. Either purchasing company or selling company only they will ask. Okay, for practice purpose, we'll do in the books of which company? B Limited. You are going to try in the books of B Limited. You are going to try in the books of which company? B Limited. After completing B Limited, we'll go to which one? That gap that we left for the first two questions in the books of which company? Selling company. B Limited, we'll transfer at book value. Selling company Puerto Rico, all assets will be transferred at book value, except which one? Cash in bank. Don't bother whether it is recorded in purchasing company or. You have taken this ledger, all these three. Live online inference, have you taken it? Okay. In the books of B Limited, okay, realization, no preference shareholders in B Limited. No preference shareholders in B Limited. Now, sundry assets, which asset you will transfer? 5,76,000 minus 20. Then, creditors, how much you will transfer? 31,000 creditors. Purchase consideration due. What is due? 4,91,000 purchase consideration due. Then, how much is cash? 16,000 cash out. Balance in shares, 75,000. Creditors have to be paid. Liquidation expenses have to be paid. What is the liquid? How much? Then, transfer equity share capital. Of course, if we tally this, realization loss will come. Equity share capital, second company level, 5 lakh. Then reserves 45,000. No P&L account, right? No, P&L account only 45,000. So we have to pay 4,75,000. Capital plus reserves minus realization loss, we need to pay how much? 4,75,000 we have to pay. How to pay? Shares in AB Limited. How much? 4,75,000. Cash will not be there. Opening balance for 20,000. Purchase consideration we got in cash 16,000. Creditors we paid how much? 31,000. Liquidation expenses we paid 5,000. Preference share capital கிடையாது. So no balance left. No cash balance left. That is why this balancing figure is settled in the form of what? Shares in AB Limited. It's 4,75,000. Balance is settled in the form of what? Shares in AB Limited. This is in the books of which company? B Limited. So assets other than cash is transferred, liabilities are transferred, then no preference share capital in the question. So purchase consideration due 4,91,000. We received 16,000 cash, balance in shares. We paid creditors because that is not taken over by the purchasing company. We paid liquidation expenses. Then transfer capital and reserves. loss in realization is also transferred. We have to pay 4,75,000 exactly. Shares are allotted to them. This 4,75,000 shares are allotted to them. Cash balance opening plus receipt in cash minus creditors and liquidation expenses, it became what? 0. Then which question we left in the books of selling company? First question. Go through the first question once again for 2 minutes. The purchase consideration alone, 2 minutes go through panel, we will start. Shall we? Over another. Is it over? Live online friends, is it over? Okay. Question number 1. In the books of P Limited, selling company, they ask you which one? Realization account. The books of which company? P Limited. I hope all the assets and liabilities are taken over, right? Even cash and bank balance is taken over. No. P Limited, like cash is not left, taken over. Cash is not taken over to sundry assets போடும்போது other than cash. To sundry assets other than cash. The 3,34,000, look at what are the things not taken over. Data T limited are fully realized. Bank balance is retained by the liquidator. Sundry creditors is paid out of the proceeds. So the bank balance is not taken over. So out of 5,45,000, 5,45,000, sorry, A limited, how much? 3,34,000, 54,000 is not taken over. How much will come? 2 lakh, 3,34,000. How much is not taken over? 30,000 is not taken over. So balance 3,04,000 taken over. Transfer liabilities. What are the liabilities you will transfer? Trade payables and creditors. Trade payables how much? 54,000 transfer. By debentures you have to transfer. Debentures book value da. Everything book value da. Evlo? Only for the purchasing company revised value matters. Selling company, all assets and liability will be transferred at what value? Book value. Then creditors, liquidator தான் pay பண்ணணும். Okay, liquidation expenses, creditors யாரா இருந்தாலும் liquidator தான் pay பண்ணணும். What even be liquidator? Selling company's liquidator will take care of paying. Then purchase consideration due to realization account. How much? What is the purchase consideration for the first company? 1,89,000. This will come as by PQ Limited purchase consideration 1,89,000. Then how are we getting this? By shares in PQ Limited, we are getting this 1,89,000. 1,89,000 we are getting it. Then wait பண்ணுங்க. Debtors realized in full சொல்லிருக்கான். By cash. Debtors realized in full. What is entry for sale of asset not taken over? Cash account data to realization. Debtors realized in full சொல்றான். What is the amount realized? Debtors how much realized? 44,000. 44,000 realized in full சொல்லிருக்கான். Wait பண்ணுங்க. Before we go for equity shareholders, let us check how much is available for payment. Cash balance left with us. What is the cash balance left with us? 30,000. Debtors realized in full சொல்லிருக்கான். What is the debtors realized in full? 44,000 realized in full. What is the creditors we have to pay? 54,000 we have to pay to the creditors. Creditors to be paid. How much we have to pay? 54,000 we have to pay. No balance இருக்கும். Balance will be given to whom? Equity shareholders. Balance will be given to equity shareholders. The 20,000 will be given to equity shareholders. To cash or bank. That creditors to be paid. Creditors how much we have to pay? 54,000 we have to pay. Then tally the account. Tally the account. Balance we can transfer to realization. Sorry, equity shareholders. Balance profit will be transferred to whom? Equity shareholders. The profit will be transferred. 3,97,000 minus 3,58,000. I'll recollect once more. I request you to listen. I'll recollect the entire thing once more. In the equity shareholders account, by equity share capital, what is equity share capital belonging to them? What is equity share capital? 1,40,000. 1,40,000 belongs to them. Then by P&L account, P&L account belongs to them. How much? How much? 30,000 belongs to them. Then by realization profit, how much? 39,000. Total how much it comes? 2,09,000 வரும் total. Total is 2,09,000. How to pay this 2,09,000? How to pay this 2,09,000? We can pay to shares in PQ. How much shares in PQ we got? 1,89,000 we got. Okay. What is the cash balance left with us? 20,000 left with us. That also we can pay. To cash, how much we can pay? 20,000 we can pay. Totally it becomes how much? 2,09,000. Totally it becomes 2,09,000. I repeat once more everything, pay attention. To sundry assets, how 3,04,000? To sundry assets, how 3,04,000? All assets other than what? Cash. Why not cash? That is not taken over by the purchasing company. So we transferred. Then liability side, creditors and debentures. Please remember selling company which value to transfer? Book value. Trade payable and credit debentures we transferred. Purchase consideration due. PQ Limited account data to realization. Then we get shares in PQ 1,89,000. Then We have to get the money from debtors. What is the entry for sale of assets not taken over? Cash account debtor to realization. It's given. Clearly mentioned in the question. What is given? Debtors are P limited realized in full. Bank balance to be retained by liquidator and sundry creditors are paid. So which means we are getting cash from debtors. Then we are paying cash to whom? Creditors. For assets not taken over, realized Achana, cash to realization. Liabilities paid by the selling company, realization to cash. Opening cash balance plus debtors realized minus creditors paid. Balance is payable to whom? Equity shareholders. Balance is payable to equity shareholders, yes. Then we close realization account, we get a profit of how much? 39,000. Capital, P&L account, realization profit, 39,000. Totally 2,09,000 we have to pay. How to pay? We got this shares in PQ, 1,89,000. The balance left in cash will be given to whom? Equity shareholders. This is in the books of which company? Selling company. Now what I request is, take up this. Then try in the books of which company? Srishti Limited. At home, you try it in the books of Srishti Limited. The tomorrow when we start or we continue with amalgamation, we'll do which one? The Srishti Limited selling company we'll do. Then balance, how many questions are there? I hope we have done up to which question? Question number 5 வரைக்கும் பண்ணிருக்கோம். How many questions are left? Second order selling company we have to do. Then அது பார்த்துக்கலாம். Sixth question we will do. Seventh question also we will do. Plus eighth question we'll do 6, 7, 8 we will do. Apart from that, listen, apart from that, we'll also do the latest question paper, like last 3 question paper questions we will do. 6, 7, 8 we will do, then latest 3 examination question paper we'll do in the next session. Okay, but try for the second question in the books of which company? Selling company. So tomorrow that we'll start, then we'll go to which one? 6, 7, 8, then we'll see the past exam questions also. Take up this.
Good morning. Last class inge stop pannu. Question number 5 illaya. Question number 5. Have you tried this question number 6? Okay. For preference shareholders, 3,800 shares into 5 into 18 plus 4. 2,800 shares into 5 into 18 plus 4. That is given in the question. 5 preference shares of 20 each. 18 paid up at a premium of what? 4 per share is given. 6 equity shares at a premium of that is 18 rupees paid up, 4 rupees premium. 18 rupees paid up, 4 rupees premium. So 8,200 shares are there into 6 into 18 plus 4. The 3,200 shares into 6 into 18 plus 4. Live online friends, am I audible?
Yes, sir.
So we are given purchase consideration like 500 preference shares, 5 preference shares of 20 each, but 18 paid up at a premium of what? 4 rupees per share is given for each preference share in the company. So 3,800 shares are there into 5 into 22. 2,800 shares are there into 5 into 22. That is what is allotted. For equity shareholders, 8,200 shares are there into 6 shares are given in each company. So 3,200 into 6 into 22 like that. So we work out assets minus liabilities, goodwill, land and building, plant and machinery, trade receivable, inventory, cash in bank, cash in hand, debentures, trade payable, secure loans. You get net assets. Net assets already this much has been paid. Already this much has been paid. Balance is payable in what? Cash. Balance is payable in cash. Any doubt in this working? Recorded class students, if required, pass and copy. Others, any doubt in this question? Why balance in cash? They want to adjust the rights by paying which one? Cash. That is why assets minus liabilities will give us consideration 16 lakh 2,100, 7 lakh 92,250. So this much shares are given to preference shareholders and equity shareholders. Balance is payable in which one? Cash. So when you prepare balance sheet, this goodwill will come as which one? Intangible asset. Land and building, plant and machinery, furniture will come as tangible assets. Current asset like trade receivables and inventory will come. Cash போடும்போது add cash at bank, cash in hand both minus this purchase consideration paid. How much is paid in cash? 1,01,700 and what? 61,850. So cash in hand, cash at bank add பண்ணிட்டு minus this purchase consideration paid should come. Then debentures, trade payable, debentures will come in long-term borrowings. Secure loan will come in long-term borrowings. Trade payable will come as what? Current liability. The shares given, face value will come in which one? Face value will come in share capital. Premium will go to securities premium account. You can try the balance sheet for this question also. Any doubt in this? I request you to update this working also. Any doubt in this? Any doubt in this? Do you understand why are we paying cash? It's clearly mentioned in the question. We'll pay cash to equity shareholders of both the company in order to adjust their rights as per intrinsic value. Intrinsic value is nothing but net assets value. Intrinsic value is nothing but net assets value. And in the books of selling company, as usual, we prepare which account? Realization account, where we transfer all assets at book value. Debentures, trade payable, we transfer. Purchase consideration. PQ limited account it out to realization account, that's 16 lakh 2,100. We get this in the form of shares and cash. We get this in the form of shares and which one? Cash. This shares and cash, we get it. Then first we settle preference shareholders. Preference share capital is 3 lakh 80. But look at how much we got for them. 4 lakh 18,000. So balance will go to realization account. Preference share capital is 3 lakh 80. But look at the consideration we got, 4 lakh 18,000. Balance will go to realization account. Then close the realization account. Equity shareholders like capital, P&L account, general reserve போட்டுட்டு realization loss போடுங்க. Equity shares in PQ Limited we got for them. How much we got for them? This 10,82,400 is given to equity shareholders. Cash that we got is given to equity shareholders. Cash that we got is given to which one? Equity shareholders. This is in the books of which company? Selling company. Same order. Transfer assets, all assets taken over. Transfer liabilities, debentures and trade payable. Consideration due, PQ Limited account debt out to realization. That comes as by PQ Limited. Then shares, we are given both preference shares and equity shares are given. Consideration paranga. Cash also we received. Okay. This preference shares receipt is given to preference shareholders. Look at the preference share capital, how much? 3,80,000. But we give 4,18,000. Balancing for is transferred to which account? Realization account. Then realization loss is transferred to equity shareholders. Then transfer capital, transfer P&L, transfer general reserve. Look at the consideration statement. We got this 10,82,400 for equity shareholders as well as what? This cash we got for them. Both are given to our equity shareholders. Both are given to our equity shareholders. It's a simple problem only. Now, I request you to go through question number 7. P Limited and Q Limited agree to amalgamate their business. The scheme is combined capital of PQ Limited கொடுத்திருக்காங்க. Assets and liabilities are going to be exchanged for PQ Limited. Balance sheet is given to us. So 6 lakhs plus 8,40,000. 6 lakhs plus 8,40,000 is the combined capital. Read the question. The consideration was on the based on which one? Net assets of the company shown in the above balance sheet, but subject to additional payment, P Limited for its goodwill calculated based on what? Weighted average profit of the last 3 years கொடுத்திருக்காங்க. Weights will be assigned in 1 to 3 order கொடுத்திருக்காங்க. Profits are given. Then shares of PQ Limited will be issued in proportion to which one? Net assets value of both the companies கொடுத்திருக்காங்க. In order to increase the working capital, okay, authorized capital is raised. They made a public issue like that they have given. Read the question once again, then we'll start solving. Purchase consideration is given in the problem. Equal to combined capital of which limited? P Limited and which limited is given? Q Limited. Purchase consideration is 6 lakhs plus 8,40,000. 6 lakhs plus 8,40,000. The consideration was based on net assets of the company, subject to additional payment for goodwill is given to us. The shares of PQ Limited will be issued to P Limited and Q Limited in proportion to what? Net assets of the companies. Simple. Work out assets minus liabilities, net assets. You will get proportion here. In that proportion, shares will be allotted. In that proportion, shares will be allotted. Read the full problem once again. It's a fantastic and very good problem. We have to value the goodwill. We have to value which one? Goodwill. Please read the adjustments once again.
14,40,000 would be divided in the ratio of net assets.
Net assets. Okay. But goodwill we have to value include and share. Go through this, please. Go through the adjustments once again, then we'll start solving. Before we start solving, we have to value valuation of goodwill of which company? Which company? P Limited. They ask you to follow weighted average method. What is weighted average method? Simple. Here, profit. You take the profit, assign the weights. Then you will get the product. Same like weighted average mean, all the something like that. Year என்ன கொடுத்திருக்கோம்? 14, 15, 15, 16, 16, 17. 3 years are given. What is the profit given? Shall we start journal entries in the books of PQ Limited? Shall we? What is the first entry you will pass? Business purchase account data. So which one? Liquidator of which company? P Limited. How much is the first company's consideration? 21,60,000. Don't do this in the exam. For completion, maybe time saving, I use the word sundry assets. Sundry assets account data. P Limited or sundry assets. What is the total of sundry assets? 18,60,000. Then goodwill be valued. Goodwill account data. How much? 5,40,000. So what is the liability? Trade payables. 2,40,000 to bank OD. The bank OD is not there. To business purchase. The entry will tally. How much? 21,60,000. Then we pay the money. Liquidator of which company? P Limited account debit. To what do we give? Equity share capital to securities premium. Equity share capital to securities premium. We have to pay 21,60,000 to equity share capital is how much? Then 5,40,000. This is for taking over which company? P Limited. 3 more entries we have to pass for taking over Q Limited. Business purchase account data to liquidator of Q Limited, how much? 14,40,000. Sundry assets account data, how much? 14,40,000. No goodwill. Now sundry assets how much? First, second company.
25,20,000.
To bank OD இருக்கு.
5,40,000.
5,40,000.
Trade payables. 5,40,000.
This is liquidator of Q Limited. So 14,40,000. Equity share capital is 5,60,000. Securities premium we worked out 8,64,000. Is it over? No. There is one more entry we have to pass. What is the one more entry you have to pass? We issued 72,000 equity shares of 10 each at the same rate of premium. At the same rate of premium. What is the rate of premium? What is the total share capital allotted? 14,40,000. 14,40,000 divided by 10 you will get number of shares. 1,44,000 shares we have allotted. Okay, which means what is the total premium? So what will be the premium per share? How to work out? 21,60,000 divided by 1,44,000 shares. Now we issued at what? 15 per share. At the same premium, we are going to issue the shares in the market. At the same premium, we are going to issue the shares in the market. What is the entry you will pass for that? Bank account data So equity share capital, how many shares are issued? 72,000 into 10 face value to securities premium.
10 lakh
This will be 72,000 into 15.
10 lakh 80,000.
Total money we collect. Do you understand? Total face value of shares allotted is 14 lakh 40. Okay, so we are allotting what? 1,44,000 shares. So what is the premium per share? 21 lakh 60 divided by 1,44,000 rupees 15 per share. At the same premium, we are issuing the fresh shares. We are asked to prepare what? Balance sheet also. போறீங்களா அது? Shall we? Shall we prepare the balance sheet? You complete பண்ணிட்டீங்களா? Live online friends, is it over? Any doubt in the journal entry or in the working? We valued goodwill, which is 5,40,000. So including goodwill, we got the net assets. In the proportion of net assets, purchase consideration is shared 8,64,000 and 5,76,000. So net assets, this is the face value of shares. Balance will be securities premium. So for 1,44,000 shares, if it is 21,60,000 means 15 per share. Based on the same premium, we issue the shares in the market. So we passed 3 sets of entries for each company's acquisition. Then we made which one? Public issue also. Shall I proceed to balance sheet?
Yes.
Start the balance sheet. Let us do the working. Share capital. Purchase consideration. What is the share capital given? 14,40,000 total. This one. Then we have made a public issue also. Public issue, what is the share capital? The 7,20,000. Only the capital part will come. So 14,40,000 plus 7,20,000. 21,60,000. Then reserves and surplus. Securities premium. In purchase consideration, what is the securities premium? This value. 12,96 plus 8,64, 21,60,000. In public issue also. In public issue also, there is a securities premium, 10,80,000. Total will come in the balance sheet. Non-current liability, any in this question? Yes. I I hope no non-current liability. No non-current liability in both the questions, both the company. Then current liability like trade payable of P Limited plus Q Limited. P Limited plus Q Limited. We are taking over at balance sheet value only.
7 lakh 80.
This 2 lakh 40 plus 5 lakh 40. How much?
7 lakh 80.
7 lakh 80,000. Then tangible assets. This fixed assets. 7 lakh 20 plus
18
10
lakh.
lakh 80.
18 lakh.
Intangible assets. Nothing but goodwill.
5 lakh.
5 lakh 40,000. No investments, right? No investments. Inventory of both.
10 lakh.
We took over at book value only. 3 lakh 60 plus 6 lakh 60. How much will it come? 10 lakh 20,000 will come. Then inventory of P plus Q. Then trade receivable also taken at book value.
1 lakh 60.
1 lakh.
60.
Cash balance, let us do the working because we collected money, paid money and all. Which company has a positive balance? P Limited has a positive balance. How much is there?
3 lakh.
3 lakhs. We collected by public issue. How much we collected by public issue?
18 lakh.
This 18 lakhs we collected by public issue. Less bank OD. Bank OD of which company?
Q Limited.
Q Limited. After amalgamation, both are same.
5 lakh.
How much? 5 lakh?
40.
So net balance. Closing balance, how much? 15 lakh 60,000. So 61 lakh 80,000 is the total of the balance sheet. So what is different in this question? You have to work out the net assets and exchange the shares based on net assets. Balance will be taken as what? Premium. Balance will be taken as premium. And we make a public issue at the same premium rate. This public issue at the same premium rate. Because purchase consideration is equal to share capital. இதுவும் நான் journal entry பார்த்து போடல. Then based on the purchase consideration statement only. Purchase consideration. What is the purchase consideration? 8 lakh 64 plus 5 lakh 76. 14 lakh 40. அதான் purchase consideration. Since assets and liabilities are taken at book value, we just add the balance sheet values. Shall we? Shall we? Read the next question, please. போறங்களா அது காப்பி பண்ணிட்டீங்களா? Next question பாருங்க. Financial position of X and Y Limited is given as on what date? 31st March 2018 is given. Equity shares are given, preference shares are given, 9% preference shares are given, general reserve is given, retirement gratuity fund, trade payable is given, goodwill and various others are given. Preference shareholders are paid what? 10% premium. Goodwill should be completed 2 years of average profit of last 3 years is given. Okay. Profit of 2014-15 included some insurance claim is given. Loss by fire, etc. is given. There was an embezzlement of cash is given. So we have to value the goodwill based on the data available. Land and building is valued, plant and machinery is valued, inventory is taken over 10% less than the book value. There was an unrecorded current asset in the book whose fair value amounted to how much? 15,000. Trade payable, mutually due is given. Equity shareholders of Y Limited will be issued shares at what? 5% premium. Show journal entries in the books of X Limited and prepare what? Balance sheet. Prepare realization account in the books of Y Limited. I request you to read the question and I request you to try to value the goodwill. Before we start solving, what we need to value? Try to value the goodwill.
1550 would have profit with 7,72,000.
72,000.
Lost by players 1 lakh.
First year, what is the profit?
90.
90,000. Second year, what is the profit? 78. Third year, 72,000. It is 72,000.
Lost by
Wait,
5 years.
profits, insurance claims 25,000. Loss by fire is
30,000.
30,000. 7 remove it. Loss by fire is 30,000. Loss by fire is 30,000. I hope everything else is correct.
Yes.
So first try to find out the value of goodwill, then we'll proceed.
Two lakh 3,333.
Illa. Profits given for 2016, 17 is given, then 15, 16 is given, 14, 15 is given. What is the profit given? 90,000, 88,000, then 47,000.
So 1,43,333.
Illa. Let's see. See, listen. Profits of 2014-15 included credit for insurance claims 25,000 கொடுத்திருக்கான். See whether this insurance claim will come every year. Whether insurance claim will come every year. It's a non-recurring profit. Less insurance claim. Why less insurance claim?
But 72,000 தானே கொடுத்திருக்கேன். அதை நீங்க less பண்ணா 47.
பரவாயில்ல. First இந்த insurance claim பார்க்கலாம். See, how to value goodwill? Goodwill should be valued ignoring which one? Non-recurring items. What do you mean by non-recurring item? That income or expense will not come again and again. This insurance claim, will it come every year? No. Eliminate it. How much? 25,000 you have to eliminate. Then, and what is the loss recorded by fire? 13, 14?
40,000.
That doesn't matter. That is 13, 14, that is not within this financial years. That is not within this financial years. Then what is given? In 15, 16, there was an embezzlement of cash, means theft of cash. Whether this loss will come every year? No. So add back loss by theft. Why? Because this loss will not come every year. How much? 10,000 loss. Sorry, profits given 90,000, 70,
78,
8,000, and
72,000.
I repeat,
72,000.
why are we eliminating insurance claim? This insurance claim is a kind of an income credited to P&L account. We lost by fire, there is an insurance claim. This insurance claim, will it come every year? No, eliminate it. Why are you adding back loss by theft? This loss will not come here. Every year you add it back. What about this loss by fire? What about this loss by fire?
Irrelevant.
Why it is not relevant? 2013-14. We are not within the 13-14. So it will give us profit or normal profit. Normal profit earned. Then what is the average profit? Total of all the three, of course, divided by 3. How much? 75,000. Goodwill is valued at 2 years purchase. 75,000 into 2, 1,50,000. Then you can add all the other assets. Land and building, plant and machinery, current assets, inventory, trade receivables. Some unrecorded assets are also taken over. Unrecorded assets are to be considered now. Look at this. Unrecorded current assets in the book, 15,000 will be taken over by X Limited as given to us. Then bank balance we can take less in another. Gratuity, trade payables will give us net assets. Work out and tell me the net assets. That mutual due we will eliminate it after amalgamation is over. Mutual due will be eliminated after the amalgamation is over. Land and building, are we taking book value? 5 lakhs. Plant and machinery, revised value is given 4 lakhs. Then inventory, 10% less than the book value.
4,72,500.
Trade receivables, debtors, minus how much percentage? How much?
2,92,500. Unrecorded asset 15,000.
Then gratuity liability,
60. Trade
payable?
payables 2,40,000.
This will give us net assets. Wait. In the net assets, yarku first pay pannu. Net assets are how much? 15,90,000. First you have to pay the money to whom? Preference shareholders. How much is paid to preference shareholders? Look at 10% preference shares are paid at 10% premium. Look at the preference share capital given. Look at the preference share capital given. 3 lakhs, we are going to pay at 10% premium. So 3 lakhs plus a 10% premium. You have to pay how much? 3,30,000 to them. Out of 15,90,000, 3,30,000 belongs to equity shareholders. Balance goes to whom? Sorry, preference shareholders. Balance goes to equity shareholders. And please remember, shares are allotted at 5% premium. Shares are allotted at 5% premium. Now, number of shares will be how much? 1,60,000 divided by 10.5. 10 rupees plus 0.5 premium. So how many shares will be given?
1,20,000.
1,20,000 shares will be given. Take up this, then we'll pass journal entry. We'll pass which one? Journal entry. Assets minus liabilities, net assets வருது. First we pay to preference shareholders, then balance is given to whom? Equity shareholders. Shares are allotted at 5% premium. So 10.5 if you divide, you get 1,20,000 shares. Then you try to pass a journal entry. Journal entry நீங்க தான் ட்ரை பண்ண போறீங்க. Journal entry try பண்ணலாமா? What is the first entry you will pass? Business purchase account. Data to which account?
Liquidator of while 15,92,000.
We are doing in the books of which company? We are doing in the books of which company? X Limited, 15,90,000. Then debit all the assets at book value or revised value that is taken over. goodwill account, data, land and building, plant and machinery, bank balance, everything you debit at book value, and of course, sorry, book value, revised value. Everything is taken over at revised value only. 2. Gratuity liability
60,000.
to trade payable to business purchase. This entry will tally because we did everything at what value? Net assets. Then settle the purchase consideration. Liquidator of which company? Y limited account, data to which one? Preference share capital to equity share capital to securities premium. We have to pay 15,90,000. 15,90,000 we have to pay. How much we are paying?
Share capital 3 lakh.
3,30,000.
Premium.
Premium issue panla. They discharged at premium. Look at the word. They are paid at premium. We are issuing preference shares at par value only. Equity share capital will be how many shares? 1,20,000 shares into 10 rupees. 12 lakhs will come. Securities premium, that 1,20,000 into 0.5. How much?
60,000. 12 lakh and 60,000.
That's it. Next, you try to prepare the balance sheet. While preparing the balance sheet, please ensure that what you are going to ensure. While preparing the balance sheet, take the book value of which company? P Limited. Book value of P Limited plus journal entry that we passed here. For example, share capital போடும்போது, what is the share capital of P Limited? 30 lakhs plus 3 lakh plus preference shares and equity shares given, like that you have to work. Then, while doing reserves and surplus, take the general reserve of which company? P Limited only. Don't take Q Limited. Don't take which one? Q Limited. Don't consider balance sheet of Q Limited. Don't consider balance sheet of which company? Q Limited. Balance sheet prepare பண்ணும்போது existing balance sheet of P Limited plus what? Journal entry that we passed. The 3 journal entry, based on that you have to prepare which one? Balance sheet. Try பண்ணுங்க. Balance sheet check பண்ணலாம். Share capital, tell me.
48 lakh 30,000.
Preference share capital of P, how much is there? Preference share capital of P, X, okay. 3 lakhs plus purchase consideration.
3 lakh.
Total of 6,30,000. Then equity share capital of X, 30 lakhs plus purchase consideration, how much we paid? 30 lakhs plus purchase consideration, how much we paid? This 12 lakhs. Only the face value will be added here. Total how much? 42 lakhs.
Preference shares, 10% preference shares are to be paid at 10% premium.
They are going to be paid at 10% premium.
But
You are you are a preference shareholder. What was your old capital? 3 lakh.
3 lakh.
We are going to pay you 10% premium for you, which means you will get 3,30,000. You will get 3 30,000. But our shares are not given at premium. நம்ம ஷேர் நம்ம பிரீமியத்தில் அலாட் பண்றேன். உங்களுக்கு பிரீமியத்தில் நான் பே பண்றேன். என்னோட ஷேரை வந்து ஃபேஸ் வேல்யூல அலாட் பண்றேன். You are getting a premium of 10%, 3,30,000. But 9% preference share capital is allotted at face value. அதனால இங்க face value ஆடாது. You understand? It is not shares are allotted at premium. Not shares are allotted at premium. You will get extra 10%. Then reserves and surplus. What will come in reserves and surplus? General reserve of X. General reserve of X, how much is given?
2,10,000.
2,10,000. 2,10,000 general reserve of X. Securities premium. The purchase consideration general entry la paru 60,000. So total 2,70,000.
Gratuity.
Then gratuity fund will come under long-term provisions. That is not a liability. There is a long-term provision. What is a gratuity fund? 1,50,000 plus general entry less 60, 2,10,000. Trade payable, I hope book value only we have taken. 3,90,000 plus journal entry.
2,40,000
3,90,000 plus journal entry 2,40,000 we have taken.
minus
Take it.
20.
Minus mutual due 20,000. 3,90,000 plus 2,40,000 minus mutual due 20,000. 6,10,000. See, debtors includes the amount payable to creditors. Mutual due will be eliminated from both liability and asset. Plant, property and equipment. What and all will be taken? Land and building, plant and machinery.
24.
Land and building for this 9 lakhs plus revised value 5 lakhs. 9 lakhs plus 5 lakhs, 14 lakhs. Plant and machinery for 15 lakhs plus revised value.
4 lakhs. Inventories.
33 lakhs tangible asset. Intangible asset, goodwill of first company, how much?
1,50,000.
1,50,000. Second company? இருக்குங்களா? Yes, we are valued இல்ல? The 75,000 into 2. 1,50,000. Second company we revalued. 1,50,000. Total how much will come? 3 lakhs will come. Inventory பாருங்க. 7,50,000 plus revised value, journal entry. Inventory 4,72,500. How much will come? Trade receivables. What is for the first company? 6 lakhs plus second company. Second company order trade receivables இங்க இருக்கு. 2,92,500. 2,92,500 minus 20,000. 8,72,500. Then cash and cash equivalents. What is cash and cash equivalents? 1,50,000 plus 60,000. How much?
2,10,000.
Very simple. One more asset. That unrecorded asset taken over. Okay. Other current asset. Unrecorded asset taken over by the company. Journal entry le போட்டிருப்போம். 15,000 that will come.
$59,20,000.
இங்க மிஸ்டேக் பண்ணி. Done. Shall we? Or not? Live online inference, have you completed?
Yes, sir.
Okay. This is your January 2025 question paper. Look at this. Following is the balance sheet of which one? Light Limited and which one? Bright Limited is given. 50 lakh, 40 lakh share capital கொடுத்திருக்காங்க. Reserves, some working notes would be given. Long-term provisions are given. Trade payables are given. Plant property equipment is given. Inventory, trade receivables, cash and cash equivalents. Share capital, 50,000 equity shares of 100 each. 50 lakhs, 40 lakhs. Reserves are given to us. We are given details about PPE. Then look at the information. A company called as Rainbow Limited will be formed to acquire assets and liabilities of which company? Both the company. Assets and liabilities were acquired at book value except land and building, which is revalued at how much? 62 lakhs கொடுத்திருக்காங்க. Other assets of Bright Limited are to be, or which one? Obsolete and scrapped and sold for how much? 50,000 by Bright Limited itself before acquisition of assets and liability. Which is scrap? Other assets. Of which company?
Right.
Bright Limited. Other assets of Bright Limited பாருங்க எவ்வளவு இருக்கு? 1.75 lakhs. This is scrapped and sold for how much? 50,000 before the absorption. So what will be the impact? What will be the impact? We sold the asset for a loss.
Loss.
So what to do? 1,75,000 will be eliminated from the asset. 50,000 will be added with cash balance. 50,000 will be added with cash balance. Remaining 1,25,000 will be adjusted with P&L account. Will be adjusted with P&L account. Then will be issued 80,000 and 64,000 equity shares in lieu of purchase consideration due to them. It's a very, 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 very simple question. So before amalgamation, இதை பண்ணிருப்பாங்க. Book value 1,75,000. Sale proceeds how much? 50,000. The balance will be debited to which account? P&L account. So bank balance will be 2,85,000 plus 50,000. It will be what? 3.35 lakhs. P&L account balance will be what is given before the sale of asset. What is given before the sale of asset? P&L account balance
4 lakhs.
4 lakhs கொடுத்திருக்காங்க. minus the loss on sale, minus loss on sale 1,25,000. This is pre-amalgamation event. This is pre-amalgamation event. Then they would have prepared realization account, then equity shareholders account like that. Then they would have prepared balance sheet also. But purchase consideration, 80,000 equity shares of one each, 80 lakhs. 64,000 equity shares of one each, how much? 64 lakhs is the purchase consideration. Okay, they take over the assets, land and building at revised value, plant and machinery, other assets book value, inventory book value, trade receivables and a value, book value, cash at bank. Okay, 315 as it is. This 3.35 is nothing but old value plus on the sale of asset minus on the long external liabilities quota, net assets for net assets for. Okay, but we paid a consideration of 80 lakhs and how much? 64 lakhs. What is the net assets? 81 lakhs and what? 62 lakhs 75,000. Here, no. Cash along total consideration.
Okay.
81 lakhs is the net assets taken over. 62.75 lakhs is the net assets taken over. We paid a consideration of 81 lakhs and 64 lakhs. So first company we paid more. We paid less. Net assets are 81 lakhs, but we paid how much? 80 lakhs. Now it is capital reserve. Second company 62.75, but we paid how much? 64 lakhs. Now it will be called as what? Goodwill. That will come in the balance sheet. Equity share capital is nothing but the purchase consideration given. You can go through 80 lakhs plus what? 64 lakhs. What is the purchase consideration given? 144 lakhs. Okay. Then reserves and surplus is nothing but this capital reserve. What is a capital reserve? 1 lakh. Reserves and surplus is nothing but that capital reserve 1 lakh. Long-term provision as per the net asset statement. Long-term provisions as per the net asset statement, how much? 1.5 lakhs. Trade payable also 3.4 plus 2, 5.4 as per the net asset statement. So liability side is over. Asset side போடும்போது plant property and equipment. How this 121.2? Revised value statement பாருங்க. This land and building plus which one? Plant and machinery plus other assets. 62 plus 44 plus 7.5 plus 4.5 plus 3.2. Add பண்ணேன்னு வந்துடும். It will come as 121.2. Intangible asset. This 1.25 is nothing but that goodwill. We paid more consideration earlier. We paid more consideration. How much we paid more? 64 lakhs we paid. Net assets are 62.75. Now what is the goodwill? 1.25. That will come as which one? Intangible assets. Inventory of both the company, trade receivable of both the company, cash and cash equivalent of both the company. Totally how much you get? 151.9. Okay, this is balance sheet. And in the books of selling company, we'll prepare which account? Realization account. We'll transfer all the assets. Then we'll transfer all the liabilities. By Rainbow Limited, purchase consideration due 80 lakhs and which one? 64 lakhs. The tally பண்ணீங்கன்னா you will get which one? Balancing for profit. Balancing for which one? Profit. The equity shareholders, share capital, all reserves and surplus you transfer. This realization profit also you transfer. Balance is payable in shares of purchasing company. It's a very simple question only. Only thing is that there is a pre-amalgamation event. What is a pre-amalgamation event? There is a sale of asset that is added with cash balance. Loss on sale is adjusted with which account? P&L account. So shareholders account போடும்போது P&L account the 2.75 lakhs and transfer account. We'll transfer only what? 2.75 lakhs. So okay, here consideration is given. 80,000 into 100, 64,000 into 100 consideration is given. Okay. So assets minus liabilities will give us which one? Net assets. We pay more. That is goodwill. We pay less. That is which one? Capital reserve. That is recorded in the new balance sheet. That is recorded in which one? New balance sheet. As usual, they prepared which account? Realization account. We'll transfer assets. Any assets? Land and building, plant and machinery, other assets, inventory, trade receivables, cash and bank balance at book value. We'll transfer liabilities, long-term provisions, trade payables, எல்லாமே book value தான். By Rainbow Limited for the purchase consideration, the profit is transferred to whom? equity shareholders, equity share capital, transfer capital and reserves, and transfer the realization profit. Balance is settled with which one? Shares in purchasing company. It is worth for the definitely 14 marks question. Like this, you have to go through which one? September 2024 question paper also. Just go through, that is sufficient. Because compared to the problem that we worked out, the problems in the examination will be definitely simple. You must go through the 3 exam question papers. This question also you must go through. Balance sheet of which company is given? Bill Limited and which one? Nice Limited is given with share capital, reserves and surplus. Okay, various liabilities are given, assets are given. P&L account has a positive balance and a negative balance. Long-term borrowings, loan from banks are given. Debtors, bills receivable, creditors, bills payable is given. For every 5 equity shares held by equity shareholders of Well Limited, they will receive what? 3 equity shares of which company? Nice Limited. Who's purchasing? Nice Limited is purchasing the business of which one? Well Limited. So who's Nice Limited? First company. Who's Well Limited? Second company. So 5 shares, for every 5 shares held, they will get what? 3 shares held. So number of shares into 3 by 5 into at a premium of 20 per share கொடுத்திருக்கா. 10 plus 20, 30 போடும். Debenture holders will be allotted to receive the same amount of interest. Preference shareholders will be allotted at a discount of 10% like that it is given. Bank agreed to waive 270,000 loan, take that minus 270 and the mari. Expense on liquidation reimbursed by what? Nice Limited கொடுத்திருக்காங்க. Inventory taken over at 10% more than the book value. Debtors mutual due eliminate பண்ணிப்போம். PPE 20% above the book value. Remaining assets are taken over at what value? Book value like that it is given to us. Now purchase consideration, which method? For every 5 shares, they are receiving how much? 3 shares. But the number of shares are clearly given to us? Yes. Preference shareholders, how much they will be paid? Is it clearly given to us? Yes. So which method you will follow? Net payment method. You can check. Purchase consideration they would have worked out. Preference shareholders, 16,000 equity shares. Equity shares, 200 equity shares into 10. 1,25,000 into 3 shares for every 5 shares held into how 120? 100 rupees face value plus 20% premium. This will give us purchase consideration. This will give us which one? Purchase consideration. Ada. Preference shares pathina 18 lakhs, they are given a 10% discount. 16,20,000. Debentures, debentures pati. 10% debenture holders will be allotted what? 9% debentures that will bring them same amount of interest in solid. Okay. If you look at what is the 10% debentures? 9 lakhs. How much interest they are getting now? 90,000. 90,000 they are getting. Therefore, we have to allot 9% debentures to get this 90,000. Now we have to give how much? 90,000 divided by 9%. We have to give what? 10 lakh debentures. At present, how much debentures are there? 9 lakhs into 10%, 90,000. They should receive the same interest. At 9% means we should give what? 10 lakhs of debentures. With that, they would have passed journal entry. They would have passed which one? Journal entry. Business purchase account data to liquidator of Well Limited. Okay. Take over all the assets at revised value, all liabilities at revised value. Balancing for is which one? Goodwill. We pay the purchase consideration. To equity share capital, to preference share capital. Equity shares are allotted at a premium of what? 20. Debenture holders are given with which one? 9% debentures given. we are reimbursing the purchase consideration. Okay, goodwill accounted out to bank. When we are reimbursing liquidation expense of selling company, what is entry we'll pass? Goodwill accounted out to cash or bank. This is to eliminate mutual due. This is to eliminate which one? Mutual due on the Mari. So I request you to go through. These 3 question papers so that you will get a fair idea as to how they are testing. So compared to the problem, that 8 problems that we solved, these problems will be very simple. Okay. So at home, I request you to practice this January question paper, September question paper, and which one? May question paper. Even in May 2024 question paper, if you go through, compared to the problem, it will be a very simple question. You must practice. Look at this. They have given Intelligent Limited and which one? Diligent Limited question. Both the companies, they want to form which company? Genius Limited is given. Amalgamation is given on this following terms. Assets are revalued. Then trade payable, some mutual dues are there. Purchase consideration will be 22,000 shares in proportion to what? Profitability of 2 preceding financial years. இதே மாதிரி ஒரு question பண்ணிருக்கோம். Regular class we would have done the question. Okay, same question we would have done in the regular class. Let's show that question also. Set 1 material தான் இருக்கும் இது. இதே மாதிரி question நம்ம பண்ணிருக்கோம் amalgamation. Same model. Assets and liabilities are revalued. How to pay the purchase consideration, like that they would have given. Same model question. In proportion to profitability of the 2 preceding years, even the same model that would have been given. Preference shareholders will get preference shares, like that it would have been given. I request you to go through them. Okay, equity shares, preference shares, purchase consideration, and they would have done balance sheet also. The 3 years question paper compulsory to go through. 3 attempts question paper, I request you to go through at. Okay. The next class, there is நாளைக்கு என்ன session போட்டு. If there is a doubt in all those questions, I will clarify. But I request you to go through that. In the meantime, or 1.5 hour, just go through the questions. Then, what is the session next? Of course, Varsha Madam's accounting standard session will be there. Next, consolidated financial statement. When it is planned? Tomorrow is Thursday. Okay, tomorrow we'll have the class. Tomorrow we'll have the first session. For which one? Consolidated financial statement we'll have. Tomorrow first session we'll have. Where we lower code, I'll just compile the questions and make it ready and send it to you in the group. And we'll do which one? Consolidated financial statements. I request you to go through the steps. The steps alone I'll share in the group. I request you to go through them. Because that is again a most important area where they test frequently. Without that, see, internal reconstruction, branch accounts, the amalgamation, the consolidation. There will 40 to 50 marks question is tested. Then accounting standards, MCQ, etc. You can easily manage. So tomorrow we'll do which one? Consolidated financial statements. So if you look at, if you are thorough in whatever we have done, final accounts, then buyback, then internal reconstruction we have done, cash flow statement we have done, then amalgamation we have done, branch accounts we have done. See, from these areas, இந்த ஏரியால இருந்தே you will get question for about 40 to 50 marks. இதுல இருந்து 40 to 50 marks வந்துடும். Then holding company accounts or 14 marks question, 10 marks minimum. If it is a consolidated P&L account, 10 marks minimum. If it is a full consolidation problem, they test for what? 14 marks on the mark. So from this itself, around 50 to 60 marks easier on the room. Like 30 marks MCQ, balance how many marks you write? 70 marks you write, but you will get question for how many marks?
84 marks.
84 ah?
84.
எவ்வளோ கொஸ்டின் சாய்ஸ்ல விட மாதிரி இருக்கும்?
Sir, 6 questions இருக்கும். ஒரு கொஸ்டினும் 14 marks. 80 into 6 னா 84 marks இருக்கும். 84ல first question compulsory.
So அந்த 70 marks area you write இல்லையா, அதுல இருந்து இதுல இருந்தே 50 marks உங்களுக்கு வரும். Multiple choice questions, majority of them are based on accounting standards. The 70 marks out of 84, this covers about 50 marks. So we'll start with which one? Consolidation tomorrow. We'll begin revising branch accounts. Sorry, friends. We'll start revising which one? Branch accounts. We'll start with data system. What is data system? Every branch is treated like a data. It is normally done under dependent branch method. What is a dependent branch? This branch account is prepared by head office. This branch account is prepared by what? Head office. All the transactions are entered by head office. Normally, debtors, whenever you give goods or cash, debit the receiver. Whenever you give the goods or cash, you debit the receiver. So whatever they received will be with them. It can be in the form of stock, or they sold it to collect debtors, cash or assets will be there. Debtors will have a debit balance in general. Debit whatever is given. Okay, like goods sent to branch or cash sent for expenses, you debit. Credit whatever is given by them. Credit the giver. Okay, it can be goods returned from branch or cash remitted by them. What they will remit? Cash sales plus collection from debtors and direct payment by customers. Then record the closing balances, which can be stock, debtors, cash, assets, etc. You will get the profit or loss. How is that? Simple. Debits will be at cost price. All these realizations will be at selling price. So automatically you will get which one? The profit or loss as a balancing figure. Suppose if the goods are sent at invoice price, invoice price, opening stock, goods sent to branch, then this goods returned from branch and the closing stock will be at invoice price. When everything is recorded at invoice price, then profit will not come. Debit also at invoice price, credit also at selling price. Then the proper profit or not will come, profit or loss will not come, where we remove loading. How to remove loading? On the debit side items, buy stock reserve. On the goods sent to branch, remove the profit in the credit side. On the goods returned by the branch, remove the profit in the debit side. On the closing stock, you remove the profit in the debit side. So whatever is there in the yellow shade will be done only when goods are sent at what? Invoice price. If not, only this much. Suppose in the question, they tell you the goods are sent at cost. Record opening stock, debtors, cash, assets. Because our debtors branch will have a debit balance. Debit the receiver. Goods sent or cash sent for expenses, you debit. Credit the giver. They may return the goods or they will remit the cash. It may be cash sales or collection from debtors or direct payment by customers. Then record the closing balance of assets like stock, debtors, cash and assets. Then tally this, you will get the profit. If goods are sent at invoice price, then remove the profit element. Buy stock reserve on the debit side. Buy goods sent to branch, that is on the debit side item. On the credit side item, goods returned and closing stock, remove the profit on the debit side. This system has a weakness. This records only the transaction between head office and branch. What will not be recorded in this branch debtors method? Branch to outsiders will not be recorded. Like credit sales, it will not come. Wastage of stock will not come. Discount allowed will not come. Bad debts will not come. So branch transaction with outsiders are not recorded in which account? Debtors system. That is the weakness of this particular method. Just observe this. Then we'll do. Suppose if outstanding expenses are given what to do, you can take it like a liability at the beginning or liability at the end, or if with the concerned expenses itself we can adjust, like salary, add outstanding at the end minus outstanding at the beginning, like that you can adjust. Otherwise, you can treat it like a liability, by balance brought down to balance carried down, like that. Shall we? Come to your handout. Question number 1. Prepare branch accounts in the books of head office from the following particulars for the year ended 31st March 2013, assuming that the goods are sold at cost plus what? 25%. We are given opening stock and which one? Debtors, petty cash is given. Goods sent to branch, goods returned at office, cash sales, cash received from debtors is given. Bad debts, allowances to customers, returns inward, rent and taxes, salary, miscellaneous expense are given. Closing stock is given, closing debtors are given, then closing petty cash is given. Anything has to be found out, any missing figure is there, or directly we can start with branch account. For preparing branch account, this is the required data. Any data is missing, or we can directly start with accounts.
Directly.
Shall we? I hope all the data
Yes,
required for working out the question is available. Okay. Tell me, opening stock. What is the opening stock? It is at invoice price.
What?
2,72,500 is given. Opening stock. Debtors, how much is given? 15,000 is given. Opening petty cash, 1,000. No opening assets. No opening assets are available. So total, you can take it to the outer column directly, or you can put it in the inner column and take it to the outer column. No issues. Goods sent to branch, invoice price. How much? 3,60,000. Cash sent for expenses. What are the expenses? What are the expenses incurred? Salary is how much?
18,000.
18,000.
Miscellaneous
Miscellaneous expenses,
expenses, 4,000.
4,000. Then rent and taxes, 5,000. That's it. Yeah. Then we'll come to the loading part, removal later. Okay, no branch liabilities are given. At the beginning, end of the year, no branch liabilities are given. Goods returned from the branch. What is the goods returned from the branch? 25,000 is given. What the branch will remit to us? Cash sales plus collection from debtors. What is the cash sales given? 54,000. Collection from debtors, how much is given? 2,30,000. No direct payment by customers into account. So it will become 2,84,000. Then closing stock. Closing stock. How much is given? I hope it's given. 3,15,000 is given. Debtors, closing debtors how much?
74,000.
74,000 given. Closing petty cash
5,000.
5,000 given. Total 3,94,000. 3,94,000. Since the goods are sent at invoice price, we have to remove the loading. On the opening stock, how much? 2,72,500 into what is the profit margin given?
25.
25% on
Cost.
cost into 25 by 125. அது ஆஃப் பண்ணிட்டோம் ஒரு ஸ்விட்ச் ஆஃப் ஃபர்ஸ்ட் ஸ்விட்ச் ஆஃப் பண்ணாதீங்க ஐ மீன் இது ஆஃப் ஆகிடும் அதை தவிர்த்து மொத்தம் எல்லாம் ஆஃப் பண்ணிப்போம் ஒரு வாட்டி பவித்ரா ஆஃப் பண்ண சொன்னேன்னு இந்த மெயின் இது வரதே ஆஃப் பண்ணிட்டேன் ரெக்கார்டிங் போயிடுச்சு இந்த மாதிரி பி கேர்ஃபுல் என்ன சொன்னேங்கிற மாதிரி goods sent to branch 3,60,000 into 25 by 125. 72,000. Goods returned from branch. The profit element 25,000 into 25 by 125. We remove on the debit side. Next, closing stock code 3,15,000 into 25 by 125. 63,000. Tally this, you will get profit as a balancing. This was one of the simplest question that was tested in the exam. Done. This is question number 1. Shall we? We'll go to question number 3, then we'll come to question number 2. Please read which question? Question number 3. Have we completed this? Live online friends or other? Is it over live online friends?
Yes, sir.
Read this question number 3. From the following particulars relating to Pune branch for the year ending December 31, 2024, prepare branch accounts கேட்டிருக்காங்க. What and all they have given? Opening stock, opening debtors, closing stock, closing debtors, closing opening cash, closing cash is given. Prepaid fire insurance premium, outstanding expenses are given at the beginning of the year. Goods sent to branch, cash sales, credit sales, cash received from debtors, cash paid by the branch debtors directly to office கொடுத்திருக்காங்க. Discount allowed by debtors is given. Check sent for expenses is given. Annual insurance paid up to 31st March 2025 is given. Goods returned by the branch is given. Goods returned by debtors are given. Closing stock, petty cash spent by the branch is given. Provide depreciation on furniture at the rate of what? 10%. Goods costing 1,200 was destroyed by fire and the sum of 1,000 was recovered from insurance company. Will it be recorded in branch account? Will it be recorded in main branch account? No. I request you to read through the question once again, then we will answer. சரி. இது வேணும். வச்சு. Shall we? What is missing in the question? To solve this, any information is missing. Closing cash is missing. Closing petty cash is missing in the question. We are given opening stock, opening debtors, opening assets are given. Goods sent to branch data is available. All the data is available. Closing stock, debtors balance available. Closing assets, we have to take it after depreciation. What is missing is closing cash balance. The data is not given. I hope all the other data is available. Complete data is available. Here, goods are sent at invoice price like that. Is there anything given?
No.
No. So when goods are not sent at invoice price, there is no need of which one? The loading removed. Stock reserve will not be required. The stock reserve component will not be required. Shall we? Let us first fill up the data, then missing data, let us take it. What is the opening stock given? Opening stock, 10,000 given. Opening data, how much is given?
4,000.
4,000. Opening data, I know 4,000 is given. Opening data, 4,000 கொடுத்திருக்காங்க. Then
500.
Petty cash opening balance is 500. Then opening branch assets, that is furniture,
2000.
2000 is given. Closing balance of furniture will be 2000 minus 10%. It will be like 1800 we can do. Indirectly depreciation is debited. Then opening balance prepaid insurance is given. Opening balance prepaid insurance is given, that will come here. To prepaid insurance, or you can adjust with insurance. What is the opening balance of prepaid insurance? 150, that is given. Then any liability given at the beginning of the year? Yes, outstanding salary is given. Opening balance of outstanding salary is given how much? 100. Opening balance of outstanding salary is given 100. Then goods sent to branch கொடுத்திருக்காங்களா? What is the goods sent to branch given?
80,000.
Goods sent to branch how much?
80,000.
80,000. Cash sent for expenses. What are the things which are sent for expenses? Rent, salary, petty cash, insurance. The prepaid insurance we'll adjust it later. 2000, 2400, 1000 and what? 600. That prepaid insurance we'll record it as a closing balance. Prepaid insurance. It is paid till what date? Insurance is paid up to what date? Annual insurance, they say. Insurance is paid up to 31st March 2025. But we are closing the accounts on 31st December 2024. So how many months we paid in advance? 3 months. So 600 into 3 by 12. 3 months prepaid. That's 600 into 3 by 12. How much will come? How much? 150 prepaid insurance. You understand how the prepaid insurance comes? 600 is paid till 31st March. So we are closing accounts on 31st December. So 3 prepaid insurance 150 will come. Then what else? Goods returned from branch. Any goods returned from branch? Yes. 1000 is given. What the cash or what is the cash remitted to head office or from the branch? Cash sales கொடுத்திருக்காங்க. What is the cash sales given?
130,000.
This one. 1,30,000. Then plus how much they received from customers? 35,000. It's a dependent branch. Branch has to send whatever it is. Then directly how much customers are paid? How much customers are paid?
2,000.
2,000. And one more thing, most important is recovery from insurance company. Head office record from insurance company, how much? 1,000 they record from insurance company. Loss will not be recorded because it is a transaction happening at the branch. How much is recorded from the insurance company, that will be recorded. I hope closing stock is given. All these are from branch or on behalf of branch. What is the closing stock? Here, both. What is the closing stock?
5,000.
5,000. Closing data? 4,900. Petty cash is not given, that we need to work out. Petty cash. What is the opening balance?
500.
500 plus what is sent by head office? 1,000 minus what is spent at branch?
850.
850 will give us closing balance. 500 plus 1,000 minus 850 they spent. What is the closing balance? 650. Yeah? Then any other information? Check any other information that we missed out. Since goods are sent at cost price, no loading removal is required. Goods returned by data, sales returns will not be recorded. It's a transaction happening between branch and outsiders.
It's directly returned to
Head office then get the goods returned by data directly into head office we would have taken. Now it is now returned to the branch. No branch liabilities at the end of the year. Check whether we have missed out anything. Really. Closing balance கொடுக்கலீங்களே, opening balance தானே கொடுத்திருக்கோம். Outstanding salary at the beginning of the year கொடுத்திருக்கோம். No data is available, or monthly salary data is not available. So no outstanding at the end of.
Sir, prepaid insurance closing balance adjustment.
கொடுத்திருக்கானே. The insurance was paid up to 31st March 2025. 600 was paid. It's annual insurance. Paid up to 31st March. But we are closing accounts on 31st December. So how many months we paid in advance? 3 months. That is why 600 into 3 by 12, 150. Okay, Bala.
Sir, okay.
Done. This is question number 3. Live online friends, complete பண்ணிட்டீங்களா? Or any doubt in it? Now go to question number 2. Which question number? 2. The question is under stock and debtors method. The question is under stock and debtors method. We'll do under debtors method. We'll do under debtors method. Then the same question we'll do under stock and debtors method. Shall we? The complete punting. Live online friends, have you completed this?
Yes, sir.
Look at this question. Cost plus one third. One third on cost, one fourth on sales. All expenses are paid by head office. Following transactions are given. They ask you to prepare stock, adjustment, loss in transit, pilferage and all. Okay, that is, they ask you under which method? Stock and debtors method. Stock and debtors method, but we'll prepare at which one? Normal beta system la podala. Then we'll move to which one? Stock and data system through that question. Okay, same answer should come. Let us see. Opening stock is given at what? Cost. But while recording, uniformity should be recorded. So cost plus 33 1/3%. While recording, cost plus there is a price record பண்ணுவோம். 60,000 plus one third போட்டேன் 90,000 வரும். Goods sent at invoice price is given. Goods lost in invoice price is given. This we will not record under data system. Goods pilfered at invoice price is given. Normal loss at invoice price is given. Sales, credit sales is given. Expense at the branch is given. Recovered from insurance company against loss in transit is given. Closing stock is at invoice price is given. The question, we are not given debtors opening balance, closing balance.
80,000 or 90,000? 80,000 or
இது
opening stock.
cost plus one third தானே. On cost one third na 60,000 one third. Okay, 80,000. 80,000. What is missing? Debtors opening and closing balance is missing. So what to do? Since bad debts collection, since bad debts sales returns, discount received, nothing is given, we can assume that all credit sales is collected. All the credit sales is collected. So opening debtors is not there, closing debtors is not there, bad debts, discount allowed, sales returns, nothing is given, which means whatever is sold is collected. Whatever is sold is collected. Like that we have to proceed. Question number 2, first we let us solve under which method? Data system. What is the opening stock given? Cost plus one third, 80,000. Opening debtors not available. Opening cash also not available. Goods sent to branch. Goods sent to branch.
30,000.
30,000 invoice price. Cash sent for expenses. Any expenses at branch? 30
Branch. 35,000.
at branch. We assume that it is sent by head office. Goods returned from branch, is it given in the problem? Goods returned from the branch? No. Then insurance claim, how much we recovered? Insurance claim, how much we recovered? 12,000. Okay. We assume that full credit sales is collected since no opening and closing balance data is available. What is the credit sales? 2,20,000. 2,32,000. What is the closing stock given in the question? Invoice price 80,500. Closing datas? No. Closing cash not available.
No, but credit sales.
Debtors opening balance கொடுக்கல, closing balance கொடுக்கல, which means whatever is sold is collected as per அவ்வளவுதான். வேற வழி இல்லை. Clear? No opening data, closing data is available. இல்லை. Okay, based on the data, What is the opening data? Is not available. Closing data is not available. Sales returns not available. Discount, sales returns, nothing is available. So whatever is we sold, we collected now. All credit sales is collected within that particular period now. So let us remove the stock reserve on the opening stock. On the opening stock, 80,000 on 1/3 on cost, it will be 1/4 on sales. Then on the goods sent to branch, 1,30,000 into 1/4. Then on the goods returned, there is no goods returned. On the closing stock, stock reserve quota. What is the stock reserve on the closing stock? 80,500 into 1/4.
2125.
How much?
20,125.
Hmm.
In the opening stock, cost and branch, cost and incomes.
Wait. Oh, sorry. At cost to the branch, and it is already at invoice price. Sorry. Very good observation. At cost to the branch, nu kuduthirukam. Very good observation. At cost to the head office kadayadu. At cost to the branch na, whatever we send, the invoice price becomes which one? Cost to the branch. Correct. Na? So this 60,000 is already what price? Invoice price. Cost to the branch is nothing but the price at which we send. So this will be 60,000 into 1/4. 60,000 into 1/4, how much? 15,000. Branch stock, cost to the branch. Okay. See, when we are going to do under this same question, under which method? Stock and data's method, the same answer should come. The same answer should come. Let us see. Have you taken up this overall? So what is the weakness of data's method? We are not recording all the transactions. In the question we have got normal loss, abnormal loss, transit loss, pilfered. Okay, then suppose there is a bad debt, discount allowed, all those things are not recorded in which one? The main data's method, that is branch accounts. Same question, we will try under stock and data's method. Before that, let us recollect stock and data's method and present. So if you have classroom notes, just go through for about 2-3 minutes. I'll just give a 2-3 minutes break to just go through your classroom notes if you have. On which one? Stock and data system. I'll also recollect. Have you taken up? You did 3 live online friends. Have you taken question number 2? See, what is the weakness of debtors method? We are not having full control over which one? Stock and debtors. Stock and which one? Debtors. Stock and debtors. So we developed the method. Which method? Stock and debtors method, under which you will maintain a debtors account. What is debtors account? Normal debtors account. What will you record in this? To balance brought down, to credit sales, usual. Then all bad debts, discount, then sales returns, collection from debtors will be recorded to arrive at which balance? Closing balance. We have a full control over debtors where everything is recorded, like bad debts, discount, the sales returns, collections, everything is recorded. So this is debtors account. Next, we'll prepare which account? Stock account. All the inflows of stock to the branch will be debited. Debit what comes into to balance brought down. It can be goods sent to branch debtors, the sales returns, goods come back to the branch. Then any surplus in stock, then goods transferred from other branches. All these are like inflows to the branch. Clear? Goods sent to the branch, debtors, the sales returns, the surplus in stock, goods transferred from other branches are included. Then what will be the outflow of stock? Cash sales, credit sales, goods returned from branch to head office, outflow, normal and abnormal losses, any goods transferred to the other branches, sent out of this branch. Then you will have which balance? Closing balance. Now you've got full control over which one? Debtors as well as what? Stock. Here everything is recorded. What is recorded? Normal loss, abnormal loss, goods transferred, credit sales, cash sales, returns, everything is recorded. Please remember, this branch stock will be maintained at what price? Goods are set at invoice price, it will be maintained at invoice price. Wait. We have to remove the profit element. We have to remove the profit element to find out the net profit, gross profit. To find out which one? Gross profit. How to remove the profit element? Profit is earned on cash sales, credit sales, and return. Clear? Profit is earned. When you are selling the goods, you are earning the profit on what? Cash sales plus credit sales minus returns. So while removing the profit, don't remove profit on three items. Cash sales, credit sales, and which one? Returns. Don't remove profit. All the other things. How to remove profit? How did we remove profit here? Opposite side. We just removed in which side? Opposite side. Same principle you adopt. When you prepare, how to remove that? We prepare a branch adjustment account. We prepare a branch adjustment account. On the credit side items, we'll remove the loading on the debit side. On the debit side items, we'll remove the loading on which side? Credit side. Let me explain one by one. To balance brought down, that profit element is removed as buy stock reserve. To goods sent to branch, it's removed as buy goods sent to branch. Don't remove on sales returns. Don't remove on which one? Sales returns. On the surplus in stock, we remove the loading on the credit side. On the goods transferred, we remove the profit element on the credit side. Likewise, on the credit side items, remove the profit on the debit side. How to remove? Goods returned from branch. Normal loss, it is unavoidable. Normal loss, unavoidable. We will charge what? Full loss. Abnormal loss, what to do? If there is a profit element, remove that. Goods transferred to other branches, remove the profit element. Closing stock, remove the profit element. If you tally this, you will get gross profit. Otherwise, if you compare the branch stock account and branch adjustment account, we don't remove profit on three items. Cash sales, credit sales, and which one? Returns. Why? Profit is earned on those three things. Okay, we are earning profit on what? Cash sales plus credit sales minus returns. So don't remove profit on these three elements. Remove profit on everything else. Remove profit on everything else. You get which one? Gross profit. And be careful, normal loss, what we do? Full amount has to be charged. I'll apply this as it is in this question. Then you can take it up. Wait. Then we prepare branch expenses account to record all the expenses. What do you mean by all the expenses? All the expenses. For example, debtors related expenses, bad debts and discounts allowed. Then other expenses, it can be salary, rent, depreciation, any expenses you will charge. Total of all the expenses will be transferred to P&L account. Total of all the expenses will be transferred to which account? P&L account. Then we prepare P&L account where we'll record gross profit, we bring the surplus cost element. For example, if surplus is 5 lakhs, profit element is 1 lakh. What is the cost element of the surplus? 5 lakh minus 1 lakh, 4 lakh we'll bring it. Abnormal loss, if the invoice price is like 8 lakhs, profit element is 1 lakh, 7 lakhs you will charge after adjusting insurance claims. Charge all the branch expenses, tally this, you will get which one? Net profit. Now, let me to apply this in this question. Which question? Question number 2. May not be, all may not be there. Let me to apply whatever it is, then remove whatever is not required. Okay. You tell me, is there any opening balance of debtors given? No. Only credit sales is given. What is the credit sales given? 2,20,000. And we assume that that is collected. So, in this question, no other thing. Because data is not available and we cannot work out that also. Branch stock, what is opening stock? What is opening stock? 60,000. Opening stock 60,000. Goods sent to branch 30,000. Any sales returns available in the question? No. Any surplus in stock? No. Any goods sent to other branch? No. Cash sales? No. Only credit sales is given. 2,20,000. Goods returned from branch? No. Normal loss given?
3,000.
Abnormal loss is nothing but that goods lost by fire and pilferage. Goods lost by fire and pilferage. எவ்வளவு இருக்குங்க? Goods lost by fire and loss in transit. What is loss in transit? 20,000. Loss in transit 20,000. Goods pilfered at the branch also. What is the total abnormal loss? 26,000. Abnormal loss is nothing but that loss in transit and goods pilfered and the money. Any goods transferred to the other branches?
No.
No. This abnormal loss is nothing but lost by fire plus lost in transit, 26,000. Closing stock is given in the question. What is the closing stock given in the question? How much?
80,000.
What about insurance?
Huh?
Insurance required for the
That will not come. Stock account will be work. Tally this. This can be taken as a surplus transfer to branch account, adjustment account. If there is a surplus, we can directly transfer to branch adjustment account also. How much surplus? Work out and tell me how much surplus. One lakh 39,500. The balancing figure can be transferred to which account? Branch adjustment account. Usually we can transfer, like by branch stock, like surplus in stock. Mari we can transfer. How much? 1 lakh 39,500. 1,39,500. Sir, should I have to see cost element and profit element? That is optional. Okay, since abnormal loss is also there, the branch stock would a surplus of B. Then, what is the next one? What is the next one? You have to prepare branch adjustment account profit element. On the debit side item, you have to remove the loading on the credit side. Buy stock reserve on the opening stock. How to remove the loading? 60,000 into 1 by 4. 60,000 into 1 by 4 will be 15,000. On the goods sent to branch, 1,30,000 into 1 by 4. 1,30,000 into 1 by 4. No, only we have done in branch account itself. 32,500. No goods transferred is there. That surplus, we brought it here. Goods returned from branch is not there. Normal loss, we'll charge full. What is normal loss? 3,000. Abnormal loss order profit element. Abnormal loss order profit element. 26,000 into 25 by 125. 6,500. Stock reserve on the closing stock. Stock reserve on the closing stock. 80,500 into 25 by 125. How much?
20,120.
Tally this, you get the gross profit. $1,57,000. This will come in gross profit number. In the question, no need to prepare the branch expense account. Why? Why? We are not given bad debts and discount allowed. Sundry expense of the branch directly given to us. Expense of the branch, how much is given? 35,000. So no need to prepare the account itself. So directly we can charge branch expenses how much? 35,000. Suppose if that was not given, what you would have done? Suppose if debtors, bad debts are there, discount allowed is there, salary, rent, depreciation, etc. is given, you prepare the branch expense account and totally you transfer to P&L account. In this question, directly how much is given? Branch expenses. 35,000. 35,000. What is the profit we got under the previous method? We should get the same. Abnormal loss. What is the abnormal loss total? 26,000. In that, what is the profit element? In that, what is the profit element? 6,500. 26,000 minus 6,500. How much? 19,500. Wait. 19,500 is abnormal loss. In that, we recovered insurance claim. What is insurance claim we recovered? It is not our loss. Insurance claim we recovered, How much insurance claim we recovered?
12,000.
Outer column, how much will come?
7,000.
7,500 will come. Tally this, you will get it as a balance. Let us see. $1,14,875. Previous method also 1,14,875. So the method can change, but profit is what? The same. Now take up this answer under stock and data sheet. They ask you some other questions also. They ask you some other thing also. Lost in transit account, pilferage account. That's simple. Lost in transit account. Loss in transit account. Nothing but to branch stock is only loss in transit. Branch stock. How much is lost in transit? 20,000 by on the stock reserve. Profit element 20,000 into 20,000 into 1 by 4. How much? 5,000 will come. Then by insurance claim, how much is recovered? 12,000. Balance we'll charge it in P&L account. Balance we'll charge it in which account? P&L account. How much? 3,000. But in the P&L account we charge it 7,500. There is one more loss is there. We'll see what is it? Pilferage account. Nothing but there is also abnormal loss only. Okay. To branch stock. What is pilferage? 6,000. By stock reserve, what is the profit element? 1/4 will be 1,500. by P&L account, the balance we will charge. Balance, how much we will charge? 4,500 we will charge. You can find in P&L account, the 7,500 is nothing but the total of abnormal loss. 3,000 good loss in transit and which one? Pilferage 4,500. The money split பண்ணி கூட போடலாம். Instead of by abnormal loss, what you can do? By loss in transit. By loss in transit, by pilferage 20,000, 6,000 you can record separately. And இங்க இந்த மாதிரி கூட போட்டுக்கலாம். There's an alternative method of presenting the answer. Instead of by abnormal loss, என்ன பண்ணலாம் நீங்க? By lost in transit. What is the value? 20,000. இந்த மாதிரி போடலாம். It's okay. Just go with our method. It's correct. Anyhow, abnormal loss totally, this 3,500 and 4,500 is recorded in which account? Branch P&L account. 7,500 recorded. Or no? I'll come back to it. I'll come back to it. Now, what I request is try which question? Question number 4, using which method? Stock and debtors method. Question number 4, under which method? Stock and debtors method, try it. Any doubt in this question? So please remember, debtors method or stock and debtors method, it will give what? The same answer. எதுல போட்டாலும் சரி அதே ஆன்சர் தான் வரும். So for the which question number? 4th question, open which account first? Debtors account, stock account, adjustment account, if needed expenses account, then P&L account. Try பண்ணுங்க. Those who are accessing recording, please pause now, copy this, then also try that question number 4, then continue. கல்வி இது காப்பி பண்ணிட்டீங்களா, எடுத்துட்டீங்களா? டிஸ்பிளேல இருக்கு. ஓவர். We are moving to question number. Which question number is that? 4. It is given at cost to the head office கொடுத்திருக்காரு இல்லையா, 125% of cost price. Okay. Sales cash and credit is given. Normal loss, abnormal loss, all these things are given. It is opened a branch கொடுத்திருக்காங்க. Opened a branch னு கொடுத்திருக்காங்க, which means it's a newly started branch. No opening balance will be there. So debtors opening balance இருக்காது. But we'll have a credit sales. What is the credit sales? 3,20,000. Okay, tell me these amounts. Any cash collection or bad debts given in the question? 2,80,000 or 5,000. Any sales returns given in the question? By branch stock, returns from debtors 10,000. Branch expenses. Any discount bad debts?
Discount allowed 8,500.
Discount allowed 8,500. No bad debts. The balancing for will be closing balance. Stock also, no opening balance will be there because it's a newly started branch. Goods sent to branch. Are they at cost to the head office or cost to the branch? So you'll take 4,50,000 into 125%. 25% on cost into 125%. How much it will be?
5,62,500.
562,500. Then debtors, the sales returns 10,000. Any surplus in stock given? No surplus in stock given. Then cash sales, how much?
2,10,000.
Credit sales?
3,20,000.
Any goods returned from branch? No. Any normal loss? Normal loss, it will be fully charged in branch adjustment account 15,000. Abnormal loss
10,000.
10,000. Okay. Goods transferred to the other branch.
No, sir. No.
Not given.
That's it.
Okay. What is the closing stock balancing for?
17,000.
Then stock reserve on the opening stock 5,62,500 into 25 by 125 into 25 by 125 எவ்வளவு வரும்?
1,12,500.
1,12,500. No other thing. Goods returned கிடையாது. Normal loss, it will be fully charged. Abnormal loss, the profit element 10,000 into 25 by 125. 2,000 will come. 10,000 into 25 by 125. On the closing stock, 17,500 into 25 by 125. How much?
3,500.
Balancing figure. Then, what are the expenses?
30,000.
Debtors related item is discount allowed. How much? புரியல What is the discount allowed for debtors? 8,500. Then what are the expenses at the branch? What are the expenses at the branch? Charge all the expenses. Freight how much? Then
Salary is 8,000.
then
Other expenses 12,000.
other expenses 12,000. The total abnormal loss, the cost element 10,000 minus 1,000, 8,000 will be charged. Gross profit
90.
gross profit 92,000 minus all these things. $25,500 is net profit. This is question number 4. Okay, we'll go for a break, maybe 30 minutes a break. Then we'll continue with which method? Final accounts method, trading P&L account and balance sheet method. So 1:45 sharp we'll meet.
Thank you.
We are in independent branch or dependent branch? Dependent branch. Next one, we are going to learn about final accounts method. What is final accounts? Preparing a trading P&L account and balance sheet for a branch. Who prepares this? Head office. So if you find the opening stock, if it is at invoice price, you would record them at what price? Convert them and record them into cost price. Goods sent to branch should be converted into cost and recorded. Okay, goods sent to branch like purchases for the branch. Net goods sent to branch. After returns, you have to take it. Then record the sales. Then record the closing stock at cost. Charge all the other indirect expenses. You will get which one? The net profit. Then opening stock goods sent to branch, if it is given at invoice price, convert them into cost. For example, if the goods are sent at cost plus 50%, cost will be invoice price into 100 by 150. Okay, this is how we are going to prepare which account? Trading profit and loss account. Done. So opening stock, goods sent to branch, closing stock, convert them into which price? Cost price and record, so that you get the proper gross profit. Then charge all the indirect expenses, you get which one? Net profit. This is same like any other normal final accounts that you would have done earlier. Shall we come to this question? Goods are invoiced to the branch at what? Cost plus 20%. Goods are sold at invoice price plus what? 25%. The following information is available to you. Stock என்ன price கொடுத்திருக்காங்க? Cost price கொடுத்திருக்காங்க. Goods sent to head office during the year at cost price is given to us. Goods returned by the branch at what price is given? Invoice price is given. Sales by the branch during the year கொடுத்திருக்காங்க. Expenses incurred at the branch is given. Expenses incurred at the branch is given. Prepare branch trading P&L account for the ended 31st March 2023 is asked for. They ask you to find out the stock reserve on which one? Closing stock. Actually, one thing I forgot to type here, on invoice price basis. On invoice price basis. Prepare trading P&L account for the ended 31st March 2023 on what basis? Invoice price basis. Read the question once again, then we'll solve. To solve the question, what is missing? Opening stock இருக்கு, goods sent இருக்கு, goods returned is there, sales is there, expense is there. What is missing? Closing stock is missing. We have to find out first invoice price of the closing stock. Invoice price of the closing stock. Before we start to prepare trading P&L account, they ask you to prepare on invoice price basis. We'll see. We need to work out closing stock. Clear? If cost is 100, we add how much percentage? 20%, and we fix invoice price. Then add 25% of 120. It will be 30. Then it will be the sales. It will be the sales. So goods are sent at invoice price. Sales will be invoice price plus எவ்வளவு percentage? 25% on invoice price now 30. So it will be sales will be at what rate? 150. Wait. What is the opening stock given? Opening stock, what price is given? Cost is given. Cost is given. எவ்வளவு கொடுத்திருக்காங்க cost?
2,25,000.
So invoice price will be 2,25,000 into 120%. How 120%? Cost is 100. Invoice price is 20 extra. So invoice price of the stock is 120%. How much it will be? 2,70,000. Then add, what is the invoice price of goods sent? Invoice price of goods sent. What is given? Cost is given. How much cost is given? Look at, is it cost or invoice price? Cost. So 14,85,000 into how much percentage? 120%. Or you can say plus 20%. How much?
17,82,000.
17,82,000. Zero extra.
So 2,70,000.
Then invoice price of the goods sent. Then less invoice price of goods returned back. That is directly given, I hope. Goods returned at invoice price, how much is given? 75,000 is given, minus. Then, wait. We sold out goods also. Invoice price of goods sold. What is the sales given? What is the sales given? 19,50,000. That is at 150. Okay, this is 19,50,000. So what will be the invoice price? 19,50,000 into, everything should be converted into invoice price, 120 by 150. This is 150, what is 120? 19,50,000 into 120 by 150. This will give us which one? Invoice
Sir,
price of goods sold. Yes, please.
sir, are you working in any other page, sir?
Let me to repeat. If cost is 100 rupees, we add how much? 20%. Invoice price is 120. Add 25% of 120, it will be what? 30. Sales will be 150. If 150 is 19 lakh 50, then what is invoice price like that? We work out. Let us see. Opening stock. What is the opening stock given? What is the opening stock given? 2,25,000. If this is cost, invoice price will be that into 20% extra. You can say 120%. Goods sent 14,85,000 plus 20% minus invoice price of the goods returned back, invoice price of the goods sold out. How? 19,50,000 if it is 150. What is 120? So this will give us closing stock at what price? At what price? Invoice price. Four lakh 17,000. So closing stock 4,17,000. Opening stock invoice price 2,70,000. Goods sent to branch 17,82. Goods minus goods returned is 75. So net will be 17,82 minus 72,000. Sales. Cash sales plus credit sales minus returns. I hope sales is given to us. What is the sales given to us? 19,50,000. Tally this, you get which one? Gross profit. What is the balancing for? Bring the gross profit. No income given in the question. Indirect expenses, sundry expenses are given. How much? Sundry expense of the branch. 56,000 given. Tally this, you get net profit. 3,34,000. One more question they ask you. What is the stock reserve on the closing stock? What is the stock reserve on the closing stock? What is the closing stock? We worked out 4,17,000. This into hello margin 25 by 20 by 120. 20 by 120. What is the amount? 69,500. That is the next question they ask. Stock reserve on the closing stock. Take it up. This we prepare on what basis? Invoice price basis. Formula then. Is it over? Hope we made the addition at the end. And the prepare trading P&L account on what basis? Invoice price basis. Over. Any doubt in it? Live online friends, have you completed? Done?
Yes, sir.
Is it over? Go through the next question. X Limited has its head office in Delhi, branch in Mumbai. Goods are supplied to the branch at cost plus 33 1/3%. 1/3 on cost, of course, 1/4 on sales. Prepare branch trading account கேட்டிருக்காங்க. See, if cost is 100, profit is 1/3. Selling price will be, okay, 1/3 na 33.33 வரும். Selling price will be like 133.33 அந்த மாதிரி வரும். So 1/3 on cost, it will be 1/4 on what? Sales. Otherwise, simply to understand, cost is 3 rupees. Now profit is what? 1 rupee. Invoice price will be 4 rupee. Invoice price will be what? 4 rupee. So what will be the relationship between cost price and invoice price? If cost is 3 rupees, invoice price will be 4 rupees. There is a normal wastage given. There is a normal wastage given. Whether normal wastage will be recorded in trading account? No. Only abnormal loss will be recorded in which account? Trading account. Normal loss will not be recorded at all. Only quantity will be adjusted. Only quantity will be adjusted. Start. Trading P&L account or trading account we can start. Opening stock, what is given? Opening stock, what is given? That is at what price? Invoice price. So 40,000 into 3/4. Why 3/4? See, if cost is 1 rupee, profit is 1/3 on cost. Sorry, if cost is 3 rupees, profit is 1 rupee. Up invoice price will be how much? 4 rupee. So this is given to us for trading account. We want cost. So 40,000 into 3/4, how much? 30,000. Goods sent to branch. Goods sent to branch minus returns per. Goods sent to branch minus returns. What is the goods sent to branch given? 2,50,000. Any goods returned? Yes, 10,000. 2,50,000 minus 10,000. This into 3/4. Because this is at invoice price. To get them at cost price into 3/4. 1 lakh
80,000.
80,000. Sales will be cash sales plus credit sales minus returns. Cash sales plus credit sales minus returns. I hope no returns are there. Cash sales plus credit sales are 4 lakhs. The discount allowed, will it come in trading account or P&L account? Discount allowed to customers, will it come in trading account or P&L account? P&L account. Okay. Closing stock, invoice price given 60,000 into 3 by 4. Tally this, you will get the gross profit. Please note, normal loss is not recognized trading account, and the discount allowed. What about discount allowed?
P&L.
Is debited to which account? Profit and loss. Suppose if it is abnormal loss,
Credit to
abnormal loss, journal entry will be abnormal loss account debtor. To which account?
trading account.
Trading account. Then after adjusting the insurance line,
P&L.
sorry,
So credit
we'll adjust insurance line.
P&L account to normal.
Like this, we'll recognize the abnormal loss. The question is abnormal loss today. So it's only a normal loss. Normal loss is not recognized at all.
Trading.
So all these about dependent branches. In case of independent branch, head office and branch will maintain what? Separate books of accounts. Okay, then journal entry can be passed by head office or branch depending upon the transactions. We'll see. So notes. Shall we? Okay. See, in case of independent branch, branch is allowed to maintain its own books of accounts, its own what? Books of accounts. Okay, so they will pass journal entry for all the purchases, sales, etc. Head office branch transactions also, they will all pass what? Journal entry. Shall we? It's over. Dora. Live online inference is completed. Is this over?
Yes, sir.
Done. Look at this January 2025 question paper. Give journal entries. Read the question first. Give journal entries with the narration in the books of independent branch. Wait, are we going to pass journal entry in the books of head office or in the books of branch? Branch. To rectify and adjust the following. Rectification of errors ketirukka. Syllabusly illa, but இருந்தாலும் கேட்டிருக்கேன். Commission income 7,500 allocated by the branch head office, but no entry has been passed in the books of the branch. Commission income allocated to the branch by the head office. Now we are in the books of branch or head office. Start. Question number 8. In the books of the branch. Right. Commission, is it income or expense? Income. No entry is passed to solra. Income has to be credited or debited. Income has to be credited to commission income. Record it now. Commission income, we have to credit. How much we have to credit? 7,500. Then who has allocated this? Who has allocated this? Head office has allocated this. So head office account debtor. Head office account debtor to commission income. How much? 7,500. It is not received in cash. It is allocated by the head office. Head office account debtor to commission income. Suppose if it is given, commission received not recorded in books and cash account debtor to commission, like that you would have done. This is a commission income allocated by who? Head office. With the narration they have asked for, being commission income omitted, recognized. What is the next one? Head office paid 12,000 directly to our branch supplier. Supplier means creditors. Creditors. Intimation is received by the branch on reconciliation of bank statement. When we pay suppliers, what is the entry we'll pass? Creditors account debtor to cash or bank account. Now who paid it? Head office paid it. Creditors account debtor to head office account, how much? 12,000. You can put supplier account debtor to head office account also. Being creditors paid by head office directly. See, think normal journal entry. When you pay creditors, what is the entry? Creditors account debtor to cash. It is paid by the head office to head office account. Next form. We have remitted already cash. We have remitted already cash. While sending the cash, what we would have done already? Head office account debtor to which one? Cash or bank account, like that we would have passed the entry. How much we remitted? 80,000 we remitted. 80,000 we remitted. Is it given that it is omitted in the book? Cash sent omitted in the book. No. It is sent by the branch to head office, not received by the head office till date. Now for this, entry should be passed by whom? Head office only. Cash in transit entry. It is from branch to whom? Head office. Who should pass the entry for this? Head office only should pass entry for this. Okay, start. No entry required. Cash in transit should be recognized in which one? Head office. Only. Cash in transit. We already sent the cash for that, we would have passed journal entry. If they have not received cash now, they have to record it in their books. We are not bothered about it. Next form. Branch paid 9,800 as salary to head office employee. Wait, who's paying this? We are paying. For whom? Head office employees now. We'll pass the entry. Listen. We should have passed the entry. Head office account data. On behalf of head office only we are paying, Head office account data to bank account, like that we should have passed the entry. Why? Why head office account data to bank account? We are not paying our employee's salary, but we paid which one? Head office employee's salary. Instead of passing this entry, what is the wrong entry they passed? What is the wrong entry they passed? The amount has been wrongly debited to which account? So instead of head office account, we debited to our salary account. What is like, if you debit to salary account, it will be shown like branch's salary. Okay, it is actually head office salary. You should debit head office account. Wait, branch is paying for head office. So how to rectify this? Salary has been wrongly debited. Credit to cancel. To which account? Head office account it out to salary account. Head office account it out to salary account. How much? 9,800. The amount paid for head office expenses wrongly debited to which one? Salary, rectified. What is the next one? Branch purchased furniture for 18,000 through check, but the furniture account was retained in which one? Head office book. No entry has been passed. No entry has been passed. No entry has been passed now. Who paid for this furniture? We paid it. So whenever you pay, you will put which entry? To bank account. How much you paid? 18,000. Okay, wait. If the furniture is used in branch, what is entry would have passed? Furniture account data to bank account 18,000. The problem is furniture is retained in head office. Otherwise, furniture is used by head office. So what is entry will pass? Bank account. If the furniture is at branch, we would have done furniture to bank, but it is used by head office, so head office account data to bank. No entry has been passed, which means for the purchase of furniture itself, no entry has been passed. We are recording it. Next. Branch incurred 5,500 of expenses on behalf of what? Other branches of head office. Simple. When we spend the money, what is the entry you will pass? Expenses account data, or to which account? Bank account. But this is not for us. We'll record in which account? Head office account. So why head office account? Head office will take care of allocating the expense to other branches. Will take care of allocating the expense to other branches. How much? 5,500. So this is tested in which month? Jan 25 exam. So this time in May 2025 exam, you will get question like that the dependent branch account, stock and data account, or that foreign branch which we are going to see. That model only will be tested. And a journal entry model, once it is tested, again in the next exam, will they ask the same journal entry model? No. Rare chance. Rare chance. Now what I request is, I request you to try the next question in the books of head office Ketrikan. Record in the books of which one? Head office Ketrikan. Why this head office account data to bank? This 5,500 is spent for other branches. We'll charge it to head office. Head office will again assign to other branches. Depreciation amounting to 11,000 on what branch? Kolkata branch fixed asset. Accounts are opened in the books of which one? Head office. Simple. We have to charge depreciation on assets. What is the entry for depreciation? We are in the books of head office. We are not in the books of branch. We are in the books of head office. Depreciation account data how much? 11,000 to which one? Branch order fixed assets. How much? 11,000, right? But the problem is, this depreciation, is it related to our assets or branch assets? Branch assets. What is the entry you will pass? Kolkata branch account data to branch fixed assets. Debit the expenses to the branch to branch fixed assets. Why are you debiting Kolkata branch? It is the depreciation expense of that particular branch related to that particular fixed assets. Next part. Goods 7,500 transferred from Kolkata branch to which branch? Delhi branch under the instruction from head office. Simple. Debit the receiver, credit the giver. Which branch received? Delhi branch account data, debit the receiver, credit the giver. How much transferred? How much transferred? 7,500 transfer. Next. Delhi branch paid 2,10,000 for the machinery purchased by head office in Delhi. Who's getting the asset? Head office is getting the asset, so debit what comes in. Machinery account data. How much? 2,10,000. Is it paid by us? If it is paid by us, you will put to bank account. It is paid by whom?
Delhi.
Delhi branch account 2,10,000. Asset is with us, but who paid it? Branch paid it. Machinery to cash in it. It's machinery to Delhi branch account. Next part. Kolkata branch collected 8,000 for our customers of head office. See, when we collect money from customers, what is entry we'll pass? Bank account data to data's account. How much amount? 8,000. 8,000. But did we collect money? Who collected money? So Kolkata branch account data, debit the receipt. If you have collected money, bank account data to data's account. Okay, our customers' money, Kolkata branch collected, debit the receiver, credit the giver. Next part. What is the next one? Goods sent by head office to Delhi branch. Branch received on later part only. So it's a goods in transit. What is the entry will pass? Goods in transit is an asset. Goods in transit account data to which branch? To which branch? Delhi branch. How much?
20,000.
20,000. Goods in transit is an asset debited to Delhi branch. Shall we proceed? So this is about journal entry method. Look at the next one. It is about which one? Foreign branch. It is about foreign branch. That we'll do that. This time you can expect a question based on foreign branch. This time definitely you can expect a question based on which one? Either journal entry method mail rare chance da. Okay. If you look at on the datas method, work out panali stock and datas method they can test, or which one? Foreign branch they can ask. Okay. Before we go for foreign branch, okay, the complete printing have we taken up? We'll see the rules of converting the foreign branch, that is foreign currency, into which one? Home currency. Okay. This is dealt by accounting standard 11. Okay. Foreign branch is called as integral foreign operation. What is integral foreign operation? We start our business in abroad or in a foreign country for extending our business. That is integral part of our main business. Why are you having a branch? To sell products, render services. So it's integral part. So how to convert the foreign currency information into home currency? Opening balances of current assets and current liability, like opening stock, debtors, bank, prepaid expenses, creditors and all, we'll convert using which rate? Opening rate. Closing balance of current assets and current liability. Closing balance of current assets and current liability. Convert using which rate? Closing rate. Transaction between head office and branch, like ledger balances, goods sent, cash sent, we'll take which value? Actual values. Transactions happening throughout the year at the branch. Expenses, incomes on accrual basis. On accrual basis, we'll take which rate? Average rate. All non-current assets, we'll apply which one? Historical cost concept. So historical rate, we'll take it. Liabilities payable at the end of the year. It can be loans, debentures, bonds, anything. Closing rate, we'll take it. Difference in trial balance is taken as what? Exchange, gain or loss. So a problem will be given with foreign branch with, of course, foreign currency values. You have to convert them into what? Home currency and do it. Just go through this once more, then we'll start with the next question. Shall we? Look at the next question. Expenditure excluding depreciation is given. We'll convert using what rate? Expenses excluding depreciation we'll convert using average rate. Expenses will be converted using which rate? Average rate. Next, cash and bank balances we'll convert using closing rate. What is the rate at the end of the year? 58 is given. 58 is given. Then debtors also will be converted using which rate? Closing rate. Fixed assets and depreciation, historical rate. What is the historical rate? 55. It's given 55. Then we are given stock, inventory, closing stock. We'll convert using which rate? Closing rate, but sometimes we need value. Okay. Stock of cost 5520, purchased when exchange rate was what? 55. Net realizable value is given. Please remember, closing stock should be valued at AS2. Cost or net realizable value, whichever is less. Adhe mari Q also. It's given net realizable value, cost is 1065. When exchange rate was 53, like that it is given. So both the inventory we have to value. Before we start trial balance, we have to value which one? Inventory. Then branch control accounts as per book is nothing but ledger balance. Nothing but which one? Ledger balance. Then incomes will be converted at income will be converted using which rate? Average rate. Creditors closing rate. In the head office account is nothing but this 266265. 266265. So before we start with trial balance, one issue will be which one? Inventory. Start. Value of inventory. Principle is as per accounting standard 2, cost or NRV, whichever is less. There are two items of inventory. What are the two items of inventory given? What are the two items of inventory given? Inventory P. Try to work out. You are going to work out. Cost evlo, net realizable value evlo, whichever is less. That will be taken for trial balance. Indian currency value work out. This whichever is less, valuation should be done in which currency? Indian currency, and that we will take it for trial balance. What will be the cost? 5520, it is purchased into எவ்வளவு ரூபா purchase பண்ணிருக்கோம்? Purchase பண்ணும்போது what is the cost? 56.5. Sorry, 56.5. 56.5. What is the cost? 5520 into 56.5. 3,11,880. NRV given in the question. NRV given in the question. எவ்வளவு கொடுத்திருக்காங்க? NRV given in the question. 2,85,000. Whichever is less. So this will be the value. In Indian currency, you will take it in trial balance. Trial balance எடுத்துக்கும் போது this value you will take it. Dollar value 5520. Indian currency value 2,85,000. This was purchased. என்ன purchase பண்ணிருக்கோம்? Purchase பண்ணும்போது என்ன rate? 1065. It was purchased inventory Q. என்ன rate? At the time of purchase.
keep cost.
Closing stock இல்லையா? Closing stock we'll take it at closing rate. What is the closing rate?
58.
Multiply பண்ணு.
6.
Inventory normal closing rate தான எடுத்துப்போம் 1065 into 58. Okay.
Cost.
Then what is the net realizable value given?
1035 dollars.
Wait. Sorry. Cost was how much?
Cost
1065 into what? 53. Cost is 1065 into 53. எவ்வளவு வருது?
445.
56,445. This is cost. At the end of the year, what is net realizable value in dollars?
1035
1035 into
58.
what is the closing rate? 58.
60,030.
Whichever is less. Cost is 56,455. NRV at the end of the year is 1035. Closing rate is 58. 60,030. Whichever is less. This we will take it for converted trial balance. This is the only difficulty. Other than that, we can just prepare which one? The converted trial balance. Start. Converted trial balance. What are the items given? Tell me one by one. See, office equipment. What is office equipment given in the question? What is office equipment given in the question? 48,000. What is the depreciation applicable for office equipment? 10%. Yeah. 48,000 into 10%. How much it will be? 4,800. You can incorporate in the trial balance itself if you want. Okay, 48,000 into 10%, 4,800 euro. Then record the office equipment, the balance, 48,000 minus 4,800. Furniture, how much given? Furniture, how much is given? 3,200, or a 10% depreciation will be 320. Balance 2880 euro. Opening stock given, purchases given, sales given, goods for mid office given, carriage inward is given. Be careful. Salary plus outstanding salary, you can take it. Because expenses on accrual basis, we will convert on what rate? Average rate. Then outstanding salary will be converted using closing rate. 3,200 plus 400. On accrual basis, we will convert using which rate? Average rate. Outstanding salary can be now shown in the trial balance because we have already added with salary. This outstanding salary will be converted using which rate? Closing rate. Then rents, rates and taxes, head office account, all these things comes. Now I request you to pay an attention for next 5-10 minutes, then you can copy. Office equipments, in which rate you will convert? Office equipments, in which rate you will convert? Historical rate. It will be converted using historical rate. Depreciation and office equipment, same. This one. Furniture and fixtures will convert using which rate? Historical rate. Depreciation also will be converted using what? Historical rate. Historical rate in a
Purchase
Actually, there's a typing error. 50 here. 50 here. 50. Take it as 50. That's a typing error. 50. Opening stock will be converted using opening rate. Purchases will convert using which rate? Average rate. Average rate.
Sales.
Sales will convert using average rate. Goods from head office, actual values are known to us. The 15 lakh 80 is given. Carriage inwards, average rate. Salaries, average rate. Outstanding salary, year-end rate. That is also 50. Then rent rate, insurance rate, expense எல்லாமே என்ன rate? Average rate தான் எடுத்துப்போம். Head office account actual values are available. Actual values are available. Debtors, how much is available? Closing rate. Creditors also closing rate. Cash at bank and cash in hand we'll convert using which rate? Closing rate. If you tally this, you will get exchange gain as a balancing. There is a typing error. Actually, fixed assets or rate on the 50. Using this converted trial balance, we need to prepare which one? Trading P&L account and a balance sheet.
So, இப்படி பார்த்தா இந்த கொஸ்டின்ல மட்டும்தான் அவுட்ஸ்டாண்டிங் சர்வீஸ் 50 and 50 இருக்கிறதுனால
புரியல ஆல்வேஸ் இதுக்கு முன்னாடி நம்ம கிளாஸ்ல பண்ண ப்ராப்ளத்துல கூட we would have done this. ஃபார் எக்ஸாம்பிள் ஃபாரின் பிரான்ச் போடும்போது நார்மல் நம்ம கிளாஸ் ரூம் கொஸ்டின்ல போடும்போது கூட பார்த்தீங்கன்னா எக்ஸ்பென்சஸ் we will add outstanding expenses minus prepaid expense போட்டுட்டு outstanding expenses and prepaid expenses will be shown within the trial balance.
But the different rates. Salaries are the average rate and outstandings are
accruals will be at average rate
throughout the year.
Throughout the year average rate.
So we can't add each.
இல்ல accrual என்ன அர்த்தம் 3200 is paid 400 is accrued. What is accrued for the year? 3600. It will be converted using 45. அது பே பண்ணாம இருக்கிறதுனால that will be converted using 50. What is expense for the year? 3600. 3200 plus 400 3600. Expense for the year you convert using which rate? Average rate. அதுல பே பண்ணாம இருந்தா convert using which rate? Closing rate. Have we taken up this over? Live online friends, have we taken up? Have we taken up? Shall we? Or no? Any doubt in it? Suppose if they would have given you prepaid expenses, what you would have done? They would have given prepaid expenses, what you would have done? For example, rent, rates and taxes, $800. They would have given prepaid expenses, what you would have done? Minus $100. In case $700 you would have taken. Prepaid expenses you would have taken in the debit side. Expenses and the $700 using which rate? Average rate. $100 using closing rate convert பண்ணி. Shall we? Live online friends, have you completed?
Yes, sir.
Done?
Yes, sir.
Trading P&L account letter. Opening stock converted value, purchases converted value, goods sent to branch actual rate, carriage inverted converted value எடுத்துங்க. Sales, closing stock will be converted using closing rate. You will get gross profit. Then gross profit you bring it down, then charge all the indirect expenses. You will get the net profit. Forex gain, if you want, you can credit to P&L account, or in the balance sheet you can add. This is net profit without including forex gain. On the balance sheet போடும்போது we can add what? Head office account, add a net profit, add a forex gain, like that we can do. Take it. So here the outstanding expenses are already included. Yeah. Salary, we have already included outstanding expenses. No need to add here. The salary is including the outstanding expenses, the converted value.
So forex
அதை கிரெடிட் பண்ணிக்கலாம், இல்லைன்னா நெட் ப்ராஃபிட்டோட சேர்ந்து பேலன்ஸ் ஷீட் போடும்போது ஹெட் ஆஃபீஸ் அக்கௌண்ட்ல ஆட் பண்ணிக்கலாம். Try to prepare the balance sheet next. Shall we? Balance sheet check பண்ணலாமா? Tally ஆச்சா balance sheet? Is it tally? Tally ஆச்சுங்களா balance sheet? Foreign currency gain எவ்வளவு இருக்கு? What is the foreign currency gain?
46,000. 4,66,000.
4 lakh
66,000.
total including profit head office account எவ்வளவு? 20 lakh 50,000, 11 lakh 2,200, 4 lakh 66,800. Add பண்ணுங்க.
Lakh 19,000.
How much?
36 lakh 19,000.
$36 lakhs?
19,000.
Of course, this we have done in the trial balance itself. The office equipment, furniture, the closing stock converted values you have to take. Data's cash in hand, cash in bank, already trial balance எடுத்தாச்சு. Then creditors and outstanding salaries also you recognize. This foreign exchange gain can be credited to which account? P&L account. Can be credited to which account? P&L account. Shall we? Wait. The complete painting, have you taken up? Live online inference, have you completed this?
Yes, sir.
Shall we? We'll not solve a problem, we'll just see a question. Washington branch of XYZ, Mumbai sent the following trial balance. Head office, you will take which value? Actual value. Sales, you will convert using which rate? Average rate. Debtors and creditors, you will convert using closing rate. Machinery at historical cost rate. Bank balance using closing rate. Opening stock using opening rate. Goods from head office, actual value. Using a goods sent to branch, we will take it. Expenses, we will use converting use which rate?
Average.
Then the stock reserve we will remove. Machinery was acquired in the past, the exchange rates along kuduthirukanga. So prepare branch trading P&L account in dollars. Thereafter they ask you to convert the foreign currency into what? Home currency and all. Okay, dollars le first prepare pannittu then home currency to, that is foreign currency to home currency panna sollirukku. Okay, this question you must go through. That is a very, very simple question only you have to go through. Then this one, illustration 17 also you must go through. Opening stock we will convert using opening rate. Purchase and sales, average rate. Debtors and creditors, closing rate. Bills of exchange, closing rate. Wages, rent, sundry charges, average rate. Computers, historical rate. Bank balance, closing rate. New York branch account, actual values would be given. Actual values would be given. You have to take the converted balance. Then difference in exchange if any can be taken. If there is no difference, we can leave it. If there is a difference in exchange, we can leave it. The actual Indian rupee, we have to convert into what? Foreign currency. We are reporting in head office is in New York. Head office is in which one? New York. We are given Indian rupee value, we have to convert into what? US dollars and report US dollars, and using the US dollars prepare the trading P&L account and which one? Balance sheet. In the problem you have to go through, because sometimes we will think in a forward way, they will ask in a reverse question in the mark. And even this question with the Bombay and Sydney branch, in our regular class we have done this, you must go through that. Clear? So these values you have to prepare the converted trial balance, like machinery historical cost, depreciation at historical cost, debtors and creditors at what rate? Closing rate. Opening stock opening rate. Closing bank balance closing rate. Purchase and sales average rate. Goods from head office actual value. Wages, rent, office expenses, commission receipts and all what? Average rate. Head office current account we will take closing rate. Same question we would have done in the class also. Exchange loss as a balancing firm we would have got. With that we prepare which account? Trading P&L account and balance sheet also we would have done. I request you to try them. So try to work out all the foreign branch questions. 3-4 questions try pannu. So classroom work plus this additions will take care. Done. So with this we stop for today. Next in the chapter branch kaparaba amalgamation. Okay.